Welcome to the morning show. I'm Liz Deerking, and I've got two beautiful brunettes with me. One Miss Vanetta Logan, one Miss Jenny Andrews. How you doing, ladies?
Hi. Oh, I'm going through puberty. Hi, good morning.
Okay, you've seen Trading Places, right, Vanetta?
A long time ago, yes.
Okay, so when I say throughout the show, when I say looking good, Vanetta, you say
Yeah, I don't know.
feeling
Good.
good.
Feeling good, Mortimer. Feeling good, Mortimer. Good morning, everyone. Great to see everybody. Liz, you're a sight for sore eyes. Welcome back.
I feel like I've been gone for 3 years.
Where were you? Where
I
did you
I
go?
dropped my son off at college.
He's at Kentucky?
University of Kentucky. Go Wildcats.
Go
I finally
Cats.
stopped wearing blue. I was wearing royal blue for the last 3 days. Go Cats.
And I didn't really talk to you this morning about it. He's in the middle of Rush, and
Oh, he's not in rush. They
oh,
don't start
not
back
Rush.
until
Oh,
they don't start until September 8th.
okay, but last night, but he's been going to the fraternities. Did he go out to the fraternity last night?
My assistant just handed me the schedule. Thank you.
Did he go out to the fraternity house last night?
I don't know because I'm trying my damnedest not to track him, but I did get an alert that he got home at 2 a.m. So all's working well.
Oh, wait, you have like that life family plan or something like on his phone or
And the only reason I can say this is because I promised him I would remove it, but I haven't. So yes, I know he's not up, not watching this, but I do have the Life 360. So we pinned his dorm, so I know when he gets back there, and I get an alert. So yes,
how happy are you that that didn't exist for our generation?
yeah, we didn't have cameras.
We didn't
And
have
my
phones.
no phones. My parents had no idea where I was, and I don't think I would have a job if there were cameras and phones.
Was it Liz Gone Wild? What happened, girl?
One of our girlfriends was in a version in one of the episodes of Girls Gone Wild.
Oh yeah, there was one of my.
This is
There was
not
one of
how
my.
I thought this
That
was
was one
going
of my
to
sorority sisters.
New Orleans, the New Orleans edition.
Yep. Yep.
be.
Yep.
That's funny. Well, one of my friends was a girl of the Big Ten. More like an acquaintance. I was like, good for
Like
you. Good for you.
adjacent. Yes. Yes.
Oh my gosh.
So yeah, but the market, I'm not gonna lie to you. There was one day I did look at the markets yesterday, and I did look at them, but there was one full day where and it was the biggest down move. I didn't. The first day in my entire life that I didn't look at the markets.
I
Is
knew
that how we cooked this up? You couldn't look, Tom couldn't look, Bat couldn't look, Scott couldn't look at the mark. Like, is this why we're doing this now?
I think that was Tuesday. That was his actual move-in
Tuesday.
day. And
Yeah.
I knew it was crazy. And I thought, okay, Liz has the event of moving her son to college, so she's gonna be really sad. And her account's not gonna look good. I was hoping that you weren't looking.
I didn't. I didn't. I couldn't.
It was
I,
gonna be like a 1-2 punch.
I couldn't through tear-soaked eyes open the account.
No, wait, but this is his first year or no, he's a sophomore. Or
No,
was
he's
it
a freshman. He's a freshman.
Oh, so then the emotions are okay, that makes sense. Yeah. He's your
It's
baby.
baby. He's like a big giant puppy who's now on his own.
He's
So
your 6'5" baby.
he's my 6'5". I was like hugging him goodbye. It's like, but nonetheless, Vanetta, how are you? How was your night? How was your week? Tell me everything.
My life is very boring. Very predictable, but it was good. Nothing too crazy. I started the new season of Love is Blind UK.
Oh my
How is it?
It's okay. It's a bit dry.
I look
um
Have you watched did you watch the new season of Quarterback? Are you into those football shows?
I haven't watched. I do like the football shows, but I haven't I watched the receiver one, but I haven't watched the core. There's just so much content. I mostly true crime stuff, but I like the sports documentaries. Was it good?
Oh, I love them. I love them, and it's good to watch before football season starts because then you get a little more background of the players. And then you get excited about football season starting. So I like it. And what do you think? I know the boys aren't here. Usually they have football talk. What do you think of Tyler Bagent getting a contract?
I think that's great. I think I'm more such because I'm such a girl. Like I like his personal story, so I can't tell you like what his stats are, but he seems like a good kid and he
I
got,
know.
emotion. So I just like him as a person, but I don't have any insight to his actual prowess as a quarterback.
Well, you'll like the quarterback show. It's season 2. It's good.
Yeah. Yeah, I like all the sports shows.
Eh,
All the documentaries really show you the other side of things, I guess.
There you go.
So, there's not too much going on this weekend. It's kind of quiet. It's a quiet weekend in town.
It
Other
is. Last weekend was bonkers. I actually saw the banana bus
Come
right
on,
by
the
our
Savannah
office.
Banana.
It was going east on Madison, and I was driving home from the office, but I was being safe, but I couldn't get my phone out to get a picture. But I did see the Savannah Banana bus, but I could not get tickets. But they've posted all their clips
You see how much
when they
people
were
are
at
going for?
Comiskey. It looked like fun, but minimum of like $250 to get in. So
Oh yeah.
crazy. And Lily's friend sang the national anthem for it.
Oh no
Uh,
way. That's awesome.
wow.
yes, yes, yes. One of the girls from our high school sang the national anthem. Um, she was the one who won. At the end of theater season, there's like these theater awards. So she
Yes, 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 yes. I remember.
won a big theater award, and then they asked her to sing the national anthem at the Bananas game.
That's awesome.
Yeah,
Wow.
yeah. So
That's a lot of pressure. I would fold like a cheap card table.
Banana, I think you'd be fantastic. I think we need to
I
hook the
can't sing. We keep clearing this up. That is not me singing our theme song. I can't sing at all. Like if you've heard me and Bat try to like
and you're
jokingly,
great. You're great. You and Bat are great. You would.
no,
You're great. Great duet.
that is the mom in you being like, "Oh, you guys are all winners."
you just joining us, the theme song. I mean, if you are new to Tasty, everyone thinks you sing the theme song.
It is not me. It's not me.
That's why I think it is. I think it's because when they go, "Woo, get tasted," I feel like you've said those exact lines before.
I don't know. I don't know what it is, but all good times. Hey, how is it week in and week out? Did you miss being on the floor of the SIBO this week, Liz?
No, I do love being on the floor of the SIBO. It does. I think it brings back a lot of energy, and I don't know if it really shows through how loud and how active it is down there because our microphones are very good at
Yeah.
just picking up our voices, so you can't hear the hum behind us, which is probably a good thing. So I did miss it, but this was a very bizarre week. We're back next week. We're back with a vengeance next week.
Back next week, and I don't think we have a week that we need to be gone from the SIBO the rest of the year, other than when we're in Germany
I was
with
going to say in 3 weeks when you
with it, but we're there with the SIBO. So we're there like with the SIBO, and we'll be doing our show live from Germany with our SIBO producers.
Are you
So
guys excited for your trip?
Oh, Vanetta, I'm so excited. So, and I bought a dirndl the last time I was there that I plan
Yeah,
on.
they're expensive, but they're elegantly made. It's the German dress for those. Yeah.
It's the most expensive piece of clothing I own.
well, Vanetta, they sent us an email where we got to choose. One night, they're giving us all dirndls to wear to an authentic German party. And so we all got to pick dirndls. We had to put in our size, pick our color, and they're going to fit us with dirndls when we're there.
Wow. That's really cool.
I know. I'm excited. What color did you pick, Liz?
Well, the one I ordered, I went with blue, but I have a red one at home.
Okay. Okay. So I'm super excited for that, to go down there, get our dirndls, go to the German parties, go to the beer tent.
Yeah.
Will you please send me a picture because that will just make my job posting on social so easy.
Oh, yeah. And for those of you who don't know, Vanetta could have come with us as our German translator.
Ja, ich spreche ein bisschen Deutsch.
Use you over there, Vanetta.
To be fair, this is actually crazy. If you are looking to get your passport renewed, I just did it because my passport expires in September. But you can't go anywhere if it's going to expire within like 6 months.
Yeah.
And so I applied for a new passport August 1st. I had it in my hot little hands by August 20th. I did not pay to expedite it. So if you need to get a passport, now is the time because I'm not going anywhere. I was like, I don't need it in a rush. But I got it in
You
3
gotta
weeks.
have it. Just in case you need to skip the country at any moment, you need
Yeah.
it.
I was a little worried. I was like, do people still work at the State Department? But they do.
Well, if
I
it's
just
going to expire in 6 months, you can't go anywhere.
Some
Correct.
countries won't let you like because then you could just I don't know, run away in their country. I don't know. Sometimes there's just rules. So
Correct. If your passport's about to expire, you can't travel.
yeah.
Huh.
Check your
Interesting.
passport.
I don't even know. I better check the date on my passport since we're
You should check the date on your passport.
I just got global entry, Vanetta. I was very excited.
Oh, that's nice. Yeah, I have that. I have that too. So you guys are fancy.
Liz is gonna leave me behind at the airport going home.
I'm not waiting for you. You're gonna be I'm not.
Liz went to the Tom Sosnoff School of Coworker Relationships.
Oh, Vanetta, she did go to the Thomas Osnoff school because she won't ever check a bag.
Ever.
So like even to Germany when we're there for a week, she won't check a bag.
No,
How
no.
do you not check a bag from the sheer standpoint of, like, for me, it's my cosmetics and skincare. I don't have 3 ounces for everything in my routine, so I have to check a bag.
Oh, I've got a go bag. Like legitimately, I've got a passport and a go bag. I could leave at any time. My problem though, Vanetta, and I think I might have to wear it on the plane, is the dirndl because it's so big.
Oh yeah.
I might be wearing that to and fro on the plane if all else fails. But yeah.
Willkommen. Willkommen.
I'm checking a bag. So I know already she's not waiting for me with her global entries. So I'm checking a bag. I'll be in the luggage area by myself. She'll be on her way home.
So Vanetta, I made my kids 1 year for spring break. We went skiing and then to the beach, and I made us everybody not check a bag.
That is diabolical. I will tell you this fun fact though, the Munich airport, I believe it's the only airport that has a fully operational brewery in the actual airport. So if Liz has to wait, you could do it right there.
I went to the brewery in the Munich airport.
Yeah, it's nice.
That was nice. That was nice.
So
funny. That's so funny.
all right.
The last time you were there, it was for Taylor Swift, right, Vanetta?
Yeah, I was there July of last year. It was my first time to Germany, and what a way to experience the country. But yes, it was my sparkling summer to go see Tay Tay.
Your best friend, Tay Tay.
My emotional support pop star, yes.
I love it. I love it. I love it. I love it.
Good times. But we're going to have a great show for you. How about you, Jenny? Are you going to get on the boat this weekend?
I have, Clarence hurt himself, so he can't walk. So yesterday,
I did not know that. Oh, that's why you're carrying him around.
yeah, so I was at the vet all morning yesterday. So I was supposed to do the show yesterday, but thank you to the FX guys for stepping in and taking over. Poor Clarence can't walk at all. He wasn't even eating because he was in so much pain. So
what happened?
he was jumping and kind of like hyperextended his arm, and then he screamed, and he's never been able to walk since. So
no.
They did all the imaging and x-rays, and they think it's just it'll heal in a couple weeks.
Right, it's just muscular sort of strain or tear there. Oh, poor pupper.
But at least he didn't need surgery, because I thought, what if he needs like $10,000 surgery and he's 10 years old?
Oh yeah.
Yeah.
I mean, my mom was like, you have to pay for it. You have to do it. So poor Clarence, I just carry him everywhere. I almost need to buy a stroller to push around the house.
Oh, poor guy.
I mean, I'm sure you could get one if you order it right now on Amazon. It'll be here by the end of the show.
Probably. That's a good idea.
Oh
my God. So we're not going anywhere.
I do have to interject because I'm kind of keeping an eye on the chat today because this is it. Clarence is not her husband. That was the best thing I've ever seen in my entire life. Clarence is her dog. Although it would be fun if you were carrying around your husband.
That would be damned impressive.
Right, no kidding. No, Clarence is my dog, and he's heavy. He's pushing 30 pounds.
Yeah.
Yeah, it's like a toddler size, right? Yeah, I don't know.
Yeah, he's heavy. He's heavy. I mean, I think he feels heavier than he actually is, just because.
He's bigger than Will Ferrell because he's a little bit wider than Will Ferrell.
To also clear that up, Will Ferrell is Liz's dog.
So Vanetta, the first night this happened at night, and we went to bed. He can't stretch his arm down to lay. So he can't stretch his arm down to lay. So he literally sat up in bed all night long from 10 p.m. until I took him to the vet at like 6:30 a.m. He never laid down.
Oh, poor little baby. Oh, that's sad.
So
I hope they gave him some good drugs at least.
They did. He's on the same drugs. He's on the same drugs my mom was on after she had lung surgery. So I think they must be pretty good.
Things
Oh,
are taking a turn in the show.
So he's all right. My weekend is taking care of him.
Oh my
have you
god.
seen that guy on TikTok? Like, I don't know if it's like true or not, but it's just a funny video. He just like comes onto his camera screen. He's like, "Hey guys, guess what? I took my dog's medicine today, and guess what? I feel great. I feel amazing." Because I think the dog is like on gabapentin or something, but the guy
That's
was,
what Clarence is on. He's got it on gabapentin.
yeah, the guy was like, "This is amazing."
Well, because they say gabapentin can give you like weird nightmares or weird dreams.
I don't know. Don't take your dog's medicine.
Oh,
Like,
take your dog's medicine. You heard it here first. Rules to live by.
yeah, I think so. I think so too. Anyway, another rule to live by is just keep watching our show. I want to thank everyone who's been filling in this week as the boomers went on spring break. No, Tom had to give a speech in Mexico. I don't know why Tom or why Bat and Scott had to go with him, but whatever.
That's
But the
what I
boys
was wondering. They're on like a boys' golf tour, I think.
yeah, they're having fun with Tony from Mexico, who is legitimately one of the nicest people ever. So
I mean, I
I'm
think
more
he might be.
jealous
I think he
for
might be.
hanging out with Tony from Mexico.
Yeah, he might be the nicest human I've ever met.
Just a class act of a human being, just so nice and considerate and kind and just a wonderful person. You would hope some of that would rub off on Tom.
With all this talk of the boys in Mexico, you know how your phones are always listening. Yesterday, my phone just was popping up with like amazing golf courses in Mexico. And then I thought, okay, this is why they're all there. I don't know how many times they're golfing or how many courses they're golfing, but there are some beautiful courses there.
Oh, I'm sure. I'm sure they are having the best time. But thank you again to everyone who's been filling in this week. Bat will be back on Monday, so it's going to be Bat and Bat holding it down Monday and Tuesday, and then Tom will be back Wednesday. On today's show, though, at the top of the 8 o'clock hour, we're going to get the weekend stocks. Several down days in a row is looks like a little sector shifting out of AI. So Jamal is asking, is AI in the bubble zone? Jamal's going to be in to break down everything for the weekend stocks. And then at 8:40, we got Fast Market. The lovely ladies are doing viewer submitted trades. Do you have access to Tom's account?
No.
Fish.
Oh,
Oh, I love when you do it when it's trading with Tom's money. That's what we need to do.
right?
I mean, Liz, we've got about $8,000 in buying power. We'll see if we can get through all those fast market trades.
What what we could do is give what we would do if we had Tom's money and what we have to do with our account.
So we'll stay tuned for the lovely ladies and see how they trade some viewer submitted ideas. The 9 o'clock part of our market measures, capital awareness. How many state capitals can you name? No, I'm just kidding.
Uh,
No,
Not a lot.
capital
I bet
awareness,
you
your money.
can you do them all, Vanetta? You can name all of
No, not since kid. Because there's some that they always just like trip you up. Looking at you, Montpelier. I don't know. But no, it's if I would have to like look at I would have to study it. I couldn't list all 50 of them off the top of the dome. I'm not that talented. So but this is money capital, that kind of capital awareness. And then 9:30, we're gonna do a little surprise guest, maybe a little tasty extra. Since today is Jackson Hole Day, we are going to see if maybe we can get our macro maven in the house. That's Mr. Chris Vecchio as Powell speaks. So stay tuned for around 9:30. We got some stuff up of our programming sleeve, so we will a little TBD, but we'll see what happens. But hey, in the meantime, in between time, you guys want your daily dose?
I love the Daily Dose.
Yeah, hit me with my theme music. Let's go.
Our leading
In
story.
today's
Breaking
headlines.
news.
Breaking
Coming
news.
across the wire. Our leading
This
story.
just in.
Top story.
Our
Just in.
In today's headlines.
This just in. Today's
Breaking news. Story.
All right, everybody. Today's a fantastic Friday. It's August the 22nd. This is the part of the show I like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news?
I am ready. This is my favorite news source of the day.
Again,
Miss
people,
Vanetta.
please get additional news sources. I should not be your singular source for news. I stand by that. But thank you both. That's very kind.
I
Hey,
like the way it's delivered.
Fed Chair Powell is set to deliver what almost certainly will be his last keynote address at the central bank's annual conclave during one of the most tumultuous times in history. The Fed Chair is going to speak, and if his speech goes at all like his 7+ years in office, it will feature a calm and collected veneer, even though the weight of the global economy is resting on his shoulders. What's the expected move in the markets for today, and what are you guys doing in treasuries?
So if you look at the SPX, I'll give you SPX expected move. Today it's $53 for today's up 53 in SPX. That's
Oh,
that's
that's pretty good. That's a lot. Seems.
yeah, and I mean I do think we're not going to do much until later today. You know, SPOOs are up 15. We've been sitting here all morning. I think we're going to probably stay right here until afterwards.
What about in bonds? What's cooking for you guys in bonds?
I mean, they're 113.27. So this is not a bad place, I don't think, to short some puts or
Yeah,
get
to
a
get
little
long
sell
bonds.
some put spreads. It seems to be at the lower end of where it's been.
Okay.
Well, I mean, the 113 level is just a level for me where I don't mind dipping a toe in the water. At 114, I'm typically out, right? So at the 113 handle, I don't mind selling some puts or doing something like that.
That's
Fine.
what we've been just getting long around here and then getting out, like Liz said, 114, 115. And this range has seemed to been between, 113 and 115 lately. But we'll see. We'll see if there's a big outlier move today.
Jamal's probably gonna get more in depth with this when he comes on at 8 o'clock. But big tech is dragging the S&P 500 down, even as the broader universe of stocks has been holding up so far this week. On Thursday, the S&P 500 booked a fifth straight day of losses. And did you know that was its longest losing streak since January? The stretch ending January 2nd. I
Okay.
had to look that up. I was like, I was like, really? Since January?
Yeah, 5 days. It was a
But
5 day losing streak.
Yeah.
It really is not that bad. We're only where we were maybe, like last month. It's not like I didn't feel that bad. It didn't seem that bad.
No, I know, but I like to be dramatic.
Yeah, it's really
What are some opportunities that you guys are seeing, and maybe some stuff that is not oversold, or something that is just on your radar that's popped up this week?
But I mean, looking at those AI stocks, that's true. You know, your Meta, Nvidia, all the stuff like Nvidia's down. So I mean, if you're looking at it, I like to get in when things are down. So if you're looking for opportunity, you might be able to dip a toe in the water in some of those.
How
Because
about Palantir had a massive decline in their valuation this week?
oh wow, but it did. Was that 2 days ago? I'm trying to look at this.
No, it's been like 9 days in
Every
a row.
day, yeah.
So
Every day Palantir has been taking a hit.
yeah.
Yeah, but once again, Palantir is right back to where it was August 5th. It's not as if you know what I mean. It's not as if Palantir has gone below its August lows. It's still it's just a little bit correction.
Even though they've fallen, they're still very near the top of their range. So I've been getting into things like Target had earnings this week, and Target took a huge hit. So I sold some puts in Target yesterday because that's one of those that is nearer its 52-week low, where all those others, even though they're having a fall, they're still pretty lofty.
They are still pretty lofty. Target's under 100. Wow. Yeah, Target's trading 97 right now. Good job,
It was
Jen.
down, it was down $10 or so on earnings.
Yeah, it looks like it.
Yeah.
In other news, the Justice Department does not plan to target software developers that create decentralized platforms for transmitting cryptocurrencies without criminal intent. This marks the latest sign of the government's changing views on crypto. Basically, like this whole guy that did his whole tornado cash thing, and people then were using it to just run all these scams. And he's like, hey, I can't control what people do on my platform. So now the Justice Department's like, yeah, we don't really care. But just like, as long as you don't start out trying to be a criminal, you're good.
I don't know. I
Right.
mean,
I just wanted to get into a larger talk about crypto and what you guys are doing, if anything, in a Coinbase or a Circle or the new Bullish, whatever.
so we were in, I mean, those have been really interesting to watch. Well, more bullish and well, Coinbase has been doing stuff like that too. But so all the and like your circle, it was fascinating to watch from IPO and straight up. It was going to the roof. Are they still up? Are they still pretty lofty?
So bullish just came out, and that has not had an uptick really since it came out. Every day down, down, down. The only day it was really up was the day it IPO'd. So I have puts in bullish, but
Oh,
that's
you do.
I do. I sold puts in bullish. Well, for the day it came out, or maybe the next day, I bought some stock, and then the options came out on the third day. So I sold my stock and just have short puts in there. And I honestly keep moving them and shifting them because it's been down every day.
Yesterday it had a big move up though. It was up $10 yesterday.
Finally had an up day.
Yeah.
But I do like these newer products because there's a lot of premium in there. Like Circle, when Circle came out, there's so much premium in those puts. Or and both sides, but I'll usually just sell puts in those new products, and it's nice. The premium in there is pretty good.
Yeah. I mean, but they are pretty. I mean, everything is so new, right? Just like Vanetta was talking about with this news story. Everything is so new. You never know which one's going to take off or not. Bullish did not do what Circle did.
Right.
No.
Yeah. No, you're right.
No, it didn't. And coin's interesting because coin got so high. I mean, Liz, you and I were both in coin quite a bit when it was in the 180, 200 range. Now coin took off like crazy, and I haven't been in lately. But how far did it pull back this week?
So coin is trading 300 right now. I mean, its peak was 450, but that was, in July. So this week it dropped from 350 to, I'm just eyeballing it right now. And please keep in mind, I have one good eye and one bad eye, but it went from 350 to 300.
So maybe we'll get back into coin now at this level, but
Okay.
I don't know. But at 180, when I had short puts in there in 180, 200, we were sweating it.
So, but 300 is still, 300 is still pretty high.
So high.
And the only issue is though, for a little bit, Vanessa, these were the only things, and I realize what the error of what I'm going to say, but for a while, those were the only ones, your Circle, your Core Weave, your Bullish, that had any volatility. The volatility was sucked out of these things. And I just want to make sure that I'm not, because they're all the same thing, right? I mean, they're not all the same thing, but they're all very, very similar. I want to make sure that I'm not just overloading in those things.
Sure, that you're diversifying, that you're all just,
yes. So.
Hey, well, congratulations, I guess, because Google scored a 6-year Meta cloud deal that's worth $10 billion. Google won the $10 billion cloud contract from Meta, spanning 6 years. Meta has largely been reliant on Amazon Web Services for cloud infrastructure. They also use a little bit of Microsoft Azure, but all the big internet companies are spending heavily on cloud as they build out to meet demand for AI workloads. But kind of some seismic news out of Meta, as it seems their very lofty AI ambitions are pumping the brakes a little this week. I mean, they were offering everyone $100 million salaries. Yes, please. But they are pulling back on hiring. But I guess now they still have $10 billion to offer Google. I don't even know what is going on at Meta.
The stock's not really moving today. It's up
They're both up a tiny bit on the news, a tiny bit. Meta's $700, so it just splits and doubles and splits and doubles, splits and goes to 1,000, and then it's at 750 now. It's on its way to 1,000 again.
Pretty much, I guess. I don't know.
Amazon's up to 223 pre-market, and then Google, let's see, Google is 202. So Amazon and Google are both up.
Amazon has nothing to do with this news.
Oh, sorry, Amazon. Sorry.
Indirectly,
I
mean, they did have some of their contracts.
Yeah, the AWS. So that's why I was looking. I didn't know how that would affect the AWS.
Yeah. It's all
with AWS.
The Amazon
Web Services, their cloud.
Oh.
They had the deal, because Vanetta, you said they had the deal with Meta, and now Google has the deal.
Yes.
Okay.
Yes.
So I thought Amazon might be down, but it's actually up.
Maybe they don't know yet.
But all those tech stocks took a hit the last 5 days. It was the tech stocks that were bringing it down. So it's just getting a breather.
You are right. In chip stock news, Nvidia has told some component suppliers to suspend production of its H2O AI chip designed specifically for the Chinese market. According to the report, Nvidia instructed the Arizona-based technology company to stop production of the chips this week. It'll be interesting to see what happens because news is coming out that they're like, no, we're gonna just go ahead and we're gonna still make this super powerful chip for China, but now maybe they won't. I don't have any other information other than that, but Nvidia.
Yeah, Nvidia, I mean, that was the big news story this morning. It's down 1% on this news.
Yes.
But I
But
guess a lot of the China chip stocks have gotten a boost off this news.
just this week it went from like 182 down to 168, but it was 168 briefly and bounced back up. Nothing, I know we seem to be getting a shakeup a little bit in the market this week, but everything seems to be keeping its wings up.
I mean, you always have to buy those Nvidia dips, and I stand by that.
Vanetta, I don't disagree with you. It's been a good performer for me this year. I mean, I know the IB rank is only at 22, but I'm always in. I've been selling in Nvidia every time that comes down. Selling puts in Nvidia, not selling Nvidia, puts in Nvidia.
And another crazy AI story, AI startup Anthropic, which runs Claude AI, which we use a version of here at our company, is reportedly in advanced talks to raise as much as $10 billion in a new funding round. Again, that's just the funding round. That's not what they're worth. OpenAI earlier this week said that they were now also raising funding, and that OpenAI is worth $500 billion. These numbers make my eyes water.
These numbers are getting insane.
Yeah, so they're just trying to raise $10 billion. But again, we use it as an enterprise product, so okay, congrats, I guess. I don't know.
But the numbers are crazy everywhere. Like we were looking at Nvidia, $4.4 trillion.
Yeah,
Nuts.
Yeah, that's
we're in the wrong business.
Oh, you said we use Claude in our offices?
Yes.
Okay.
Yeah, we have access to it. We have access to it and to Chat GPT. So
yeah.
Yep.
Well, we'll see.
Well, as Liz mentioned earlier, CoreWeave stock also in the news this week. Their stock gets a brief reprieve from selling pressure as Jane Street announces a stake. The quantitative trading firm revealed a 5.4% stake of nearly 20 million shares. Shares of CoreWeave initially surged before giving up the gains.
This is funny because CoreWeave is one of those, like my son is learning to trade. And right before he left for school, I had him sell puts in CoreWeave. And then yesterday I thought, well, maybe this is too volatile for him and too makes him too nervous. But I like selling premium in CoreWeave. It's been pretty good, but it has had last week it had a big move.
Yeah, last week it went from what,
down to $90.
140 down to 90.
Yeah.
That's a big move.
Oh wow. Okay.
And it's still so new, Jenny, even with that move, that the IB rank is a 0.2. So you would think with a move down like that the volatility would be higher. But because it's been so volatile, it's like, okay, well, this is normal.
And it's not as attractive as it was a month or two ago, but there's still decent premium. It's a $90 product. You can go in September down the expected move and get $300 for a put in there, and your break evens in the 70s. Then you're not that far from, I guess when it IPO'd back in April it was about 40. But it's these products, they all skyrocketed, and I know
we joke around about this too, but it's CoreWeave that is the good margining relief, where Circle it's cash secured. We always talk about that being like, okay, well, don't bring it up, don't tell Scott to take away our margin.
but you know what? It's not as good as it used to be. So now to get $3 on a September put in CoreWeave, it's using $1,200.
Oh.
It used to be better margin.
It used to be like $300. Do you remember? We're like, what is happening? It's 100%.
I know.
capital.
Now it's just like normal margin.
Those were the days. Sorry. See, again.
I thought that was a spot on interpretation. So good.
All right. Thank you very much. Anyway. Bad news, man. All these companies are just nickel and diming. And I was like, are you not legitimately worth like trillions of dollars? Well, Apple is hiking the subscription price for the third time in 3 years. If you want to keep watching Severance, you're going to have to cough up some cash. Apple's increasing the price for its Apple TV Plus streaming service to $13 a month. It's the first hike since 2023. The new price is going to hit subscribers 30 days after their next renewal date. Other streaming platforms such as Netflix and NBC's Peacock have also boosted prices this year. What are you guys doing in Apple? And do you watch shows on Apple TV Plus?
I watch all the streaming services and pay all the streaming fees.
Yeah, I watch shows on app. We have Apple, we have HBO, we have everything like Liz because I, I don't know, it's too hard. What now
I'll
we
tell you why I do, because I've got a TV above my bathtub and I love to get in there and watch shows. I need all the services.
Well, when you go in your bathtub to watch TV, do you set yourself up with snacks too?
Oh, who eats in the bathtub?
I mean, if you're gonna be in there a while, I'm gonna need a snack.
I'm not saying I don't bring wine, but
That's funny. How
Uh,
about Apple as a stock? You guys doing anything in Apple?
Apple. I have a position in Apple and I don't know why.
well, Jade Lizard maybe. Uh, I don't know. Usually, don't you have Jade Lizards in Apple?
I usually do, and I do have a jade lizard. Good job, Jenny. I do have a jade lizard. And that's exactly what it is. Yeah, so I have a position in Apple right now. I usually have a position in an Apple, a small one. Like I said, I'm very, very small in there, but it's something I like to have a position on there so I know what price it's trading.
Sure. No, that makes sense. Tesla is facing a new federal probe after the National Highway Transportation Safety Administration found that some of the company's crash reporting to the agency had been significantly delayed. Tesla blamed the faulty crash reports on past issues with its data collection systems. Tesla has said that it has since fixed those issues, but the company must still undergo an audit. I cannot literally keep track of how many times Tesla has faced an auto safety probe.
I will say though, for the last 3 months, Tesla's been in a pretty tight range. So it's been an easy trading vehicle if you're selling premium. If you're selling strangles, it's stayed in that range for the last 3 months.
But
Yeah.
the IV's really low in there now, right?
It's low. I feel like Ivy rank is low everywhere.
Yeah, that's true.
As far as like Tesla crash, this is going to be a super unpopular opinion, and I apologize. You can turn off now if you don't like this. But we have friends that have a Tesla, and they've been in 3 car crashes. One was crash versus a big semi, and he said he'll never drive anything else other than a Tesla because the body was so tight that he should have died twice.
Wow.
But didn't he have like one of the bigger ones?
Yeah.
Like the kind that opens up and like a basketball team hops out of it? Like, didn't you say you would drive all the boys and they would pile in?
Yes.
That's bonkers. Hey,
Yeah, I
keeping it moving here. I don't want to take too much time. This is funny. Airlines, Delta and United are being sued for selling window seats that don't have a window view.
Have you ever sat in the seats that don't have a window?
I have, but I didn't like pay consciously for. I just get like whatever seat that they give me or whatever. But anyway, they're being sued in federal court for misrepresenting seat offerings. Plaintiffs note that when people buy tickets on a website, that they normally on some sites like Alaska Airlines and American Airlines, the website will actually flag when the window seat doesn't have a window, but Delta and United do not inform consumers when that is the case.
Seems like a very litigious society. If
Yeah, I know.
I shall sue. There's no window. Like what the heck?
I was like, let's just keep all the doors on the plane and then I'm happy. Like, it's fine. Like,
Most people close their windows anyway, don't you think?
No, but I've been on a Southwest flight before where I had to sit against the window with no window. It was very claustrophobic.
yeah.
Very
And some of the windows now, like you think you're looking out the window, but it's actually just a computer screen. It's just a LED screen.
Yeah.
So it's not even like a
I
real-
I like the window just to have a place to lay my head and sleep.
that is clutch. That is nice. I don't know if you guys are doing anything in like UAL, DAL.
We had a viewer the other day writing in about selling puts in American Airlines. Delta and United are, I think, higher for like if you look at their 52-week period, they're higher than American. Southwest is definitely taking a beating. So
United's been on a run.
yeah, so I don't know. I don't have anything in United. I do have some puts in American.
Okay.
That's all I have in the airlines right now. Well, we probably have puts in Southwest too, because that's
We do have love puts, but like I said, I'm in you all as too, and that's at a decent run.
I love when I get to do the show with you guys because I try to pull content for who I am, co-hosting with. So if I'm co-hosting with Mike and Nick, it's just like gambling stuff or
There you
Sydney
go.
Sweeney. So that's fine. But for you guys, Rent the Runway says that they are going to have a plan. They need money and they need it fast, so they're going to have a recapitalization plan. They're going to give up 86% equity, and they're going to convert $243 million of its debt into common equity in the company and add 20 million to their balance sheet and extend the maturity of their outstanding debt balance of 120 million to 2029. All of these numbers say this company's not doing well.
So we had Rent the Runway stock for so long. I mean, Liz, where did we get? I don't know. Where did we get in, and what did we write it down to?
Okay, so I have Rent the Runway stock, and I believe I got in at one. Well, this is what it says. So I'm sure this. I'm hoping this is wrong. I have very little of it. I got in at 190, and it's now 561.
I know. I feel like there was some kind of weird reverse.
That's what I'm saying. It's reverse splits. Nonetheless, I did lose some money in there. We'll put it that way. Like looks
They
like.
owe you some free outfits.
Well, and you know what, Vanetta? You know I was a huge fan of Rent the Runway.
Yeah, because everything looks good on you. You're 6 foot tall blonde woman.
But pre-COVID, I said I never wanted to wear the same thing twice, and I loved it. I loved Rent the Runway. Loved it, loved it, loved it. And then, like during COVID, I was like grandfathered into a subscription, and I had unlimited monthly. Remember this, Jenny? I had unlimited outfits. I could just do whatever. Then they said, "Sorry, you're no longer grandfathered in. We're going to charge you 6 times as much." And I was like, "See ya."
Really?
Uh-huh. I don't think they have anybody renting anymore because the unlimited program was really good. And then all of a sudden during COVID, because they needed money, they were just like, "Sorry, I know you're not going anywhere, but we're going to charge you a ridiculous amount."
But I do think it's coming back a little bit because I was at an event recently and there were a couple ladies there wearing Rent the Runway dresses. So I feel like people are, I almost think.
No, an event, they're good. They're good event. They're not.
They have a lot of more competitors. Because I was talking to Katie. She uses a service. I think it's called Newly.
Newly. Yes.
Yeah, she's a big
I think
fan of
Beth
that.
has,
So
Beth has a service too.
Newly.
Oh,
see?
Newly.
Yeah,
Okay,
all,
they're all using
all the
Newly.
competitors. All right.
Um,
Hey, oh, go ahead.
No, but I do think like for a while during COVID when everyone was working from home, no one was getting anything, but now all these are making a comeback.
Yeah. Hey,
Yeah.
this is fun. Again, this would be better suited if Tom and Bat were here, but you guys will do great. The Hard Rock Hotel in Las Vegas is auctioning off Mirage memorabilia. The items include more than 50 statues, 300 items total from the Mirage Hotel and Casino, but 50 statues like the 2 brass dolphins that welcome guests for 3 decades at the Mirage. Art will also be up. Absentee bidding is available through September 19th.
I know what I'm getting Jenny for her birthday.
Live bidding set to begin 10 a.m. on September 20th. So it's a little piece of Vegas history. Iconic.
I'm glad you brought this up today because actually, Liz, yesterday was the anniversary of Liz and I went to a wedding at the Mirage. And yesterday was the anniversary of that wedding at the Mirage.
Are they still together?
Yes, they're still together.
Okay.
And if I would have known this was happening, we could have gotten them this as an anniversary gift.
Could have gotten them this mermaid.
Kind of, in show business when they do a callback. Okay, this is one of those things where we're very happy that there were no phones. Jenny and I went to Vegas, decided not to get a hotel room, and gambled the entire night away.
Never, yeah. That was just the last night. We had a hotel room for most of the night, but for some reason the last night we didn't because our
I thought it was a great idea. This is how long we've known each other.
I think our flight was 7 a.m. and we said, why are we going to get a hotel room if we have to leave for the airport at 5 a.m.? We'll just stay up all night.
Vegas, baby, Vegas. Hey, in the weirdest controversy that I think has hit us in a long time, but it's definitely affecting P&L, Cracker Barrel unveiled a new logo, and then just everyone got super mad, and then the stock just went down like 7.5%. I don't understand what's happening.
I feel like, how Tom is so into logos? I feel like he crashed this stock because he doesn't like that logo.
Right. I didn't have this story for news because I saw this come through like the first day and I was like, Tom's the only one that cares about logos. But then it became this whole other thing. And then the stock was down. And then they're like, this CEO sucks. And then people were mad. And then I was like, what is happening? Like, are y'all good?
I wonder why they changed it.
They're just trying to modernize, like they're trying to make the stores airier, more spacious. I like how kitschy and cluttered that they are. Like that's your brand. Like they shouldn't look like an Apple store. You should look
Right.
like a Cracker Barrel, like whatever. I don't know.
No, it's pretty funny.
But the internet is undefeated. They have some pretty
Symbol
funny
for-
comments
What is
which
the
I
symbol
cannot
for?
repeat.
I love the grandma's breakfast that comes with the pancakes with the hot apples.
Oh, I love their dumplings. I love Cracker Barrel.
I like Cracker Barrel.
legitimately. Anyway.
Holy cow! I just looked at it. The symbol is CBRL.
Yes.
Wow.
It got annihilated.
It's
That's the logo?
Yes.
Yes.
Woo! That's crazy. Okay, yeah, CBRL. Very illiquid. Very illiquid.
Yeah, so be careful out there. I'm going to skip this story and go to the next one. In-N-Out Burger opened their first location in Washington, and the wait time stretched into the hours. The burger chain made their Washington state debut on Wednesday with the opening of a new restaurant in Clark County. You can now get yourself animal-style fries and double burgers at the Ridgefield location, but the wait time extended into the hours. The California chain has continued to expand past its Golden State roots with restaurants now in Colorado, Texas, and Idaho. I've never been to an In-N-Out, but people seem to love it.
I mean,
I
they
have-
must. Who would wait hours for a burger?
We have this new coffee shop that just opened, and people are waiting hours for the new coffee shop. It's called Seven Brew.
Oh, seven.
Not on
Brew.
TikTok, yeah.
Yeah, so we had a Seven Brew just open, and the line is insane. People are waiting hours for Seven Brew.
There's a Seven Brew in Naperville that when my niece came in from Kansas, she wanted to go to it.
Like, what are we doing?
Oh, bueno.
Society, like what are we doing? Hey, a news that's a little close to home for me. Notre Dame football for the first time is launching a new logo. The fists are down and football is in. The university had used a fighting Irish logo since 1964, but they launched a new logo for their football team just days before the new season begins. What do you think?
Wait, is that the new logo?
That's the new logo. I know. I had to look up the old logo. It's he's got his hands like in front of him and
I like the old one better.
fighting. Well, this more is to football, but I was like, are they going to do this for all the sports though?
Yeah.
Or is
Like,
it going to go back?
is he going to have a pickleball racket for the pickleball team? Like
I don't
Maybe
know.
the
I
old
don't
one will
know.
still exist, and this is just for football season.
yeah, I don't know. I think so. I think they are changing it for
I don't know, but I love the leprechaun. Going to the games, my favorite part is when the leprechaun comes over and you get to take your picture with the leprechaun, because the leprechaun, he's always like the greatest dancer. I
Oh
can't.
yeah. So
proud
the
of
logo isn't being replaced, according to a spokeswoman. The new logo is a secondary option that the football program will be using. So the main traditional logo is not going anywhere. So
going away.
there's your
Um,
clarification.
So yeah, I think he's one of my favorite mascots.
the leprechaun. The
Mascots are always the most talented people on the field. Like Benny the Bull, most talented person on the field.
I'm gonna go to my video now, Beth. Every Friday, I like to do a little segment I like to call "Will Tom Eat It," where I scour the internet for food for fat traders. And Tom has a affinity for people who eat food in their cars. But I know that you guys are busy moms, and I saw this and I was like, you guys are always entertaining people, always having soirees, get-togethers, whatever. I think this will be perfect. I want one, just like as an individual portion. Check this out. See, would you guys eat this?
Robbins just released a cake in a box. Cake and ice cream are two of my favorite food groups, and this thing has got layers to it. So let's see if it's worth grabbing.
$30. and it's an ice cream cake in a box.
Oh, 100%. My kids
Baskin
would
Robbins
eat.
has 2 cake in a box flavor options right now, both $30 through the end of September. They've got a cookie crave cake and then this M&M's with cookie dough cake in a box. This looks so
Really
incredible.
good.
Are you kidding? This has layers of confetti cake, fudge, mini M&M's, chocolate chip cookie dough ice cream, whipped frosting, more cookie dough and mini M&M's, and a fudge drizzle. Honestly, this
How
is
she
my
doing
dream.
this in her
Cheers.
car?
And nothing is dripping.
I know.
What I
There
can't
is
get
so
past
much
the
going on
starfish
in here.
that
Okay.
sweater.
For the what?
The starfish on that lady's sweater.
I know. Oh my god.
But my kids would love that. They like ice cream cake.
I feel like you guys do like ice cream cake. Ice cream cake at Jenny's all the time.
Used to be at our old house, but now I think we had a place by our old house, but not since we've lived over in the new place. But they like ice cream cake, so yeah, for sure.
I mean, $30. I have my weekend plans. Anyway, but this has been super fun. I love doing the show with you guys. We are going to take a quick break, and when we come back, Liz and Jenny going to answer some viewer questions and confirm and send. You're watching Tasty Live.
Stay tuned. Thanks, Vanetta.
Bye, Vanetta. Thank you. Have a good weekend.
You too.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Welcome back, everybody. This flying by, Jenny. It's already, what time is it? It's already almost 8.
Almost 8. It was so nice to see Vanetta. That's what I love. That's my favorite part about the morning show, having Vanetta on. But we also have Jamal coming on today, so that's great, and possibly Vecchio. So
Possibly. Fingers crossed.
Lots of guests. Busy day.
We're trying to see if he's available, so we'll see. We'll see. But you know what? We do have, I think, God, how many questions do we have today, Jenny? Quite a bit.
And confirm and send.
Yeah. These are viewer emails that are sent in, and I love that they do this. And a lot of people love this segment because, people have the same questions.
Oh, I like confirm and send. I mean, we've been doing this for a long time. Someone asked me the other day, isn't it almost our anniversary? And I said, yeah, Liz and I started, I think, December. We started in September at Tasty, but it was December, our first live show, and that'll be 15 years for us. And after 15 years with Tasty, I still like to listen to confirm and send.
I still like to listen to confirm and send, and it never disappoints.
No. So this is great. Viewer questions. Why don't you ready to fire them up?
Yeah, let's do it. Okay, confirm and send.
Okay. Seems like the market, especially tech stocks, have been weak lately. At the same time, volatility hasn't moved all that much as of the time I'm writing this. If I wanted to get long volatility, what would be a good way of doing so? So you're right. I mean, I thought the same thing with the down move, and Vanetta was talking about how we've had so many down days in a row. We really haven't had much of a boost in vol.
So
I,
take, I mean, the VIX is over 16 right now. So the VIX is 1648 right now. But I mean, when I left, it was in the 14 handle.
It got up to 18. Like, I think it got up to 18 for a brief moment on Tuesday, probably your move-in day. You were moving in the day you never looked at the market. I think it touched 18. That
18's a
was
lot.
what,
18's pretty
which,
big. Yeah.
which again, 18 is the average. So we've been below average, and that kind of maybe puts this week's down move in perspective. It didn't really do much. It didn't really scare the children. It didn't scare the market. And I almost thought this was more of people possibly moving their money out of tech stocks and maybe into some other things, because there were some stocks when everything was falling that weren't down. Some of
Yeah.
the
But this person's asking if they want to get long volatility, what would be a good way? So getting long volatility is equally the same as shorting the market. So if you want to get long volatility, you can just put a bearish position in E-mini S&Ps, because that's kind of how it works. No, we are carrying a long volatility positions, but we're carrying it in UVXY.
So listen, this week, the down move this week, it didn't really help. So the long vol positions, and TP and I talked about this. The long vol positions didn't get paid even with the down move in the market this week. And if you have a down move in the market where it's, moving from one sector into another, you're not going to get that big boost in vol. You would need everything to go down to get that big boost in vol. So
And that's why, don't you think, like shorting the E-mini S&Ps or putting on a bearish position in SPY is how you would get long volatility, because volatility is the S&P 500.
honestly, you're right. Like the downside diagonals or downside diagonals in Qs paid off this week, or downside diagonals in SPY paid more than long vol.
More than long vol, right? Right. So
Right.
that's what,
But if you wanted to get long vol, I mean, you could. Again, it's you have to trying to time when the market's going to really have down day, down day, down day, down day enough for vol to spike is tough. That's tough.
I think so too. I think so too. All right, number 2. Let's see what's next. Do you do anything differently heading into a weekend than you do during the week? For example, do you take off any risk, or do you sell short-term options because you get to collect 2 days of theta?
I'm usually most of my premium I'm selling is like next Fridays. So am I doing anything going into the weekend? Not really. I don't do anything different. Do you do anything different on a Friday?
No, I don't. I mean, so what's not no, because I trade all day every day. Like I said, the only time in my entire life was Tuesday that I didn't look at the markets, and I don't really do anything differently going into a weekend. Except I have been known to say this. So people have been doing the overnight. I know sometimes we're looking at those iron condors, and instead of the 0 DTE, people have been doing the overnight ones. The only thing that I don't like is I don't want to carry the weekend risk if I was going to do that. So I know there's been people that have been selling premium overnight for the next day. That's the one thing I'd be like, I might not do it on a Friday. That's it.
Liz, I don't know if you can remember this, but so that has come up lately. People selling, tomorrow's SPX Iron Condor and the 0 DTs, but for, the
Well,
one.
no, they're doing it. They're doing it because then you don't have the pattern day trading rule too, which is going away.
I know, I understand that, but what I don't understand is well, I remember a study long ago, because Jacob's been doing these studies for a while now. So I remember a study from long ago about doing these next day SPX iron condors, and if I remember correctly, they didn't pay that well. The average P&L wasn't that great on those.
I think you're right. I mean, they have been working because volatility's been low the last couple weeks before we left. But I think you're right. They don't pay that much because overnight event risk is real.
Yeah, so I want to dig that up. I want to dig up that old study of selling the on a Friday, because I looked at it last Friday, selling Monday's iron condor, and I think it would have worked Friday to Monday. But I know we have some studies on it, and I'm going to pull that up, and maybe next week on the show we could pull up that old study about that overnight SPX trade.
Yeah, we'll take a look for it. But no, really, there's not much that I do differently over the weekend that I don't do normally in my account. I
Oh, the
mean,
only thing I'll do on Fridays is look for the red and the money signs, and we'll do that. You'll see us do it in our account. Look for any red and the money signs, anything that's expiring on Friday, and roll it out.
it's an excellent point. We do that. That's the only thing you got to do. Because if you don't take action, you'll take ownership. All right, what's number 3?
All right, Jerome Powell speaking later today. I think this might be a binary event, but I'm unsure how to trade it. Any thoughts?
No, I'm laughing just because in the chat they kept saying that, and this is totally something that Dr. Jim would say. Dr. Jim says every time Powell speaks, it's the most important time of our lives. And I was like, okay. So, I mean, you're kind of seeing it right now. The market is still kind of staying in its range. I mean, SPOOs are up 12 right now. I don't think we're going to have much movement until he does speak. So you could look at it like a binary event. But that's why Vanetta asked earlier today about bond positions, because that's what he's talking about is interest rates. So could it move the markets? Yes. Could it be a non-event? Yes, but the bonds are what you're really going to be looking at.
Well, and the expected move of the day, too. You looked earlier, SPX expected move of the day was in 50 something, which is larger, which is decent. They're kind of pricing in a bigger move today than on a quiet day with no news.
Yeah, that is true. It is a bigger thing. I wanted
But
to.
they say, I think this might be a binary event. I'm unsure how to trade it. If I thought this would be a binary event, if I
Help
thought it was going to be a
bonds.
binary event, you could you like, if they don't know which way bonds are going one way or the other, but they think this is going to be a binary event and we're going to get some big move, what are you going to do? Buy a SPY straddle?
Oh, if you think, well, with a binary event, I mean, if you're looking at it from that perspective, it's funny that you said that because you say binary event, I think earnings. And I think the premium is so inflated that a lot of times people sell premium because 9 times out of 10, premium is overstated versus the actual move. So you could sell premium and do it. But to Jenny's point, if you think it's going to be a huge binary event, buying a straddle, but typically it's priced in. If you're buying the SPX straddle, you're paying $53 right now.
Well, that's why I said SPY, because it's 530.
Yeah.
Right. Or like, what's the at the money straddle right now in SPY?
In SPY, the at the money straddle is, if I'm doing the 135, the at the money, it's 584.
So $584, and you've got, it's got to move, obvious. So we've got to have SPOOs move at least 50 something dollars to get to your break even. You need more of an event than a 50-point SPOO move.
Yes, more of an event.
And for this to be a big event beyond its expected move, you need SPOOs at least up or down $50 more.
And I find the market being so efficient. I mean, don't get me wrong, there are outlier moves. There's always outlier moves, but
I know we had the down week, but it didn't really feel like much. So I don't think, in my mind, I don't think there's too much going on. I mean, the VIX is not saying that there is. And usually the VIX is such a good gauge. How many times, Liz, have
I think it's a precursor.
Right. So the fear is not in the market for a binary event or for a big move.
No, nobody's scared. Well, the VIX isn't scared. People are probably scared, but we're not scared.
We're not scared. Okay, next email, please. Yesterday, hear me out, Dylan. Oh, sorry, Liz, go ahead. I was only reading because I know I didn't know how hard it was for you to read them.
Oh, I'm okay. Yesterday on Hear Me Out, Dylan listed what he thinks the 4 biggest threats to the U.S. stock market are. What do you think they are?
Biggest threats to the stock market. You know what I think?
I think AI bubble. I mean, but that could bust whenever.
I think there's so many stocks that have had crazy, crazy, crazy rallies. And those are the stocks that have started coming in this week. A lot of those tech stocks have started coming in. But when you think about the recent IPOs that we talked about and how they've gone triple, quadruple, 5 times their IPO price, if those all start coming back into their original valuation prices, or if we get the, like, look at Palantir. Vanetta talked about Palantir being down every day and how much that's come down, but it's still so high. Imagine if they all start coming back to where they were months ago. That could be a big hit to the market.
So that could be a big hit to the market, but I do think a little pullback is normal. You can't just, nothing goes straight up forever. There will be pullbacks, just like there will be losses. Otherwise, it's a rigged game. So nothing is going to go straight up forever. So I think the biggest risks, we're not watching the tweet. I don't think the tweets really affect the market as they did as much and before. They still doing that. I do think the interest rate could go the opposite way. Just because if they lower interest rates, that doesn't necessarily mean that the 10-year bond is going to do what they want it to do.
So I think like the interest rates and then, I don't know, tariff news, but I'm not expecting any big crazy moves in the market. That's not how I'm set up. I'm not playing for that. And for as long as we've been doing this, it's really hard to time that and play for that.
Yeah, it is very hard to time it and play for it. All right, let's go to the next.
What constitutes a pullback? If you're someone who likes to sell puts on a pullback, how do you quantify that?
That's honestly, when we were looking at this, I think Palantir is a little bit of a pullback. If it's a product that I want to get in, I will sell puts on any type of down move if it's a product that I'm looking for. But a pullback, when you're looking at the straight up move, couple percent, 3%, 4%, 5%. I know those were only down 1%.
But I think it's kind of like Liz said, if it's a product you want to be in, so keep an eye on underlyings you like, or underlyings you feel like you're getting used to selling premium in there, products you like being in, and when those have a pullback, keep them on your watch list. And when those have a pullback, then get in. What quantifies a pullback? I like things coming back to their lower end of their range, mid to lower end of their range. So that's why I got back into Target this week. Target had a big move down on earnings, and I got back into puts in Target. And if it runs back up, I'll eventually get out. So I have stocks that I just watch for them to come back to near their mid to lower end of the range. Then I hop back in.
And that's interesting because that's a very big pullback, because you're looking low end of the range versus
low end of the range.
Nvidia's, where if it's a product that you want to get in, it's come down a little bit. It's hard to jump in like, oh, I wanted to get in now, and it's up, 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 up. It's very hard to sell puts or jump in when it's going up. But if it's a product like Nvidia where it's like this and it comes back a little bit, maybe you can put a little dip a toe in the water.
So it's funny because my account and your account are set up very different. Or my account's loaded with products that are more at the low end of their range, and I like to just keep selling puts in those. Versus you're in products that you get in on a pullback and sell puts, but you're in a lot that are more at the high end of their range.
Yeah, a lot of them are at the high end of their range.
Yeah.
Yeah.
Okay. Next. Or was that it?
We did it.
We got through all of them. Let me take a look at our schedule for today. Are we on time? Are we on track?
We got to take a quick break because we have This Week in Stocks with Jamal, and he's probably waiting in the wings.
Okay, stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
I bought a stock when I was first old enough to open a brokerage account. It went up 1,000%, and I made a bunch of money, and I was hooked. I felt like I was just pretty much gambling in the markets. I had a big win, and it was mostly failures thereafter that. And I thought, I need to find a way to consistently pull money out of the markets and find a more consistent, repeatable system. Fast forward, I ran into tastylive. Really loved the market measures and the data they had behind to back up the research they were doing. My biggest takeaway is that you can find an edge in financial markets. It lies in volatility overstatement, volatility mean reversion, and having solid mechanics.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hello, everybody. Welcome back to This Week in Stocks with our guy, Jamal. You're actually a crowd favorite, by the way, Jamal.
Oh, you are so sweet. How you doing, ladies? What's going on? What's happening?
We're good, Jamal. We're good. I know. So Jamal and I have sons the same age. Liz just dropped her son off at college, freshman, first time. So you remember that.
I do. Yeah, I do. Yeah, first year dropping them off. How'd you handle it? Are you doing
It
okay?
was rough. I'm not gonna lie to you. It was rough. I can talk about it now, but I couldn't talk about it like yesterday. You know what? And here's the bizarre thing. I'm dropping him off for a great reason. He's happy as a clam. He's loving school. And I come home and I see his bedroom and I was like, oh, like
Wait, is this orientation week? Is that what it is? Or I mean, not orientation.
he's like in K week. They're just like picking up their classes, meeting the professors. He doesn't start
Right.
school until Monday.
Right. When do they actually start?
And you know what I love? I'm like, he's picking up his books. He's going to classes. He's out till 2 a.m.
Yeah. It's natural. I mean, that's what it is. I mean, that's what you do in the beginning. That's when you're actually supposed to do it. There's no classes yet. You know what I mean?
True.
When do they? How long? Here's the real question. When does school actually start? How long are they going to be on campus before school actually starts?
They'll be there for a week. School starting Monday.
Whoa, that's when things get crazy. I'm just kidding. He's gonna have a good time. It's great. This is the bonding moments. I remember, I mean, you guys remember that, like when you first show up in that first week, and it's just kind of you're getting to know the lay of the land and meet people and sort of like know where your classes are going to be so you don't have to stumble upon them on the first day. I think it's the best.
When he already got lost, he tried to find his math class. He's like,
Yeah, I
"Okay,
mean,
I have to try it again tomorrow." I was like, okay, good luck.
I think that's the best thing about that first week. Yeah, all my kids basically went back this week. My youngest just started 7th grade on Wednesday, and then my daughter went back yesterday. As a matter of fact, it was the cutest because my wife was like, "Did you talk to her before she left? She woke up and she was looking for you." I was like, "She was?" And then she texted me later and she goes, "I set an alarm. I wanted to see you before you left, but it's fine. We're gonna be up there. We're gonna be up there on Saturday. Actually, we're going to say what?
Is she a freshman in college?
No, she's going to junior year.
Yeah, she's older.
Yeah, she's going to
But
junior.
your son's a senior. I didn't realize they were 1 year apart.
Yeah, that's like mine.
they're-
So my
they're like-
daughter, they're a
they're
year
like-
apart. Yeah.
Exactly. They're like yours. They're like 2 years apart, but they're 1 grade apart.
And where did she go?
She's at Marquette.
Oh, at Marquette. Okay.
Yeah. So yeah, with the state of Wisconsin is getting a lot of our money. That's for sure. Yeah.
Yeah, and your seniors and back at Madison now. Is he going to work for the sports team again?
Yeah. Yeah. He's gonna keep that moving. Yeah, and my wife just dropped him off yesterday. And you know what's so funny? The building he lives in, he's been there since last year. This is gonna be his second year. I mean, it's essentially an apartment.
Yeah.
They have a pool on top. I mean, a
Wait,
cool
is it called the
pool,
Hub?
like the Hub. Yeah. How'd you know?
Yes. Because so I want to invest in the Hub. So it's at Tennessee, it's at Kentucky, it's everywhere. It's a beautiful
Okay.
apartment complex. So there's a pool on the roof, looks like a club,
Yeah.
gorgeous, right?
Yeah. Same deal. And this was the first time he ever went up there. He'd never gone up there before that. Well, I think and we were laughing about it, but I think part of the reason why a lot of kids really, like most kids don't even go up there. The reason why, at least in Madison, you can only bring one other person up. Like you can't like bring a bunch of friends.
Oh, the pool on the roof.
Yeah, they kind of keep it, you know what I mean? Like they kind of keep it low key. So you have to have a wristband, you have to show somebody who's up there, and then you can only bring one other person. That's it.
I just can't believe there's a pool on a roof in Madison, Wisconsin.
Oh, these buildings are beautiful.
But I understand it in Kentucky, but I don't understand it in Madison, Wisconsin. There's not like that long of a warm weather period for these college kids.
No, but it doesn't matter. Wherever they're putting them, they're all the same. So like I literally Googled this morning, how do I invest in the Hub student housing?
Yeah, it's and they have merch and everything. As a matter of fact, my wife just came back with some merch. She had like a bucket hat and she had like a little like poolside bag, like a little clear bag. Actually, it's not even poolside. I think it's like a clear bag that you could use for like football games, probably, right? Like like the bag to see stuff. So yeah, that's what's going on. All the kids are back at school, and yeah, we're just
And so you don't drop them off anymore. Like Jenny's son went back and she's just like, bye. And then they get in their car and they drive away. Right.
Literally like during the show, Wednesday during the show, he 9:55, right before I hopped on the show, I gave him a hug, and then I heard him packing up and heard the garage door open, and he drove himself back.
I mean, they're bored. They're little adults at this point, right?
Yeah. Well, no, I mean, I set everything up in the dorm room. I was sweating. It was like, and he's around. So I can't wait till the day where I'm like, here you go.
Well, with my daughter, I did take her up last Saturday to like take some stuff up in this vanity she had to like put it together. And of course, Princess was barely going to do anything. And so what was funny is that her roommate's boyfriend was in there, real nice dude, man, from like, smaller Wisconsin town. They ended up staying there an extra 2 hours, and this kid helped me put it together.
Oh, that's nice.
So nice. So nice to the point I'm like, is this not really her roommate's boyfriend? Is it somehow her boyfriend? And they're not letting me know. You know what I mean? Like, I'm serious. I couldn't believe that this kid helped me out the whole time. And he was actually leading. I was letting him lead. He had the instructions. He actually, I guess he builds a ton of stuff. I think he's kind of, I mean, he seems like he was like an engineer. He does sports type of management, but honestly, he seemed like an engineer. He literally had his own special tool that had like a razor cutter on it and like a screwdriver. Like that's what engineers carry around. I know, trust me. I'm gonna keep updating on this. I'm like,
I think they're dating. I think he's
that
dating.
might really be her boyfriend.
You know what I mean? I don't know. We're gonna see. It's kind of interesting. You want to talk about the week?
Sure. Yeah.
Yeah.
Pull up some slides.
Oh.
Yeah, there's been a lot of talk this week. Is AI in the bubble zone? So S&P 500, of course, today's futures don't count, but it's been 5 days in a row. We've basically been negative, right? It's the first time we've seen that since April. Fed cut odds, I think, has become the biggest news nowadays. It still is tariffs, but I would say, if tariffs are 1A, this has become 1B, especially right now. And the odds of a September rate cut dropped about 20% week over week. Early in the week, it was like 90 something percent that we were going to get a September rate cut. Now it's down to like 73. Tale of two retailers, Walmart and Target, both had earnings this week. Both of them faltered, but I tell you, Target seems to be in a rougher place. They're getting a new CEO, and that's obviously things change when you get a new CEO, right? I mean, it's a big deal. Yeah, it's a big deal. So I think the new CEO is coming in some point in time in the next couple of months. They're going to work them in. It's not like they're getting rid of theirs right away, but obviously Target has had a lot of issues. A lot of it's been theft or whatever. And then Walmart kind of beats them on every front. I mean, whether it's online sales, whether it's in-store sales, etc. But they're both affected by tariffs. That's for sure. They both talked about that in earnings. Eli Lilly is pricing the first their biggest ever, excuse me, U.S. investment grade bonds. It's supposed to be have like a 40-year bond along with it, which is very rare. But it seems to me that they were trying to raise cash ahead of these potential pharma tariffs because that's wild that they're coming up with this huge and this long of a term of bonds. And I totally didn't upgrade that last line, but you guys get it. You know where VIX is. VIX is fairly low. We just rolled over to the September VIX, and it pumped up a little bit yesterday, but I mean, it was only as high as 17 and change.
Didn't it get to 18 on Tuesday?
Did it?
I think so.
I didn't see it there, Tony, but I wasn't looking on Tuesday. I was crying.
I know it got up to 17 and change the other day, but maybe you're right.
Let's see. What was the high?
Still in the teens though, right? Still below long-term average.
Still low. I agree with
Whether
that.
you call it
I guess 1724.
I actually didn't hear the news on Eli Lilly. That is pretty interesting that they are doing that. I mean, a 40-year bond is very long term.
Well, I mean, their stock really took a massive hit. And was that on earnings? So their stock went from like 750 down to 620.
And it's all the pharma tariffs, right?
So you guys love zebras. I actually been doing a zebras. You know how you get like kind of an affinity for a trade, like a type of strategies for a while, and all of a sudden every name you look at, you're like you want to put it on. That's actually been my thing more recently, and I've done it in a bunch of names. And one of a couple of names that I was really looking at heading into this week were like Lulu, CRM, Lilly was one of them, and they all bounced this week for whatever different reason. Even though
you ratchet your zebra up,
or just take them off.
I didn't put them on in those names. I put them on in other names, but I was eyeing Lilly. I just didn't want to do it because I know these pharma tariffs. I feel like when they start announcing when that starts, the stock's going to tank more, right? And I just was hesitant, but I had it on in UNH for like a while. I actually did real well, so much that I got out before that huge move that happened. So it's been kind of a thing for me recently.
It's
Well, that's good. I'm glad you're embracing the zebra.
Yeah, pharmaceutical companies are tricky though too because I feel like they're always on the cusp of either a breakthrough in a drug or a failure in a drug. So they're always kind of on the bubble for almost a binary event.
Yeah, totally agree. But I mean, it's Lilly. I mean, this stock like is in Dow. It's in like, you know what I mean? Like it just is like it hardly ever falls like it has recently.
But Jamal, it's if you go back in time, Lilly used to be $100 or $200. Like it wasn't because my daughter's name is Lily. Long ago, I bought some Lily, but I think I got out about $400 ago.
I know. No, it's crazy how things change. Let's move to the next slide. Yeah, there's a huge tie between the Bitcoin and the S&P 500 these days. This correlation is as high as we've seen it, and you're seeing it right now. You know, Bitcoin obviously touched highs not too long ago, as did the market, and both of them are down. Currently over the last couple of trading sessions. So I don't know if this is going to change. You start to wonder. I mean, remember for a while it was almost like inverse, and then it was like really not much correlation, but this has been highly correlated now for the past year and change.
And we noticed that, when the market dropped, Bitcoin dropped. Which went first? On Tuesday, which fell first? Was it the market or Bitcoin?
I feel like Bitcoin was falling like over the weekend a little bit.
Because it doesn't, that Bitcoin never, like crypto never sleeps. So I never know whether, you know what I mean? You just have to look at the price because I never know when it resets.
I think which one do you guys? Precursor, like whatever crypto would do, then the market would follow. It seemed to be more of a precursor in the past, but I can't remember what days when. But crypto it seemed to fall. Market was down every day. Where crypto was moving. I mean, we had some bullish days in crypto. I think the Wednesday or Thursday it was actually up. Wednesday.
I haven't looked at the difference between like the actual coin and the actual future. I think we all, because we're traders, we pay attention probably to the coin more often than not. But I would say I feel like weeks like this, the move starts over the weekend, right? Like maybe Saturday or Sunday, and then it kind of starts to bleed into the week. And so I feel like.
I think so. Like Wednesday, the only green in my account were my crypto positions. Everything else was down, but crypto was up.
Correlate anytime you have a correlation of 0.5, it's real. right?
Yeah, that's a decent correlation. And I didn't realize it was that high. I actually thought it was would be less correlated, but it seems to be moving together. So yeah.
Let's move to the next slide. So this is a curve going forward. We got Powell speaking today at Jackson Hole. That's the main event. Next week, we got Nvidia earnings. The earnings is essentially kind of winding down now at this point. Nvidia is pretty much the only big one. We're going to have a bunch of retail stuff. GDP, but who cares about that? PCE is somewhat important, I would say, this time around. I know often people say like the PCE calculations you can basically get from the previous CPI and PPI, but I think if this thing goes up, this again shows that inflation is not going anywhere, and how in the hell can Fed cut rates if inflation exists? Next jobs report is the week after. Of course, we have a day off that same week of NFP because we have Labor Day. Then you got PPI and CPI the week after that. Then you got the FOMC, and then you got September options expiration. So, there's a few things here and there, but we'll see how the next month really plays out.
And I feel like these numbers have been more important recently. And I don't know if it's because we're on the trading floor, Jenny, because in years past, we would look at these and be like, okay, whatever, non-event. And I think it's because we're on the trading floor, because you can hear the market react so quickly after these numbers come out.
And there's just a buzz in the air. There's a buzz in the air, and it's a busier day. I mean, Jamal, you used to be down at the SIBO. When these numbers are on these number days, it's just a different vibe. Although last week, Liz, we were down there the day the number came out, and it was the next day that actually felt more active.
Yeah, it did.
Yeah, I explain it to people all the time. I mean, inflation was not a thing we paid attention to, and it's only been in the last 3 years that we've really paid attention to it, right? And then I can tell you what, 3 years from now, it's probably not even going to be something we look at. It's just a matter of time.
True.
I was talking to a friend of mine who's a realtor yesterday, and he was just saying he really hopes that the rates come down a little bit, because he said now every big deal he's doing, it's all cash buyers. Like the only big houses or expensive houses that are selling are cash, full cash, and not people financing. So
Well, that sounds like a good problem to have.
I know, that's what I said. I was like,
Let's move to the next slide.
I think
That sounds like a good
I think his
problem
point
to
is
have.
that like so many people are waiting to buy, just keep waiting. They keep waiting for a drop in interest rates to try to buy.
Yeah.
Because
All right, got something fun for you here.
this is fun. Now, we got to keep an eye on the opening bell, but let's
I'm wrapping up. These are the top selling world tours in 2024. Obviously, Tay Tay, the Eras Tour, was 1.04 billion gross ticket sales. Coldplay, 422 million. Pink, I mean, I didn't know Pink would be in the top 3, but yeah.
Oh, Pink's amazing. She's a
Sure. I just would have expected her to gross that much. I mean, man, that's amazing. 367 million. Luis Miguel, do you guys know who he is?
my friend loves him. He's like the hottest thing in Mexico.
Yeah, I don't know. I didn't know.
My friend from Mexico. He's like the heartthrob of Mexico.
He is.
262 million, number 4. Springsteen and the E Street Band, 251 million, number 5. Rolling Stones, 235 million. Bad Bunny, 211 million. Zach Bryan, 199 million. I know the name. I actually didn't know what he looked like until I put his picture up.
I don't know the name anyway.
And Metallica, 179 million, and Madonna, 179 million. So
Madonna's still touring?
Madonna's still touring. Apparently, she did last year.
Oh, wow.
And this reminds me, because I meant to ask you, I'm going to a concert at United Center tomorrow. Isn't there a secret way to park?
Oh, yeah. I'll tell you after the show.
Let's move to the last slide.
I'm going to see Benson Boone tomorrow.
Yes, I'll tell you after the show.
SoftBank took a $2 billion stake in Intel, and the U.S. government is obviously looking at it too, apparently. Google took this 14% stake in mine and TerraWolf. That stock's been on the move recently. Viking Therapeutics fell big on 30% on Tuesday after a weight loss pill did not hit expectations. And the de minimis exception ends on August 29th, meaning any packages below $800 again will no longer be duty free. That's going to hit next week. We'll see what happens.
Insane. That's going to be crazy.
Yeah, it is. Yeah. Research the August 19th OJ. Take a look at that.
August 19th OJ.
Oh, yeah, and then it's 8:29, so we gotta get in. Oh,
that's what I was gonna say.
Yeah.
It's been a real joy. Let's not take a break, Jenny, or do we need to take a break?
Yeah, no, we're gonna take a quick break. Jamal, we will see you in studio next week. We'll be in the office. We'll see you. Have a wonderful weekend. Thanks for coming on. We're going to take a break and we'll be back for opening bell.
All right, we'll be right back.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Welcome back. I think we made it. It is not even 8:30 yet, and so we kicked Jamal out for a great second. There we go.
There we go. There we go. So
these are coming out of the turn. They're up 20. I mean, we can see it all right here. We're in the market for opening bell. We haven't really moved much since there, right? We came in, we were up 15, we're up 20.
What I'm so excited about today, Liz, is that we're actually we never get to be in the platform on the show at that 9 o'clock hour when at home we're placing our SPX trades. And today we're actually going to be in the platform on the show at that 9 o'clock hour when we could be when we'll be placing trades.
Well, the ironic part about this is because Powell is speaking, I don't necessarily know that we're going to put it on because those are the days you're not supposed to put it on. But I mean, I do think we're going to sit right around here. Bitcoin's at 112. That's the lowest I've seen it in a long time.
Hold on. Are you watching my platform or are you on yours?
No, I'm watching your platform. I can see everything. Bitcoin's
here it is, way down here at the bottom. I know, right? Bitcoin 112. We've got bonds up to 114. So earlier they were in the 113 handle, so they had a little bit of a bounce up.
But it was only like 113 or 113.
Yeah, so not much. Did you see that? Did you see the natural gas move yesterday?
No, natural gas down or up? Oh,
up. So this up move felt like a lot. It felt like a lot. It honestly though, Liz, look at this. If you look from 2.849 to 2.912, like I took up all my natural gas positions yesterday. This bounce up really helped. I don't know what it's doing today.
No, we have a call spread in natural gas. Oh, you put in.
We have a couple put spreads. So this one, yeah, like this one we just put on 3 days ago. So yesterday, if you look at this, 35 plus another 24, $60. So this trade that would have been on 2 days was up $60 because of yesterday's bounce. Hopefully natural gas will get a little more of a bounce because we need some help for this 4-day trade, which is we've got, just till what, Monday? Tuesday?
Yeah, that one stinks.
I know. But these are all, if this ends up in the money, the natural gas options they'll all settle. This will exercise in a sign and we don't need to worry about it.
Yeah. And it's a spread, so they will spread each other off too. So it doesn't matter either way.
But the move up yesterday was the first little sign of life I've seen in natural gas.
I mean, I like natural gas at these levels. I really do. So I've said this before. I love trading natural gas, and I know it's a big animal. And Frank always texts me. Frank, the man on the YouTube, always says natural gas is big. It's a big animal. I get it, but I like it at these levels. I do like seeing natural gas this low.
Oh, it's nice. It's nice to sell puts or put spreads. It has been nice once it gets down below that 3 handle.
Yeah. Yeah, once it gets down there. And I'm a ratio spread person. And I let him go. So it works out pretty well. Okay, so I do think we're going to kind of sit on our hands for a little bit. Can we look at the 1-day VIX? I want to see what the 1-day VIX is doing because of Powell. 1D, yeah.
So this is it's 15.68. And I had a study on we had a study Wednesday from Jacob that TP and I did.
Oh, you did get a study from Jacob on Wednesday.
Yeah, yes, we did have a study from Jacob on Wednesday. So basically it was when the VIX 1D is higher than the VIX. So if the VIX 1D is higher than the VIX, so right now we have VIX 1D 1578.
And the VIX is 18 something.
And so the VIX is 1635.
The VIX 1 day is lower.
So it's lower. So that's just kind of like normal trading. But when you see a period where the VIX 1D is greater than the VIX, that's when you really can make bank. That's where you double down.
Double down on what?
On your zero DT selling.
Oh, okay. So when
Honestly, I think I have it. I think I still have it. Yes, yes, yes. Okay. Okay, so I'm gonna just go to like here. When the VIX one, do you see this? When the VIX 1D is greater than the VIX, the average P&L is like crazy, crazy higher than
Oh, look at that.
yeah.
Wow.
So
Okay.
this is for 0DT 40 Delta iron condors. Now this is the iron fly. So the iron fly that you've been doing every day, when the VIX 1D is greater than the VIX, look at the jump in average P&L.
That's crazy.
I know. So my takeaway from this was when VIX 1D is greater than the VIX, all in. I'm kidding.
But we're in an environment right now. I mean, even with the Fed decision, I thought the VIX 1D would have been higher than the VIX. I really did. I mean, if you would have asked me, right now if I thought the VIX 1D would be higher than the VIX, I would have said, I think it is. I was kind of shocked it wasn't.
Well, that's kind of like the volatility of volatility.
Yeah. Yeah.
So, but I wonder, is the chart in here? Is the chart in here? No, it's not. Of
That's awesome.
Of how, because I think I just pulled it up of the VIX 1D. If I go to
1D.
VIX 1D and look at the chart and look at, how often do we see these big spikes? It's probably like this area here, this area back in April where you see that huge spike of VIX 1D. It's probably not that often that
Well,
the
did
VIX
it say, and you flashed by it really quickly. I thought it said only 8% of the time.
Oh, did it say that?
Yeah, in the takeaways, it was only 8% of the time.
Oh, okay. So yeah, that's what TP and I were saying. It can't be often.
You got to go to the takeaways.
Ways.
Yeah,
8.5%. Okay.
Do you believe I saw that with my one good eye when it
like because I don't even think TP and I got to it. So 8.5% of the time. So it's not that often that happens.
Yeah. Yeah.
So we can't be surprised of like, oh wow, I'm shocked VIX 1D isn't greater than VIX. It's only 8% of the time that happens.
I know. I am not, I mean, don't get me wrong. I look at VIX 1D, but it's not one of my precursors that I look at all the time. I assumed on a day like today, I thought it would have been higher than the VIX.
Yeah.
But no. So let's go back to the market. Let's take a look. Spoos are sitting right here. Oil's in a range. Natural gas has had a little bit of a bump.
Let me take a look at oil because there have been a lot of people who on this down move were selling puts in oil. We tried to put in an MCL position. I guess we never got filled.
I don't mind an MCL position. We don't have to do that now though.
No, we have fast market. So we are busy. We have trades to do and maybe there'll be something in fast market. But we had so this week there was a little bit of bounce in oil. See that? A little bit of a rally.
There's a rally in the alley, get your stock. But we're still, so the IV ranks have been so low all across. I think in 18, my bar is so low now. I think in 18 is a high IV rank.
I know. So it's tricky, but that's why people are looking elsewhere, looking for individual products, looking for things. I mentioned Target, even with its move down, its rank is only a 21, but that's better than you're seeing in most places. But you were gone this day. Did you see the down move that it had on earnings?
Yeah. I mean, listening to Jamal talk was pretty crazy. Did you take a look at Walmart then? Because I didn't, once again, I was not actively looking at this stuff, but Walmart had earnings as well. And it bounced down, but Walmart's at the top of its range, not the bottom of its range.
But it's still, even though with the way Jamal was talking, you would think Walmart would have gone up, but it still went down on earnings.
Yeah. Okay. So take a look at this. The VIX is now 16.25 and it's down 2% and SPOOs are up 25. So the fear is coming out of the market.
Right. This is kind of saying, hey, we're not expecting much. We're not expecting much today. And there's not. So here's SPX expected move.
It was 53. Now it's
46. So vol's coming in only 46. And to the viewer who thought like, oh, is this going to be a binary event when Powell speaks? Well, the market's predicting plus or minus 450. So.
And that's exactly what I was paying. Remember, and I was trying to tell you how much the SPY straddle was. I was paying $458 when I looked at it.
So here, yeah, $499. So $499. So $500 for the SPY straddle. In order to make money on this, we need SPOOs to move $50 higher or $50 lower than where we are right now by the end of the day, at least.
I mean, I'm not looking at this as a I mean, if when we it's so funny because we have said binary event quite a bit today. But if I was doing this, I would probably be selling premium instead of buying it. If you're
I'm
looking at
kind
it,
of sitting on my hands. I know we had kind of a little bit of a rocky week. I have not sold any. I've not made any moves on, a move for today. My positions are my positions. I have not done any of the 0DT. I haven't sold any premium today in 0DT or bonds. I'm just kind of sitting on my hands and waiting to see what shakes out. But
so did you and TP do the 0DTs?
He has every day done the iron fly. Every day he's done the iron fly, and even with the moves, seems to have at some point in time we've had some bounce backs where he's gotten out of them.
Well, and that's why I think if you keep your stops, not your stops, your GTCs, and I know it doesn't need to be a GTC, your closing orders tight, at some point, there's a good chance you're going to get hit.
So if you look at it, they were trading, Liz, so high, like 850. Oh my gosh, this is the cycle. This must be why that person did that spread. And I'm scrolling. Is this the cycle of that spread?
Yeah.
Remember? Hold on. This was unusual option activity. The 50-50, 5100, 50-50, so far away.
So we bought it only because we can't afford to sell it.
But it makes sense that someone may have done this thinking, oh, this is when Powell's speaking. Maybe and this was so long ago, 37 days ago, SPOOs were in a very different level.
It was still super far away when they put this on. And I think somebody did probably sell it.
But 37 days ago, we were still like, okay, where are we now? August 22nd. So we go to July 10th. July 10th. Where are we?
It wasn't anywhere near 50. Like we were pretty.
No, it was so far away, but we're still, 6250 instead of 6400. It was still far away, but someone was playing for a down move. And
we don't know if they were playing for a down move. They could have sold it.
I thought that was the one we asked some guys in the crowd, and they said the crowd had to sell it.
Oh, I don't know. I don't remember which one it was.
But
now, can you do me a favor? I just glanced at the chat. I'm not seeing everything, so don't get chat people. I apologize. I'm not cherry picking. But somebody said the VIX one day is catching up to the VIX.
Catching up. Let's see. 1604.
1604. Yeah.
1604, 1618.
Yeah.
Okay, so
catch up. No, but we got to do it at 9 o'clock. The research says 9 o'clock.
So these iron flies yesterday when we were looking, they were trading for like 850. You know how you kind of get lucky if you can get them on for 850. Look at this.
925?
I put it through. Can you imagine if you got that at 950? What that is saying, it's okay. So when vol gets really high, butterflies trade cheap. That's like buying that butterfly for 50 cents. Basically saying that there's no way we're going to be here at the end of the day. We're going to whip around and the market's going to be wild and there's no way we're going to be here if you can get that butterfly for 50 cents.
That is insane. What was that? That was the 6405 level?
Yeah. So here, 6405 call and put, 63.95, $10 wide, 64.15, $10 wide. And it's trading 930.
That's the highest I've ever seen it.
So it's very little risk. I'm gonna put in 925. Look at that, 925. So this is we look at these every day. We've seen them as low as 750, $8.50. $8 is usually normal. 850 is a gift. So at 925, that's crazy.
That's crazy.
Crazy town.
That's crazy. Now put a GTC in, please.
And I will take this.
It is kind of fun to trade the 0DT SPX. Now, we're doing this because it is such a gift with the price. That doesn't mean we're going to get to keep it. But I also would like to state that we usually do them at 9. Now, the research has shown 9 o'clock is the right time for these 0DTs.
The only reason I put it in is because I couldn't believe I could get that trade for 925, 950.
I didn't think you were going to get filled. So congratulations.
So that with the market this week, like that's what TP and I had been seeing. These have been trading for closer to 850, which and I know last week you were lucky to get $8.
I mean, I put some in for $7.90.
Yes. So again, if you see these $10 wide iron flies trading for $8.50, $8.75, $9, I haven't seen it. It just means that the probability is the market's going to have a whippy day and maybe never come back to this price point.
Yeah. Yeah.
But we'll take if we got filled at 925, our risk in this trade is only $75.
Yeah, that's not bad at all. And you've got to, in all week, you put a tight stop in for 10% and you'll come back.
Yeah. Yeah. So that's surprising, isn't it?
It is crazy.
Okay. Are we staying on schedule?
Yeah, we have to do I forget what's next. Let me look. We've got a market measures next and then tasty extras. So yeah, let's take a quick break and then we'll jump into market measures just because we can go through. It was a pretty good market measures. I glanced at it today.
Fast market.
Oh, fast market is next. Fast market is next. All right, we'll take a quick break and come back with fast market. Stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again.
Oh, good.
So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, I'm not serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Welcome back. It is fast market time, and this is different than what's your assumption because they actually give us the trade ideas in fast market.
That's right. I'm going to stay in the platform and actually plug these trades in, and even pull up the analysis page so people can see what these trades look like. But I'm excited, and I like this. We actually are given the trades by everybody, so pretty cool.
I know it is. Okay, so fast market.
All right, number one, first trade of the day, Upstart. Ooh, I like this. I hope they're bullish because I have an Upstart position. I actually have, my Upstart position is getting bigger and bigger as it's getting lower and lower.
Oh, please, I'm gonna have to do this. You're gonna have to read these for me.
With rate cuts coming soon, Upstart will benefit. A dovish Powell today will send this name to 68 quickly. I bought next week's 65 calls at 171 Thursday, or any other better ideas. So
honestly, let's just jump in. We'll buy the calls for 171 with you. Jump in the platform. UPST, a dovish Powell will send, we got to get this in quickly. So to 68. So he bought the next week's $65 calls.
Yes. So I have short puts in Upstart. This is what I've got short puts in Upstart. Doesn't Upstart have some kind of, I don't know, deal with somebody else? I saw recently, whatever, I read something about Upstart and I thought, oh, I'm going to get in and sell some puts in Upstart. That was here. And my position in Upstart has grown. They're buying those calls. That's kind of far out of the money with Upstart trading 63. If I were going to get in this, I'd probably just get in with like these the 35 Delta calls, these 60 calls in September.
No, so I understand, but with them, they're using $171. If they have a specific, that's what I loved about what they said. Specifically, they think it's going up to 68. They think it's going to be Powell's movement. And so with their specific directions, I don't mind it.
But tell me again what call they are.
In the 7-day. Go to the 7-day.
7-day.
Yeah, because it was for Powell's speech. He said the 7-day 65 calls for 171.
Okay, sure. This is not a trade we would typically do. It's not a high pop trade. It's a low pop trade. We're buying an option. But you saw that put used over $2,000. So I get it, especially if it's a smaller account. Like we have a smaller account. Sometimes we have to break the rules. So here's an out of the money option where we're just really, it's like a $175 lotto ticket.
But the other thing I was going to say too is they wanted to use the next week's, and I'm sorry, we're a little bit more long-winded than the boys. But so great, if it doesn't happen and Powell it doesn't move, get out of it if you want to. He thinks it's happening for the Powell move.
Okay, I will buy one. Violating again. Sometimes smaller accounts have to make trades like this if you want to have a bullish position and you can't afford the stock or you can't afford the puts, and sure.
All right, let's move on to number 2.
All right, Liz, you click on pin the live screen, and then it'll blow up big on your screen because
I'm pinned, but it's because you're sharing your screen too.
Going with a 25 Delta Iron Condor, $30 wings, 0 days to expiry. So this is just an SPX 0 day. Sure. We just did
it. But ours was more brought in.
And theirs is wider, but you know what this is telling us? And this happened during the break. During the break, the VIX 1D at 1640 exceeded the VIX at 1623. So now we're in the 8% of the time where VIX 1D is greater than the VIX. We put an iron fly, but we're not going to add more. I would still be cautious because Powell is speaking, and I know speaking with Jajun, he kind of holds off on days like today, and he's one of our OGs of the SPX 0D.
He is one of the OGs of the SPX 0D. I mean, it is a wilder move, and that's why we got so much for it. It's because there's probably a slim snowball's chance in hell that it's gonna land there, but that's why it's cheaper.
All right, so we already have one in, but I'm sure lots of people are getting in with those 0DTs today. Next up.
Next up, let's see.
6J. Good, we don't have it. Just grabbing some 6J futures, or maybe I'll sell those October out of the money puts. 6J. So sure, we'll go into the platform. They're just grabbing some futures. We could sell a put spread in 6J. We have nothing in 6J, and you could see it fell yesterday. It's continuing to go down today. I don't mind a put spread in 6J. It'd go to the 42-day.
Yeah, it does say or maybe I'll sell those October out of the money puts.
And we would have to do a put spread.
Yeah, ship it.
So this isn't bad. Max profit 162, max loss 462.
That's not bad at all.
No.
October puts, they're big by big with puts. We're small by small with put spreads, but I like it.
So I sold the put spread. Or if we wanted a smaller scale, I could go into FX. I could go do something in FX.
No, I like this. Let's stick with our viewer.
Okay. Oh, we're filled. We're filled. So we have the 0.0067, 0.00665 put spread. Took in $1.50, risking $4.50.
Perfect. All right, next. Ooh,
Palantir. Palantir got whacked $40+ in like 2 weeks. Figure it'll bounce around a bit before dropping more. Gonna sell that 125, 195 October strangle. Honestly, typically I'm a little bit of afraid of naked calls, but I don't know if you can get far enough. 125, 195. You're really far with that 195.
It's going to be very expensive. Oh, no, it's not that bad.
Oh, it's not that bad.
Well, why don't you bring it in by $5? Let's bring it in by $5 on each side and spread it off.
Okay, so here we have the 125, 195. We're getting 570 and using 1,500. Not bad if you don't mind the naked options.
Not bad.
Liz said, bring it in by 5. I bring it in I brought in one strike, and now we're getting 145. It's not bad at all. I brought in each side in by 1 strike.
A minuscule amount, and then we defined our risk. 355 is our maximum risk. No, forever give me there's a gotcha. In the words of Dr. Jim, we just brought it in. We brought our break evens in a little bit, but it's not bad.
Well, and we're only getting $1.50, $1.45 instead of $5, but
yeah, but you're using much less capital, and it's defined risk.
All right, I shipped that. I shipped that Palantir trade.
PLTR, I like it. Okay, 4 minutes till Powell speech.
But I think it's still going to take, it's not like 9 o'clock and go, market's moving. I think it's going to take some time.
But it doesn't matter like what he's wearing or the first word he says or anything like that.
The way he acts, the way he moves his head.
Right? You never know.
All right. But I think we're doing fine on time. We're okay. Next trade idea, please. Lulu, all your favorites, Liz. Palantir, Lulu, we've got them all.
The funny thing is I can read the stock symbol, but I can't read what they want. I do love PLTR. I'm always bullish PLTR, and PLTR has actually been very, very good to me. Lulu, I've been out.
I got it. Are leggings still in fashion?
No, they're not.
I never know what's in fashion. I need someone to tell me. I need someone to just tell me. Maybe Beth could just text me every season of like, hey Jenny, this isn't in fashion anymore. Like the skinny leggings or the wide leg leggings, none of them are in fashion.
Oh no, it's more like those for working out now. It's the flowier pants.
The flowier pants.
Would you like me to stand up and show you what I've got on right now?
The flowier pants, but they're not quite as warm as leggings.
It's not. They're not winter walking pants. They're what you work out in.
All right, are leggings still in fashion? If so, how about a put credit spread in this beaten up stock? All right, back to the platform, and I'll take a look at Lulu.
But Lulu has a good. They call it the dance pant, where it's like, and I'm sure Lily has them, where they're the.
Oh
yeah.
That's what she wears now to dance, although the instructors got mad and said they want all tight-fitting clothes. They don't want them wearing those anymore. They want all tight-fitting clothes because they need to see the technique.
Well, yeah. Well, I don't know why they call them a dance pant then. But I think you're supposed to take them off with like a leotard on underneath them. That's why
Yeah, probably. All right, so Lulu look at Lulu.
Oh, yeah. It's been beaten down.
Really?
So now the price of the stock is the price of a pair of pants. I didn't like it when it was more than a pair of pants.
I like it when one share of stock, it was more than two pairs of pants. Okay, I'm curious what the margin is. I just want to see, like, if I go to this 10 Delta 160 put for $2, that's using 1,600. That's not bad for a $200 product.
It's not bad. My son's trying to break through. He doesn't know I'm on the morning show.
Oh, you'll have to let him know. In college, they have no sense of time.
No, I mean, he knows my show. He just doesn't know I'm on the morning show.
Oh, he doesn't know the morning show. I'm telling my son, he always calls and texts during my show.
Because he always asks me, he's like, "Are you on your show?" It's like, "Nope, not yet." Okay. So sell that put spread.
I'm not going to sell. So I brought in. Okay, I'm not going to sell put spread. I've been on the show with TP all week, Liz. I'm not selling a $5 wide for 84 cents. And we need to get a third of the width, at least $1.50.
Yeah.
That's the tricky thing. And we're going through Lulu earnings.
No, close it. Lulu's got my number. It's a product I love. It's got my number though, so don't do it.
All right, we're gonna wait. I mean, they have earnings coming up. We'll just wait.
Yeah, I'm not gonna go through earnings with that. Okay, what's up next? Oh my God, Blues are up 60.
Yeah, and it's just 9 o'clock. Like, what happened?
63.
But what gets posted at 9 o'clock other than him walking out?
I'm telling you, he might have been wearing a red tie. That's all it takes.
So Spoo's up 68, 69. Whoa, what a run.
That's why our butterfly was so cheap.
Let's check on our upstart call. I hope we got filled.
Yes. Let's check on our upstart call.
Oh man, everything's
Spoo's up 72. That's crazy.
Yeah. Well, hey, you know what? That binary event, we're just right there because Spoo's were up like 30 and the SPY straddle is trading for $5, which would mean to the upside to break even on that butterfly, we need it up more than 80. So from that, up 30 when the news came out. And again, is the news out yet? I don't know.
No. He's just talking. He just opened his mouth. He just said, "Hello, everyone. My name is Jerome Powell." In my mind, that's what he said. And this is what the market did.
But you can see,
hold on, I'm going into the chat. I'm gonna see if they can tell us anything.
Oh yeah, maybe they could. And I have the ability to pop into Twitter as well.
The Canadian options trader, I believe I know who that is. He's already out of his 0DT SPX for a win before the move.
Awesome.
Yeah.
Awesome. But how can that be when our center strike is 64.05?
No, whatever they did. I don't know if it's.
Oh, okay. Okay. Well, we've got our order working there.
Let me just tell you what Canadian options trader's little symbol looks like. That's what I think I know who it is. It's I'm gonna try to not give it away. I think it's Dr. Ziz.
Oh, it's the little gorilla guy.
Yeah.
Yeah. All right. Should we go Spoo's up 80, but I think we can let's finish up fast market. We'll keep going with fast market because what are we doing here? We're not like Tom. We're not zinging futures. I'm not going to say like, I'm going to lay out some futures here.
Yeah, this is crazy.
And bonds are 114.11. They haven't really moved from.
Bonds haven't moved at all. I don't think, I can't imagine him being like, we're going to lower interest rates. Right as he opens his mouth.
Right, hello, everybody. This is what's happening. All right. Next, you want to go to the next fast market?
Yeah, let's do it.
Open. It's small, it's liquid, it's potent. All right, like a shot of tequila, throw on a neutral strangle in October and see if you're hungover when 21-day T rolls around. Now, I just am long some open. I didn't even know we could do a strangle in there.
I did not know that either.
385. 385. I guess you could. Look at this. Look at these markets. Now here, if this is 385, I'm not selling a call. I don't care how much I get. I'll just sell a put. Like I'll sell that 3 put for 60 cents.
Okay, so I'm getting all these. This is from Chris Vecchio, which is amazing. Through our super producer. The situation suggests downside risks to employment rising and then shifting balance of, hold on, I'm going to this. This is from Chris Vecchio. Shifting balance of risks may warrant adjusting policy.
Okay.
Yeah.
All right.
Short-lived tariff price affects a reasonable base case. This is all from Chris Vecchio via that, and I love it. I actually am thoroughly enjoying being on while the market is moving like this.
I know.
So I'm sorry. I know you were doing a trade. Please go back to it.
Oh no! Again, like SPOO's up 80. It's exciting to see we're getting a little bounce back, and I'll get out of open for a second, and I'll go to SPX, and we'll see what we've got going on here now. We still have today. Today it's still saying like plus or minus 57. So, oh no, that's 4 day. Yeah, plus or minus 37. Plus or minus 37.
And the chat is telling me Powell's speech literally does say he's inclined to lower interest rates. So I wonder what, you know, how Jamal was telling us that it was 20% less. I wonder if it's back up to 90 or 95.
So if I go to ZB and I look at like the minutes, you know,
like I said, I'm going to tell you a very unpopular opinion. So this is not, I mean, don't get me wrong. Even if they lower interest rates, that doesn't necessarily mean that what's it called? The real estate rates are going to go down.
So look at this. 9 a.m. That's the move it had.
Yeah.
That's the move it had. So it did. So, okay. So we maybe were too busy watching something else. So you could see this little like spike up at 9 a.m. and now it's come back down a little bit. This is just ZB. I pulled up.
Yeah. We can take a look at the market. So it's interesting. Bitcoin, really? I just want to see what Bitcoin's doing.
So like short puts would have worked, right? Because when we came on this morning and started the show, we were in the 113 handle. We were like 113.29, and you had said this 113.29, close to 114. But anyone putting on a long bond position or selling puts, you got that move up.
Yeah, but it popped up, and it's kind of coming back down.
Yeah, but people could, if they were watching it or had GTC in it, GTC, they could have probably gotten out.
Yeah. Yeah. I can tell you, you know what's super fun too? This chat is amazing.
And here, look, this is the 9 a.m. minute. It's all happened exactly at 9. Like we thought, oh, 9 a.m. It's going to take a little while for things to, you know, shake out or people to get the news or the market to move. But 9 a.m. he comes on, 9 a.m. the market shot up.
Yeah, the market did shoot up.
This is a minute.
I was dead wrong because I assumed it would be he'd have, I mean, he must have gone out there and talked as fast as he could.
Something is posted or, you know, something comes out unless there's some kind of, you know, posting of them.
Oh, yeah, there is postings like the snippets that Frank in the chat is putting up and that Chris Vecchio they're posted somewhere, I'm sure.
So here, immediately 9 o'clock, we got that move. So in 1 minute, SPOOs went from 63.99 up to 64.40.
Yeah, and SPOOs are keeping their wings up 70 right now. Where's the VIX? Upstart is up 3% right now.
There's a little Upstart call. Wow, $71.
That's what I was going to tell you. So now
Upstart.
Yeah, I mean, you could take it off. Take your quick $70. We take $70 in whatever, but they think it's going to go up to. Remember, it's going to go up to 68.
Hey, I've got so much Upstart. I'm holding this to the end of the week next week. Start. Go. All right. So the last one we had was open, selling a strangling open. And Liz,
I don't want to sell a strangling open.
But you're shocked at the premium here. Look, the 6 call and the 3 put, you're getting $1.25. You're getting $125 using 188. But I'm just as happy selling just that 3.
Well, could you do a reverse jade lizard? Sell the 6-7?
Oh, no. Well, that's a regular jade lizard.
I'm sorry, a regular jade lizard.
But you know what we could do? This is kind of gives me AMC vibes. Gives me AMC vibes back in the day, where you can do like a big lizard. You're getting $1.15.
Yeah, ship it. You don't even need to buy anything to reduce any capital.
Yeah. And if I bring this in, how much over $1 do I get? $1.27?
Yeah. Okay, and I don't know how many more we have left, too. I want to make sure we get to market measures because we've got a special guest coming on later, and I cannot wait to see him.
Oh, I know. Okay. All right, here we go. Intel. Picked up some Intel on that little dip, thinking about the October 2025 call spread. So, sure.
We're long Intel now, aren't we?
Now, you kind of missed this. So Intel when the market was crashing, Intel was on fire, skyrocketing.
Because the government was going to take a 10% stake in it.
And someone else is too, I think. So someone else is too. But then the next day, just like old Intel always does, next day it lost its gains. So you missed this Tuesday and Wednesday. And it was very frustrating because we had the big day. Let me go back to just a daily. One day chart. Oh, how far do I want to go? Oh, 10-year. Okay, so you see, right, here's Tuesday. Market's falling and Intel is rising like a phoenix. And everyone thinks like this is the beginning. Everything's falling and everyone could just put their money in Intel and it's going to keep on going. Next day, gave it all back.
Yeah, well, I mean, once you think you got it figured out, is exactly when it comes back to slap you in the face.
Oh, Intel. But yeah, they want a call spread in Intel. I'm assuming they want to buy a call spread.
You mean they want to be bullish? Just because you're bullish? They might want to be the opposite.
Let me see what that said again.
They might actually want to be the opposite.
Well, we have short puts in Intel, or we have a zebra. We have a zebra in Intel. So we're going to leave it. We're bullish. We have a bullish position in Intel, a zebra, very defined risk.
Yeah, I'm happy with the bullish position in Intel. Okay, so let's go to the next one. I want to make sure we get to the market measures. Because the market measures is good. Enphase Energy.
All right, just selling these October 30 puts. Price is right. Yeah, sure. Enphase. Lots of people are in short puts in Enphase or in other solar products. So we don't even need to jump in for that. We probably have it. Yeah, we have short puts in Enphase. So we're right there with you.
We're in. Okay, what's the next one? I think that might be it, right? Oh, Starbucks.
Setting up Starbucks with a diagonal, buying the Nov 85 call, selling the SEP 90 call for 580. I'll probably roll that front one out to October. Yeah, so bullish trade in Starbucks. Let's see what Starbucks is doing on the move today. It's up $1.20. Basically, what they did was buy the October 85 call, sell the September 90 call.
Here you go.
It's only $3.87 now. They paid $5 something for it.
Yeah, ship it.
Sure, we'll get in. I like diagonals. I do like diagonals, especially for smaller accounts or if you're worried about the market. They're defined risk. It's a way to be bullish and get some premium decay. The markets are wide.
See if you can get filled mid-market. If not, don't worry about it.
All right, this is my final offer. And filled.
Oh, did you see Ethereum? I was just looking to see if the Bitcoin and the market were still as correlated. Bitcoin's up a little bit. It's trading 114 right now, right? 114.7. But Ethereum's up a lot.
I know it's getting back close to its 4,700 era that like last week where it got up to 4,700. Today's a big move for Ethereum.
Huge move for Ethereum.
Now I wonder.
Almost 6%.
I got some questions on that SBET, which I remember. Oh, good, up $1.70 something. So that's having a little bit of pop. This was one of those that we had Dan, the crypto man, on. This was one of those on his list, and it had really taken a beating, but it's popping a little bit.
Not bad.
Okay, now do we have any more fast market, or is that the end? Maybe.
I think we're good. Let's take a very quick break, and when we come back, we've got market measures.
Okay, stay tuned.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, The action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Welcome back to a Market Measures. We're very excited for this one, Jenny.
Oh, I know. This was made by Thomas, one of our newer researchers, and he's great. We love Thomas, so I'm excited to see his piece today.
Yeah, Thomas is wonderful. He really is. And I do want to give Ajit, I see you, and I agree with you. He said Jack Tucker should do a Rising Star. Maybe he would do it with us.
Oh, yeah, let's do like an evening special. Remember when we did an evening special?
I mean, he doesn't have to give up his evening, but maybe he would do a Rising Star with us.
That would be nice for Jack Tucker to do a Rising Star segment.
Oh, thank you for that idea, Ajit. I like it.
Okay, are you ready? Ready to hop into Market Measures? Because we've got about 12 minutes and then we're bringing on Chris Vecchio.
Yes, we are. So capital awareness, defined versus undefined risk. Did you look at this already, Jenny?
I glanced at it.
Yeah, I did too. And I actually liked it. I liked it a lot. So Thomas did a good job with this.
Okay. Let's better understand the capital trade-offs between defined and undefined risk strategies by asking a few questions.
Does higher capital utilization actually lead to better returns per dollar?
Does using less capital actually improve efficiency? So this is interesting on the heels of having TP on all week, because TP is a huge fan of spreading things off and getting a better return.
Yeah, that's a number he always looks at, is his return on capital. So he very rarely does naked options.
Right. I mean, I don't know about in his personal account what he's doing, but he does like spreads. He puts them out on the cherry bomb quite a bit. And I think he does do a lot of spreads on his own.
Yeah, I think he does. I think he
I
does.
know he used to be famous for selling those cheap SPX puts, but I don't know.
Probably still is.
Couple that with all of his spreads.
Yeah, but when you get to the takeaways of this, I think maybe Thomas was talking to TP. Okay,
Yeah.
so let's go to the next slide, number 2. Here's the study: 4 SPY option strategies tested over 12 plus years, which is great.
Okay, defined risk, short put vertical, 30 delta, 15 delta, short iron condor, 16 delta, 10 delta.
Okay. And then undefined risk, short put, 16 delta versus the short strangle, 16 delta. This is pretty, clear cut.
And mechanical setup, 45 DTE, daily entries, and this is in $100,000 account. So I'm glad they put that out here. It's in $100,000 account. So, if you've got a $100,000 account, this is something that is doable for you.
So, and here's what I think is crazy: daily entries. So I'm going to assume they're managing it at 21 days till expiration, taking it off, because otherwise you'd have a lot of these on, right?
Right. So daily, so mechanical setup, 45 DTE, daily entries. When you would run these studies, you can choose. You can say, don't put on a new one until that one's off, or have X amount on at a time. Because if they're putting these on every day and you've got a $100,000 account, that capital is going to build pretty quickly.
Yeah, it's going to build real quickly. Okay, let's go to number 3. So then here, defined risk trades on average require $1,148 per trade.
Undefined risk trades on average require $6,460. That's, SPY at these levels. So you can see that.
And undefined risk trades consume 5.6 times more capital per trade on average. I mean, all that stuff makes sense because a naked option not spread off is going to require more capital, right?
So you look at this, and the short put, the short strangle, it's over $6,000 in buying power, and the vertical iron condor, much less.
And it is like, that's, you and I both know, no matter what you're doing, no matter how wide you make it, you can always save capital by spreading it off. Okay, let's go to number 4.
But for every gimme, there's gotcha. We know with those naked options, you're going to get out quicker. You're going to collect more. You're going to get out quicker.
You're going to get out a lot quicker. Okay, so then number 4.
The performance, defined risk leader, put vertical with 9.7% annualized return.
Oh, wow. I can't believe it's the leader. So 9.7.
Oh, the leader over defined risk, the leader over the iron condor, which.
Oh, defined. Okay, that makes sense. Defined. So it's just the put vertical over the iron condor. Got it. And then undefined risk leader is the short put. That makes sense, with 19.3 annualized return. That makes perfect sense.
That is a 2 times larger performance edge for undefined risk.
So in both of these, it's the put versus both sides.
Yeah, because in the bull market we've been in for our lifetime, for most of our lifetime, it's usually the calls that are getting tested, or the call spread that the market's blowing through. So again, is this ever going to change? Are we ever going to be in a bear market? And these results might be slightly different. But this went back at least 10 years, I think, right?
But you know what's crazy, Jenny? No matter what, if you look at it, the stock market always does go up. Always. I mean, I'm not saying it doesn't go down on a day, like a day by day or term by term basis, but it's higher than it was 3 years ago, and it was higher than it was 10 years ago, and it just kind of keeps going like that.
And I mean, that worst period I've ever remember is 2008, 2009. That took the longest to recover in my memory.
Yes, it is.
Okay, capital awareness isn't about avoiding capital usage; it's about optimizing it.
Yeah, there you go. I do think that. Okay, number 5. Plot twist. There we go. I love this. Thomas, you're going to get gold star, because that's one of my favorite things to say. Plot twist. We're going here now. Okay, so plot twist. Put verticals achieve the highest capital efficiency despite lower absolute returns. Wow.
But for its highest capital efficiency, okay. Capital efficiency formula: return over capital times win rate equals efficiency score. And that makes sense, because if you think about it, like they're here comparing like one put vertical to one strangle, and you saw that put vertical used like $1,200, and the strangle or the naked put used $6,000. But if you did as many put verticals to get to $6,000 in buying power as that one naked put, your P&L's probably higher on that put vertical.
It probably is. But did they do that? Did they net it out?
I mean, I think that's what he's talking about, the capital efficiency. You're making more on your capital. So it would work out like that.
The only issue is that Well, I guess they were the same deltas. I was going to say, we know that when you're doing it, if you're going to get bigger, like if you're going to do a multiple, so say it's $1,000, so you do 6 put verticals, you would widen it instead of multiples of it, except for zero DTEs.
Right. All right. Higher win rates plus lower capital requirements equal efficiency advantage. So the put vertical wins.
Put vertical for the win. And you know what? Maybe TP called Thomas, like, make sure that put vertical wins, because that's what I've been doing a lot of. All right, let's go to number 6. Account size determines the optimal strategy mix for capital awareness. I agree.
Small accounts less than $50,000 favor defined risk for capital preservation, 3 to 5 times more trade opportunities, and a lower drawdown risk.
Yeah, large accounts over 100,000 favor undefined risk for growth, fewer trades, but over 2 times performance, except higher volatility.
So I think, again, you might have more capital efficiency with that put vertical than the naked put, but there might be other trade-offs. You know, the pop might be a little lower. The pop on the naked put is probably higher. The time in the trade might be less. You know, the time before reaching 50% is going to be less. So there are trade-offs. It's not like there's one clear, this is the right thing to always do.
There always are trade-offs. And I do think, let's go to number 7, because this is what I loved the takeaways here. It is account size matters. Your strategy selection should fit your capital.
Blend strategies. Adjust mix of defined versus undefined risk as market conditions change.
And that's what I was going to say is if I look in my account right now, I love naked options. I really, truly do. But I have a lot of defined risk in there as well. There's pieces and parts of everything.
Right.
Nothing it's not all zebras. It's not all short puts. It's not all. There's a bunch of different strategies in there.
Okay, the bottom line, true capital awareness means optimizing the relationship between capital deployed and returns generated.
I love it.
Again, is this from Thomas or is this from TP?
That's true. It's true. TP does talk like this all the time.
All right, everyone. That was our Market Managers brought to you by our research team, who are amazing. We're going to take a quick break and we'll be back. We're bringing in Chris Vecchio. Stay tuned.
No, can't wait. Stay tuned.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody. The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. But you know what he did? And we've got those cards with us and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card and I'm no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Hi, my name is Liz Deerking. The beautiful brunette next to me is...
What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on.
No, you're wrong.
Hold on.
She's wrong. I'm right.
High school party, high school condom.
Yeah, because it wasn't high school.
I had friends at my high school who were mutual friends of Liz, and so we were all at the same party.
And then parties for the rest of our lives.
For the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome back to our Tasty Extras, where we are bringing in, don't tell anybody else, but my favorite person on the network, Chris Vecchio.
Oh, that's true. She loves you, Chris. She talks about you every day.
Oh, that's very enjoyable to hear. But thank you very much for having me. And more importantly, you guys got on a great time today. The markets are really active.
I know.
It was pretty hard, though, Jenny, because we were live to read news stuff. So I appreciate you texting Beth to text us.
And it's great. And I guess when I say she talks about you every day, she never misses your show. She loves to tune in at the end of the day.
I try to keep Dylan in line. It's a task.
It's pretty entertaining. It's pretty entertaining.
I'm doing my best.
So what did we miss? Well, we were on air going through Fast Market. The news was coming out. Powell, it was 9 o'clock. And what did we miss? I mean, we saw the SPOOs move. We looked at the bond move, but what did we miss?
So I think the context here matters, right? Last week on Thursday, the market was pricing at 100% chance of a Fed rate cut in September. But since then, as stocks have come in, volatility's pushed up and these rate cut odds had declined, basically down to 70% before Powell spoke today. So there was a little bit more optionality in the market. We weren't convinced that Powell would tell us that a cut could be coming. And he more or less delivered on that this morning. He teed one up for September. I wouldn't say he locked it in. But talking about the state of the labor market, which is problematic, that being a highlight of his speech, more or less tells you which way he's leaning. Jobless claims are at a 3-month high. We've seen continuing claims jump up to their highest level since November 21. The hiring versus firing ratio has dipped into negative territory for the first time since the pandemic, which basically means the churn is starting to get more negative. And then you think about some of the policies being done on the federal level with the labor force, right? It just puts the Fed in a position where can they look through inflation? And Powell said today, yeah, they probably can. They're going to watch out to see if it keeps going, but they probably can. And I would say that's not a political thing for what it's worth, because the Fed's 2019 study on the Trump tariffs in the first term basically surmised that these tariffs have a one-off impact. Prices go up, people adjust, and then you go back to where you are. You really need to be more concerned about the labor market. So today we get these comments. Volatility crush is afoot. IVR is back into the low teens for S&P and NASDAQ. Maybe you guys know this. 2 days ago, Nick and Mike asked me if I was buying the dip, and I said, yes, the boys are backing down, and everyone looked at me like I had 10 heads. Thin Lizzy is not listened to in Chicago. Is that not a thing?
Oh, they didn't know what that was?
Dylan, Ilya, Mike, and Nick all looked at me like I was...
I never heard of that song?
Ilya, Mike, and Nick, none of them knew what it was?
No, they looked at me like I was referencing some esoteric, like video game music from a Nintendo series in the 90s.
You got to be kidding me. I mean, I
was offended.
Even Dylan?
Yeah.
I mean, Dylan is.
Oh.
I feel like Dylan's like our age. He's like close to our age.
Hey, he's old. Like everybody knows that if you're our age.
And when I say our age, I just mean Liz and myself, not you, Chris. You're much younger.
Vecchio is a youngin, but yes.
You've got a new baby.
Not according to my daughter. We were at the pool recently and she looked at me and she's pointing out the gray stubble in my chin and she goes, "Yeah, you're going to die soon." It's like, okay. That's a little aggressive. Thank you.
Oh my God.
Well, so we have kids who are going to be entering the job market, you know, in like my son's graduating college in May. And Liz's son just started college.
My kid just started college yesterday, so he's not entering anytime soon.
But like, you never know. I mean, I remember periods of time where the job market, it was tough. It was tough for these college grads to find jobs. It was tough for people to find jobs. And that's a concern. That's a concern for this era, these kids, this generation. Are we going to get into a period like that where it's hard for these kids to find jobs?
So Chris, was it for you when you graduated?
No. So like my path to getting to Tasty is actually really interesting. And I probably don't get here without the global financial crisis. Because my aunt was a managing director at Lehman Brothers during the 2000s. And so I had a nice little, nepotism internship lined up right out of freshman year of college. And then, that's 2008. So Lehman's not really doing too hot. And then ultimately I get another internship, get in the queue for Goldman, and then they cancel the program. And so then scrambling, I have to find an internship for the summer. And I land at FXCM, which then Daily FX and spun off to IG and now pushed over to Tasty. So
you went through that.
Yeah. And it was really tough. I mean, the unemployment rate when I was getting into the job market was like 7-8%. But I think the more alarming thing for today, and I keep trying to talk to people about this outside of work, the jobless rate, the unemployment rate for men with college degrees has now surpassed the unemployment rate for men without college degrees. We're probably reaching a tipping point with the economy and AI and productivity. And I look at like my own county here, for every 5 plumbers retiring, there's 1 entering the workforce. And after like 5 years in the industry, you can make up to like $880,000. I might push my kid into the trades. I don't know if I'm going to ask them to think about college, quite frankly.
It is kind of an interesting. My brother is actually a plumbing contractor, and he had his own business and was doing way more successful than anybody that got out of college in the beginning. And so the times have
I've seen that with my guy. I'm back in my hometown where I went to high school. Like we moved back up here.
So where are you? What town are you?
Bedford, New York. It's like 35 miles north of New York City. But the folks who stuck around and were electricians or whatnot, like they don't have the student debt. They have homes. The other ones don't.
Yeah, it's pretty interesting. So that's a fascinating statistic about college grads versus non-college grads. It's amazing. Okay, so Chris Vecchio, what does somebody like you do on Powell morning? You get up early, right? This is a big
yeah. What do? I get my coffee and I pray for a few hours.
Is this Spoo's up 95 right now? Do you see that? Spoo's up 95.
Is this how
I had a bad month. So like I came into, and I've been very forthright about this, I came into August clutching my britches because every August, September, October, I've done nothing but lose money if I've been long the market for the past few years. And so I got out at the start of the month feeling chipper. This month looking for vol expansion has just been eating me alive. I've just been death by 1,000 cuts week after week. So earlier this week, I jumped back in a long MES position out of spite because Ilya was feeling a little too confident. And whenever he smiles as a bear, it makes my blood boil. So, I mean, today's working out fine for me because of that.
Okay, good. So like you said, the boys are back in town. So you are a bull again.
Yes. And I think the fact that we were able to come into this meeting today with volatility having risen and with the Fed odds having come off, we had the ability to then redigest, okay, we are going to get a cut because that was so much off the table. And the economy's meandering right now. It's not great. There's a lot of things to be worried about, but the reality is we're still looking at an unemployment rate in the low 4s, a job rate 4.2% right now, same place as it was this time last year, for what it's worth. You have real economy growth 2 to 2.5% still, despite the tariffs. That's not exactly an environment that we should be concerned about because it's the environment we were in last year this time. And if we can muddle through, stock returns were still positive. And moreover, I mean, the data shows if we're worried about inflation, what are the two best places to hide out with your money for an inflation scare? Stocks and real estate. So in a world, Dylan and I keep talking about this on overtime. If we really think about the legislation that's come out, top 20% of income earners are getting a tax cut, bottom 80% are getting a tax hike. What do the top 20% do with the extra money? Well, they don't buy more blue jeans. They're not buying more apples. They're saving it. They're investing it. So we're going to have more money that can actually flow into equity markets structurally for the next few years. It's AI issues aside right now in the short term. I mean, it's hard to not be a bull, at least for the foreseeable future.
Yeah, it was interesting because I do remember you saying that August is notoriously a bearish month, right?
Like the stock market average is a gain of 0.07% for the past 10 years. For the past 20 years, August, September, October is the worst 3-month stretch. Volatility rises the most during this 3-month window. So for me, it's like, okay, should I stay away? And I did, but not just stay away. I was looking for more vol expansion than we've seen. And IVR is at 11.3. That's nothing. And I'm just eating it. So I'm glad I got long earlier again this week. It's going to make up for some of my past sins since the start of August. But the market's still up. You can't fight a market.
And I think it's just as good of a reason because you and Ilya, every time he smiles as a bear, you want to do it to spite him. I completely get that. I've got a counterpart, Jenny, and we always laugh at each other when the other one's doing something opposite. But yes. What do you expect to see from here? Do you think there's going to be a lot more follow through, or because they're pricing in at 93% that there's going to be a 25% cut rate? Is that correct?
Yes, I would point to, we shared this research last year on air, and we're going to re-up it again because we're reaching another cut. But since 1980, there are different types of Fed cuts. There are maintenance cuts. Things are going well. We can just tune the knob a little bit. Things are going terribly. There's a recession coming. We have to start cutting rates. And then, oh my God, it's an emergency, like COVID. We have to cut rates out of the blue. When you get a maintenance rate cut, the average return of the S&P 500 since 1980 is 13.3%. Since the Fed cut rates last year, the market's up about 14%.
Okay, so
we're like right in line with how the market should be behaving if it was indeed a maintenance cut. And you look in the past, the economy's been growing, inflation's been between 2 and 3%, unemployment rate's still in the low 4s. So yeah, it was a maintenance cut. If that's what the market thinks is coming now, that we're getting ahead of greater economic pain, stocks like that in the 1 month, 3 month, 6 month, 12-month window still. Maybe you get some jitters in September in that typical lead up into the Rosh Hashanah Yom Kippur holiday window. But why not another Santa Claus rally? This is a market where people were so underinvested on the institutional side, thanks to the tariffs in April, that there's so much catch up going on. And I think almost to emphasize that point, I should pull up the leaderboard of how various funds have performed this year. A lot of funds are underperforming the broader market simply because they sold in the first week of April as opposed to buying more down there.
Now we had a question, saw a question came in, I don't know if it came through email or Twitter or what, just saying, if they start cutting interest rates and markets at all-time highs, what are they going to do when market's not at all-time highs? Then they won't have any bullets left.
Maybe the stock market does like cuts at all-time highs. I saw a stat last week that if the Fed cuts when the S&P is within 2% of all-time highs, 3 months later, it's higher like 85% of the time, historically speaking. So using bullets, there's plenty of bullets left in the chamber. They could go to zero if they really need to keep cutting. They could always restart quantitative easing, which the market will it like that? Maybe. When we're doing all these extreme measures, it usually indicates that something really bad is going on. And stocks need to digest that bad news first. So I'm not really concerned about the Fed running out of bullets here. It's more of a function of how fast will they go. Powell says they're going to go. I don't think they're going to go consistently now. I used to think that once the Fed starts cutting, they'll cut and they'll cut and they'll cut. But now it's like they could cut in September, maybe not in October, give us one in December. I think the more cuts under Powell, the better, because I don't think the market will think they're political, given everything that's going on. So cuts now are good. More cuts later are bad.
And this was his last time talking, wasn't it?
At Jackson Hole, yeah, this is his last Jackson Hole. So he'll have he's out in May next year. I think Trump's probably going to appoint the Fed chair before then, just to kind of serve as a shadow chair and undercut Powell's influence. But the board's changing. Cook could be replaced. Mirren is going to be coming on. Most of the FOMC governors will have been Trump appointees by this time next year. So rates are going to be lowered. It's just a function of by who and when.
And what do I'm gonna butcher saying this, but I remember listening to you the last time the last time they had a meeting, there was the two dissenters. That's what they're called, right? The dissenters. And,
Yes.
and you were saying that the last time there was dissenters, like I said, I don't want to put words in your mouth. The last time there was dissenters, they definitely cut the rates. It's like the winds of change have kind of come.
Yes, there are two instances. The last time we had two dissents was during the COVID era, and then prior to that, the last time you had two FOMC governors dissent, you have to go back to the early 1990s. But it does, like when the FOMC governors start to break, that's usually when the entire board is going to move in whole. So I think we had Bowman, we have Waller saying this already. The cuts are coming. Powell said as much today. That's priced in now again. So if we're thinking that the market, like, oh, are we going to get a September cut? That's going to drive stock prices higher. I have 95.5% on my screen. If you want to squeeze out the last 4.5% to 100, go for it.
Wow, that's crazy. Jenny, did you see Upstart is up to almost 69?
I'll just leave it. And so next week, what do we have? We have PCE next week. Is there anything? Is that going to do anything?
That could suck. PCE, you can amalgamate with components of CPI and PPI, like 85% of the PCE figure. And using those inputs, you're looking at a reading of maybe 0.5%, high end 0.6, which 0.6% annualized, right? 1.006 to the 12th for those that want to do it at home. You're going to get an inflation rate north of 6%. And I don't think the Fed's going to want to cut too deep into that kind of cycle. So again, if we have inflation that has the potential to overshoot here because the Fed's cutting for the wrong reason, sure, the labor market stays intact, but what happens to asset prices? Asset prices probably go up. Gold, silver, Bitcoin, stocks, the dollar gets hammered. That's what's happening today, at least.
Oh, right. So our FX, are you trading FX at all? I know we've got our FX group in the office. We had an FX show on what's been going on there. Have you been watching it?
So the dollar is still the most hated trade in the world. Bank of America's fund manager survey, which just came out last week, showed that institutional investors still have the dollar as their least favorite trade this year. Short USD is actually one of the most popular positions still. And then when I look at what's happening in the futures market, we were looking at positioning recently here. You know, some of the Z-scores of speculative positioning are north of 2 or 3 for some of these currencies versus the dollar. So that's to say that people are long the Japanese yen 2 standard deviations above their historical average over the past 2 decades. And that to me means it's a very crowded trade to be short the dollar. So what I actually like the most right now, and I've been doing, is short the Canadian dollar in particular through the 6C futures. And I'm doing it there, well, forget the product, but through the Canadian dollar itself, because it's a really weak currency. It hasn't been able to rally when the dollar's getting hit. And when the dollar's rallying up, it's been moving lower the most. So even today with this dollar weakness, I think CAD is up by 0.15, maybe 0.2%, whereas the yen's up by 0.7 or 0.8%. So playing for a dollar rally still makes sense in selective pockets because of how crowded it is. But Canadian dollar is probably the best place to do it right now. And maybe it's through dollar CAD, not 6C, which is why it's so good that we have the Tasty FX tab on the platform now.
We do love that. We do love that tab. We're learning all of this stuff as we go.
Thank you so much for coming on. What time is it? 9:47. Yeah, thanks for joining us today. Anything else? Any other questions, Liz, before we let him go?
No, that's what I was going to say. I thought this was a great segment. I'd love to have him on again, but next time we do the morning show, maybe we'll grab him back in.
Yeah.
Have me on. And you guys should come on to Overtime and help me contain Dylan in one of these sessions.
Hey, we traveled with Dylan for a long time. We can't contain him.
Oh, you cannot contain him.
Thanks for having me.
Oh, wait, real quick. This is so funny. One time we were on the road doing a road show, literally a stage show, and it was almost Dylan's turn. And we were all asking, like, where's Dylan? Where's Dylan? Where's Dylan? He was out at a hot dog stand outside.
Yeah, true story. When did you go get a hot dog right before he went on air? Finishing it, then.
Yeah, you should see him in the green room. All the things that he ingests before we go on air. It's incredible. It's honestly impressive.
Yeah. Oh, all right. Thanks, Chris. Have a good weekend.
All right. Thank you so much. All right. Now, we're not going to take a break, but Jenny, can you jump in the platform?
Well, let me see. I don't know. Let me take a look at what I have going on here.
because we can jump in the platform. I was showing you earlier. It was great to have Chris on. He's wonderful. SPOOs have been up. They were up over 100 just now a minute ago, just under 1.57%. The Upstart, whoever put that in an Upstart is going to get a gold star because Upstart is up. Sorry, there we go.
There we go. SPOO's up 100.
SPOO's up 100. 100.
100. No wonder why our butterfly, why we got 950 for that ironfly. 925.
I'm glad we donated that for Upstart. Take a look at Upstart.
Oh wow, $340. Let's
That's
take.
what I was telling you. I was like, you gotta be kidding
Nothing
me.
makes me happier than this Upstart move.
And so, aren't you glad we bought this instead of selling a put?
Yeah, because we made $333 instead of. And okay, so this is one of the reasons we like the zebra too, because when you give yourself the unlimited profit potential of owning the stock or having synthetic stock with a zebra, or here synthetic stock with a call, you've got a lot more profit potential than selling a put for $1 and you're closing that at 50 cents.
Correct. And this was, if I'm remembering correctly from Fast Market, they said, I believe it's going to 68 today, and it did. So I would close this. Don't need to. Whoever that sage was in Fast Market, well, let's close it. It's a 7-day trade. We're going to move on.
I closed it. So we might lose $70, but who knows? It's not even 10 o'clock in the morning yet. It's 10 to 10. So you never know. SPOOs could be up 30 by the end of the day, which is where we were when we put that trade on.
They very well could be. But right now we've got our GTC in for that. I'm happy to donate it for our $300 move in Upstart. You're trying.
I'm gonna cancel, and so we were doing Fast Market during, right before the news. Now it might have been a good idea to hold off on, putting on trades right before the news. People thought there was going to be an outlier day. Actually, it is an outlier day. The expected move today was up 50 points, and we're up 100. We're up twice the expected move. So that SPY straddle, go to the SPY straddle in the 0-day, and it was
550.
What?
It was 550.
No, it was.
Yeah, it was.
Oh, the price 550. I was trying to see what strikes it. What strike?
Oh, I don't know what strikes it was, but we were paying 550 for it. Now the expected move is only 186 or $2.
I think it was. I think we were up 30, so I think it was this 637. So it was $5, and now it's 880.
Yeah, I mean you made $300.
Yeah, $300. We're up. It was SPOO's up 100.
Okay, so but these days do help us. So I know we have those red in the money signs. We have to take a look at those. So it helped us in IBIT. So IBIT came back.
All right, we will. We will. Like at the very top, Chris mentioned 6J. He mentioned the currencies moving. We put this on today during the show where we sold this put spread in 6J, and that's up almost 50% since we sold it this morning. That was right before.
Let's take that off.
So that's what kind of crazy move, how these currencies are moving today.
Yeah, I bet Glenn.
So we're right down here, and now look at that big bar.
Glenn's got to be having the time of his life.
These are the days Glenn lives for.
These are the days Glenn lives for.
Okay, our in the money signs, corn. It's right here. It's in the middle of our spread, Liz.
I know, but we have 0 days left, Jenny. So we got to do something with it.
So honestly, this isn't bad. We're only down $53 on this spread. It could have been way worse. We're much closer to our short. Oh. What did that say? Let me cancel this order.
Oh yeah, I think you already had a working order in for it. This might close sooner than later. I don't know what time corn closes. Oh.
That just said the markets were wider.
Yeah.
I'm working closing that. Or I wonder if I could just roll it. What's the corn move looking like? Yeah, look, yesterday kind of saved us. Brought this right back. I wonder if I should roll it. Let's see. If I take that corn position and go out to the 35-day, Oh no, we have a 35-day corn. I put that on with TP.
Yeah. So just close the one.
Yeah. And I'm going to put in, so 56, 62. I need to get out of this.
Yeah, there you go.
Okay. So that's out. And then this other trade, we're at 41%. And TP and I put it on 3 days ago. I'll put in a GTC for 50% on this because it might hit.
It could hit today.
Yeah. All right. So we'll check any other red in the money signs. You talked about IBIT.
I did, because IBIT was we were saved in IBIT from today. So this is a scratch, and we typically do have the put spread. This is kind of a Jade Lizard-esque position.
So we collected $1.03. It's trading $1.07. So
Yeah.
we're just going to
and it was a $200 loser before today.
Yes. So the move up, the 223 up in IBIT today saved us. So this is coming off for a scratch. And I guess the question is, do we put a new one on next week or come back to this on Monday?
Do it on Monday.
Okay, so we're out of IBIT, which we do like to be in. So remember this for Monday. We'll come back to that. And HIMS, what do we have?
Got a little bit of help today from this up move, but the $39 to be exact, but it's still.
And this was one of those we had a very deep in the money put in HIMS. It was using a lot of buying power. So we wanted to reduce the buying power, but keep a long position. And this was a call spread where we completely washed extrinsic value. So we put it on where the stock, wrapped around where the stock was trading, washed extrinsic value. And the question would be, once this is gone, we have no long position in HIMS. Do we want to keep a long position in HIMS, or do we want to stay out of HIMS?
I don't know. I've been out of HIMS. I know you're in it.
I'm in HIMS, but I'm in HIMS with short puts. So I have a lot of short puts in HIMS. And I can't remember, because to me, I think there's decent premium in HIMS, but was it a lot of buying power? No, and it's not. Look, $1.20 and $400.
I know you're worried about the upside here, but do you want to do a Jade Lizard? You can do the 38 put.
Oh, you're saying bring down the put?
Bring down the put to the 38 put and do the 51.50. It's not bad.
No, it's not bad. It's not bad. So here's $1.18. $1.18, and your break even's 38.
Yeah.
Okay. And that wasn't bad. That only used $470.
No, that wasn't bad. That wasn't bad at all. Okay, so that was HIMS adjusted. We adjusted IBIT or closed IBIT. I think that's it. Oh, the SPX, that can just stay.
Oh, that'll cash settle. That'll stay.
And you closed Upstart, which is great. What else can you do me a favor? Will you sort by days open? I want to see exactly what we did in fast market and see how all those fared. Do you know what I mean?
Well, so hold on here. So 6J we're getting out of
I think you got to close some.
Starbucks
is we put a
diagonal.
Oh, a bullish trade in. It must have been up like that when we put it in.
And I think the market was wide. The market was wide when I was trying to put it on. I think I paid up a little bit for it. So, and Starbucks was up when we put it on.
Yeah, Starbucks was up when we put it on. Okay,
so Upstart, and we're trying to get out of.
So we did 2 trades we got into and out of with fast marketing. It was the 6J and then Upstart.
Yeah. Okay, and we're out of 6J. So that's nice.
Yeah, those are nice. The in and outs are nice.
And corn, we are out of today's corn. We just have the next cycle. So that's it. As far as big movers, the ETH's up $3. That's a big move for we looked big move for Ethereum. It's at the 4,500 level. ETH is going up. And what do we have?
Oh, so we have a zebra in the one, and we sold short term against it.
Okay.
We have the 35.30 zebra in November, and we sold the 40 call against it in September.
And this is one of those things that I like to do in my account every day, where I will open up all my positions and I'll scroll down through the mark. And if I see something really cheap, I'll close it, because especially when we've been having movement, right? Like we had the big down move on Tuesday, we were down on Wednesday, and I'll look through and during the week at some point, this call was probably so cheap we could have bought it back.
Probably.
You know, that's just something just to keep in mind when you're going through your account. I will open up everything and just run down the mark. And if I see something cheap, okay, I'm buying it. I'm going to buy it back because no reason to leave it on. Yeah, like look at well, I mean, this is, maybe this would come back. Like here, we've got 2 short calls in Target. They're 23 cents. This was a calendar and Target went down, and I can't believe it's almost come back to this level, because Target was down to like 90 and we're already back to almost 100.
Yeah, that's crazy.
I don't know if you remember putting on this calendar. It was from a viewer before Target earnings.
Was I here for this?
Yeah. Yeah, right. Because when TP came on, we had Target earnings, and so we looked at this, and I said, "Oh, we already had this calendar on Monday. We did it Monday."
Okay, and that's a scratch right now.
Yeah, I guess so. I guess the calendar came back. So I guess we can leave it.
And then the other thing I wanted to look at, because I noticed it in our account, UUP, just because Chris Vecchio, I was going to call him Christopher, because Christopher Vecchio was talking about the dollar, and UUP is how you can trade the dollar. So that's one week, and we sold, what do we have, a long call in it?
A long call, and look at the down move in the dollar today that he talked about.
Yeah, I think it's an interesting take when you have a macroeconomic person on. We don't look at it from the macroeconomic perspective. Jenny and I are considered quants, where we just kind of look at the numbers and not why, right? We're looking at the volatility, price action, things of that nature.
But I think this was a viewer either on Twitter or in What's Your Assumption, who wanted to get long the dollar. So we just bought that UUP call. All right, Liz, it is already 10 o'clock. I don't know if you realize that.
Crazy.
Fastest 3 hours of the day.
It was a really fun show.
It was good to see you. Nice to have you back. It was fun having on. We had great guests, Vanetta, Jamal, Chris. So thanks to the guests, and it'll be nice to have the boys back next week.
Yeah, it'll be great to have them back. Well, it's going to be Bat on Monday and Tuesday next week in the morning show. I think Tom comes back a little bit later. But Jenny, go enjoy your morning. Go for a bike ride, do something like that, and then come back and see if the Spoos are still up 102.
Peace.
Peace.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we are going to cover an iron condor.
One of the higher volatility names on the board, especially in the Mag 7, is Tesla. It's got an IV rank about 45. Monthly implied volatility in the 80 handle. The stock is down about 6% today, about $20 on the stock, so a big move lower. It's been bouncing around the 300 to 220 range. I think we kind of play into that for a little bit more sideways action over the next 51 days, the June monthly expiration. I'm going to be looking at an iron condor here. So I'm going to go to somewhere around the 1 standard deviation. On the downside, we're going to look at like the 220 strike. So 220, 210, which is really the lows that we put in this year. On the upside, we're going to do the same thing, and you'll see there's a ton of skew here. So I'm going to go to the 350, 360. Puts us right at about a $3 credit, exactly what we want, with 51 days to go till expiration. If you go to around a 20-ish delta or 18 delta on either side, you should be collecting about 1/3 the width of the strikes. But you'll see the delta on these short options is about the same. The downside room is about $53 to the downside. On the upside, we have about $75, and that is call skew. And what that looks like when you look at the curve, and you'll see this on the risk profile here, the distribution that we have on the analysis mode, is that your right side tail is much wider than your downside tail, and that is call skew. When you look at the equidistant options, or in this case, options where the 220 and the 350 have about the same delta. You can even see it in my net delta here is basically 0. The option that is further out of the money relative to where the stock is trading is the side that has the skew. So here we do have a pretty significant call skew here, which is a representation of where the market perceives the velocity of risk, meaning the velocity of a big move. It doesn't necessarily mean that the stock will have that move, but it is a representation of where the market projects that move to be. So we're going to be selling some premium here. A directionally neutral position. We have a little bit more price range to the upside in terms of where the price can move, but they are directionally neutral because of where the deltas are here. We're going to do this at 1/3 the width of the strikes. We're going to try and get filled a little bit over that $3 and work our way down from there. $700 in buying power depending on where we get filled here on this trade. 302, no fill. Let's try 3. All right. 298. There we go. Filled 298 on an iron condor in Tesla. Tesla down this morning $17 and change. It got as low as $19 or so to the downside, a little over 5%. We have this iron condor on. We placed quite a while ago, over 30 days. It's been a battle of a trade. The stock has gotten up as high as about 360 and change just over the last week here. So we're sitting at 314 after a couple days of down move here, going from 350 to 314 here. Now, I get a lot of questions on, what do you do when you're tested on one of the strikes on the call side, the put side? It doesn't really matter. When you're defined risk, the risk profile of the position doesn't change. And the assignment risk is not something we worry about because that as long as you have time until expiration, even if I were to get assigned on this short call back when we got to 360, the risk profile doesn't change because it's still capped risk to the upside. I have this 360 call, short stock, long call is a defined risk position via that spread. It's the same exact risk profile as a spread trade. So assignment doesn't matter. With assignment, the reason for assignment is because there is no extrinsic value. So when you have a position, it's intrinsic and extrinsic value. Those are the two things you have on any option position. With this position, an out-of-the-money position, it is now all extrinsic value, same on the put side. Even with an in-the-money call option, there's still going to be some intrinsic value. There's some value other than what is intrinsic to where the stock is trading. And a quick way to see that, and we can use this 250 strike call just as an example, is to look at the corresponding put. So when you look at this put option, it's trading at, let's call it 128. This is how much extrinsic value is left in this call. And so if some other counterparty were to exercise this in-the-money call and buy shares from you at 250, they would actually lose $1.20 and change just in that transaction. What it means is that just simply selling that call option, if somebody was long this option, would net you more value than exercising that option, taking the stock and selling it at the market, at the current market price. And so with something like Tesla, assignment risk is something that very rarely comes into play. It really only comes into play if you're holding this basically to expiration. We can even see that, this expiration is 15 days to go to expiration. Even in the one-day option, which expires tomorrow, even if you're short the 300 call, which is $15 in the money and was much further in the money yesterday, that option still has value through the next 48 hours or so. It still has $1.30 in value. Same with the put side. Like if you were short puts going into today at 325 or 330, there's no reason to exercise this option because there's still extrinsic value on the upside in the calls. And so the assignment risk is just not something we worry about. Even if it happens, all it is an adjustment to your buying power, and it means that your position has no extrinsic value, so you might as well close it anyway. So there's nothing to worry about with assignment as long as the expiration has not passed through. So that's my rant on assignment risk. On the other side of the coin, we have to close this position because it's a very nice winner. When we look at the trade, we put this on when the stock was at 270 and change. Stock is now at 325. When we look at IV, at implied volatility, you can see we did this when volatility was much, much higher, 74 just about. It's now at 66. So not only have we benefited from the passage of time, we've also benefited from the contraction in volatility, even though the stock has come down significantly, which is not atypical of a stock like Tesla. Tesla typically has that upside volatility skew. So when the stock goes down, you typically see volatility contract. Anyway, we're going to take the money and run on this trade. Let's see if we can get filled below the mid price. We do have markets moving a little bit here. And there we go. We got filled below the mid price at 160 here. We're going to take $138 out of that iron condor. A really nice trade for us Johnnies. We'll call it, about 20% return on capital, maybe a little bit higher than that. So great little trade. Got the move we needed here in the last couple days. So good one for the Johnny Trader portfolio.
What's up, everybody? Welcome to the life cycle of a trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we're going to cover a covered call.
There's a stock that I'm looking at that I like to trade as a proxy to Meta earnings. So Meta has earnings after the close today. One of the stocks that I like to look at is Snapchat. Snapchat tends to move with a relatively high beta to Meta earnings. So if Meta is up on earnings or reports good earnings, you typically see Snapchat kind of have that similar sort of move. And Snapchat at $11 stock, it's still a big company, $18 billion market cap, so it's not a small company. And it has earnings coming up in early February into next week, so that is in play. I think it's an interesting trade for a smaller sized account, $5,000 to $10,000 account is certainly a position we can put on here. So I was thinking of doing just a standard covered call. So covered call is a long stock position, and you can see in a margin account, you get significant relief on the notional value of the stock. The stock, if you were to pay cash, 1-to-1, it would cost you $1,100 and change to be long the stock in a cash secured account or an IRA account. In a margin account, it only uses about $500, $563. You get about 50% margin relief relative to the notional value of the shares. So it's a very capital efficient trade. $500 well within our wheelhouse here. I was thinking we could actually go into next week's weekly expiration. So the 9-day expiration, you can see earnings are on the 4th. So this option will expire the week of earnings. And so you're getting that extra implied volatility, which you can see 140% implied volatility. I mean, February still has very high implied volatility, so you could certainly do that too. Volatility is not the issue here. There's volatility across the chain here. But I want to get into the one that has the most volatility and has the most exposure to earnings, because this is not a stock or position that I intend to hold for a long period of time. This is a trade that I'm trying to make to the upside in Snapchat. So I'm going to look at this 12 strike call. So when we look at this 12 strike call, you're netting out at about 50 to 60 long deltas, which isn't a ton here. At 80 cents, that gives you a max potential profit of somewhere around $160. We can look at this on the analysis mode here. You're getting 80 cents for the call, and you have about 80 cents of upside potential in the stock move. If the stock were to go to 13, you'd make $80 on the upside, $80 on the call. So your risk, so to speak, of missing out is somewhere around 13. We'll call it, 13 just to make it a round number. Above that, we don't make any more than we could have made just owning the stock. So if the stock goes to 12, this is great. This is more than we would have made just owning the shares. Stock goes to 13, we miss out on some to the upside, which I'm not worried about because this is a trade. I'm trying to get in, trying to get out. at the end of next week. So you can see our buying power, $400 and change, max profit, 154 now. With the move in the stock, we missed out on 5 or 6 cents and a penny or two on the option, but it's still a nice return on capital for just a couple days hold time potentially. And if we don't get that move, we can then wheel into our standard covered calls 40 some odd days out in time, close at the money, because I'm not trying to stay in this trade. So we're going to route this here, 1046, see if we get filled on our little covered call position. Long a stock in a small sized account, a rare occurrence. So there we go. We got filled on our trade. We're in at 1047, which means that we've got about $153 of potential max profit to the upside through the end of next week on just about $500 in buying power. All right, so we had Snapchat earnings after the close yesterday. The stock actually was looking to be higher. If we go to just a shorter term chart, we can show just how high it got. So it did, in the overnight session, get into the 13-14 handle. It looked like it was going to be a perfect move for our covered call position, but of course, stock is now down 80 cents from its close, so it reversed that entire move in the overnight session. When we get back into the chart, we are nearing the lower end of where it's been trading here. We have this covered call where we bought 100 shares, sold the 12 strike call against it. When we actually bought the shares, you can see from here, we actually bought them at $1.25, but we sold that call for a pretty decent amount of premium. We could show that on the chart as well. If you right click on the 12 strike call here, we can show what that was trading at the time. So we sold that at 78 cents. When we look at the position net, we're actually up money on the trade. So going back to the order chains here, we're long 100 shares at 11.25. We sold that call at 78 cents, basically marked at zero. So we've captured all that premium, and it's actually hedged us on this downside move. Now with covered calls being long the shares, you can continue to roll this call and participate in this position and continue to reduce your basis. So that's what we're going to do here. We're going to just buy back this call. We're going to buy back the 12 strike call. We're going to go to March here, and when we're looking at this position, we have a couple different options here, right? So our basis on the trade overall is 1047. So even if we were to sell this 7 strike call, or I'm sorry, the 11 strike call for 70 some odd cents, you would think that because we bought the shares at a higher price, we would still be below our basis. But because we've collected so much premium, the 78 cents from the original call and then the 70 some odd cents from this call, this would still leave us in a net profitable position, even if the stock were to go above 11 and we were called away at $11 a share, because we've collected that premium. That's the value that we have here. You could also consider selling like just the 12 strike call. The 12 strike call at 40-ish cents gives you about $1 a day in premium decay with 44 days to go till expiration. It's a little bit cheap for me, so I'm going to lean into this 11 strike call. It's right at the money. If we do get a move above 11, we're set to make about $150 just from the premium that we've sold. That's the 78 cents from the original open and the 73 cents from this rolling trade, minus the 40 some odd cents that we paid above that 11 strike when we bought the shares originally. We go back here. So I'm sorry, 25 cents. So minus the 25 cents puts us at about $125 of max profit if we get above 11 in the next 44 days through the expiration. That would be our profit potential here on this trade. So we're going to go ahead and do this roll, and you'll see our prices adjust here once we get there, and we'll look at that too. So we'll do this at 73 cents. No fill there. Let's move this down to 72. All right, so we're in a 72-cent credit. You can see my basis on this position now is $9.75, which means that if the stock rallies above 11 and our shares get called away, so it doesn't matter if it goes to 11 or 12 or 13, we would get called away at 11. Our net profit on the trade would be the $9.75. relative to the 11 strike would be $125 of max profit on this trade if we rally above 11. Of course, the caveat to the position is that you're capped out at 11. If the stock were to go to 12 or 13 or 14, you miss out on that extra value to the upside, but in exchange for that, you get that 70 some odd cents of basis reduction, which further reduces our overall net position to the 975 you see there on the right side order chain. So we'll see if we get a little bit of a rally into the next 30 days or so and see if we can exit this for maybe $100 profit or something like that. If not, we'll be holding to expiration and let this one get called away. So stay tuned for the next adjustments on this trade. The stock is down $1.50-ish, so it's had a pretty big move to the downside, but we've collected so much premium that we're actually at a scratch on this trade. So the position is marked at $9.72. Our basis on this trade is $9.75. So we're out 2-3 pennies, nothing really. Stock has dropped significantly, and that's really the benefit of covered calls is they hedge you to this, 3 to 5% down move that we have in the stock throughout this duration of the trade. So at this point, we have a call that's basically worthless, right? So we have the 11 strike call. It's trading at 10 cents, 15 days to go till expiration. It's really not helping us at all with this position. There's no more premium. There's $10. It's less than $1 a day in decay throughout the duration moving forward. So we're going to take that call. We're just going to do a simple rollout to April. And now, when we roll out, you could certainly go to the 11 strike call. And I know the 24, 25 cents, it seems like it's nothing. But when you think of it relative to the stock price, with the stock trading, let's just round it to $10, it is a couple percentage points. And if you are doing this consistently rolling for a year and you're collecting 1 or 2 or 3% of a basis reduction relative to the stock, that's going to be a really significant amount at the end of the year or over multiple years, assuming the stock stays range bound. Now, for me on this position, I'm not in love with Snapchat, and this isn't a position that I plan to hold for a super long duration. I would rather just take money and run on this position. So I'm going to go right at the money to the 10 strike call here at about 61 cents. What that'll do is it'll give our break-even price, and our average trade price will be down to like $9.10, which means that if the stock is above $10 at the end of this April expiration, we would make 80, 90 cents on the trade, which seems like nothing, but when you're looking at this position, it only uses $400 or $500 in buying power, so it's still a 5, 10, 15% return on capital here, even more if we get that move through 10. So it's still a decent return on capital, and of course we can continue with this position if we want to, rolling it out in time if we stay around this $9 to $10 price range. So we're going to make this roll 62 cents. We can take a look at the order chains afterwards. This will reduce our delta down to, somewhere around 50-ish long deltas because we are selling the 50 strike call. If we can get filled here. There we go. Oh, we got price improved. There we go. All right, so we rolled that call to the 10 strike. Our basis is now $9.15, so we have $85 of potential upside if we do get this move above 10. So stick around. All right, so we have a Snapchat position here to manage. You could see our average position cost is $9.15. So we've reduced the basis on the stock by $200, almost 20-30% here on the stock. So nice little basis reduction on a small little Johnny trade stock here. It's basically kept us in the game with only a 60-cent loser. It's basically a nothing burger. So Snapchat, it's a trade that frankly I've had on for long enough, and I would be happy just getting rid of this trade or being out of this trade into some sort of up move. So for me here, I'm going to make the decision to just sell the at the money call. It's a very small buying power requirement position, a couple $100, so I don't need to close the trade. But I'm happy to hold it for another 30 or 40 days if I can make, $50 to $100 on this trade. It's very, very small buying power requirement, still be a high return on capital. I'm going to take this trade and we'll roll to the 10 strike here out in May. We're going to continue with this dream. It's a 50-cent reduction. It puts your basis basically right where the stock is. Hopefully, we get a little bit of an up move over the next 30 some odd days, and we could close this trade within, the next 30 or so days. 9.5 on the stock would be absolutely perfect. It'd be a $50 or $100 winner. Of course, if it blows through that, it does have earnings coming out on April 24th. If it blows through that strike, beautiful. I'm out with a very nice profit. It'll be a $150, $200 profit if we get above 10. So we're going to make that roll for 50 cents here, about $1 a day in theta decay, just based on the duration left on the trade. Let's see if we can get our 50 cents. No 50. We'll get to 49. All right, so we got filled for a 49-cent credit. I know that sounds very small, but when you're dealing with a sub $10 stock, it's a 4 or 5% reduction in basis. So a nice little get for us here in the Johnny Trader portfolio. All right, so we've got a position to manage here. We've got Snapchat. They just reported earnings yesterday after the close. The stock was trading around $9, exactly where we needed it for this cover call position that we've continued to roll. We've been selling calls against it on this way down. The stock, after earnings, drops all the way down to $7.73, basically a new low here in the stock, or just about the lows. Our position, we're only down about $95 with all this premium that we've sold. So we bought the stock at $11.25. It's now trading at $7.75-ish, and we're only out about $100. Our basis on this trade is $8.66. That's including all the credits that we've collected along the way, with the mark of the position at $7.71. Now, we had this call that yesterday was trading a lot higher than where it is right now. It's trading at about 50, 60 cents. It's basically at zero now. So what we're going to do is we're going to continue rolling this position. We're going to fight the good fight here, see if we can get this one back to a profit or close to it if we do get a rally. So again, our position, when we look at Snapchat, our basis on this trade is $8.66. So if the stock were to get to, $10, $11, that would be perfect for us here. So if we can take this position, we buy back this call, we can roll this out to June. Now, when we're looking at the June options, they are very, very cheap. And that's because the stock is very, very low, obviously. So one of the things that you can do to the upside to sort of give yourself extra potential value to the upside here is to do a call ratio spread. So we certainly could sell this call, let's say the 9 strike call, at 27 cents. And if the stock does rally, we would get called out at 9. We'd collect another 27 cents and make us like a 50-cent profit or so on the trade. In a trade like this, where the stock can only go to zero, and hopefully it doesn't, we want to get some more bang for our buck to the upside. So what I'm going to do here is a little bit of a interesting trade here. So I'm actually going to do a call ratio spread to the upside here. And what this does is this gives us from 8 to 9, we actually have the ability to make $200 on that move because we're long that 8 strike call and the stock at 7 and change. So if we get a move to 9, we would actually make the $140 on the stock move, but also another $100 on this move to the upside from 8 to 9. So this would actually give us, an extra $100 or so in profit if we can get a move up to 9. So this sort of accelerates the upside here on a trade that has gone very much against us. It's almost like a doubling down on a long delta play here. So it does cost a small debit for this trade, which I'm fine with. If we get a move to 8.5, that's still a positive for the position as a whole. So we're going to make this adjustment here. We're going to roll into a call ratio spread into this move, and we have to buy back this call too, so we can put that in there too. So it'll be about a 10-cent net debit on this trade. There we go. So we did that for a 10-cent debit. You can see our basis on this trade is 876, which means that if we get a move up to 9, the basis on this whole position would be basically a 24-cent profit. Plus, we have this dollar of potential value between 8 and 9, which would net us out at $125 profit if we can get to 9 within the next 51 days. So stick around. All right, so we have a fairly unique situation here with our Snapchat position, which we have been in since January. You can see I now have 200 shares of stock here at a basis of 962, and that's because I actually got assigned on a long call that I had that expired slightly, like 2 ticks in the money for the June expiration. I was actually out of town for when this happened, so it was a little bit of a surprise when I woke up to see that position. It was on June 20th, so when we go to the chart here, you can see the close was at 8:01 in the upper left-hand corner there. 8:01 was the close of the session, and so my long option was actually exercised. It was part of a ratio spread that we had done a little while back. We did it for a 10-cent debit. We rolled from a 10-strike call that we were short to an 8-9 ratio spread. So I actually got long another 100 shares of stock at 8, which puts my overall net basis on my $2 cost averaging, for lack of better words, at 1160 and change, and then at 8 puts me at that 960 basis for my stock position. So this overall is actually a nicely profitable trade. So what I do is I go to the history transaction tab. So like when you go here, you go to the history tab, you can type in the symbol, you can change all these filters. I did the year to date. It'll add up like commissions and fees and the total amount of the premium that you've collected. So this is an interesting thing to use when you're looking at stock positions, because it takes all your options and stock positions together. You can even select specific spots. So here, this is just my shares. So you can see my shares. I have 200 shares at $1,900-ish, which comes out to be, you know, about $9.50 or 60 cents here, just rounding. When you take that off, it actually includes all of your credit and debit and rolls, all that good stuff, which means that my total basis on these 200 shares with the premium that I've collected is about $800 and some odd here. So we'll call it $845 a lot. So we have a couple options here. Do we continue with this trade or just let this one go and take the gift that we got here? And I think that we just take the gift here given the move that we've had. So when we look at the going back to the chart here, you can see my basis on the stock 962, but that doesn't tell the story of all the rolls that we've done with this trade. So we're gonna go here, we're gonna sell out of these 2 shares of stock. Maybe we roll into a new short put into maybe a down move here at some point. So stock's up 10% today. It's a good one for me. I'm out. So we're going to close this out at 950. We'll see if we get filled here. Not that I need that buying power back, but we could see here. So when we close out of these shares, you can see my order chains here. So we started this as 100 shares, selling the 12 strike call. We did that at 1047. We've been rolling. We rolled again and rolled to an at-the-money call ratio spread to try and get a little bit of a move higher and close out into that move to 9. That would have been a perfect situation for us. We actually got assigned on that position on that 8-strike call and ended up closing it today at 950. We net out 200 some odd dollars. A nice battle. You know, you got bailed out on the stock. The stock moves 10% today. It's great. Yesterday we were about a scratch on this trade. We made most of the money today into this move, into this, you know, 80-cent move times 2, 160. You know, that's most of our profit here. But really, the mechanics here just shows you that just over time you can reduce your basis, collect some premium, and overall, you know, give yourself a lot more a higher probability of potentially exiting for a profit. So good little trade for the Johnnies. Happy about that one. What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind the trade entry, trade management, and the closing order.
In this video, we are going to cover the crab trade. All right, looking at a stock here that has earnings after the close today. We're talking about Google. Google is currently trading at about 190. It's had a really nice rally to the upside. I tend to think into this earnings season that we're going to see a lot of inside up moves in some of these big name tech stocks that have really exploded to the upside, with the market basically at highs today, up 14 and change. It was up about 25, 26 at one point today. So the way that I'm going to play this is for an inside up move, and I'm going to do this with an upside crab trade. And so typically I like to go, 30 to 60 days out in time for this play. I'm actually going to go into the August expiration here, so 23 days to go till expiration. I typically like to buy around a 40-ish delta, so I'm going to go to around the 195 call. In the short term, I'm going to go into the 2-day option. So we have earnings after the close today, so I want as much exposure to volatility as possible. Implied volatility in the weekly expiration is at 80, so very high implied volatility. And it's going to be a very, very juicy premium on these options. I'm going to play to around the expected move. So the stock is about a $10 expected move, puts you at a nice round number of 200. That's where I'm going to go here for this upside crab trade, a calendarized ratio butterfly. Very interesting trade here. So I'm going to look at the 200 strikes. So we typically sell 2 of those. And then you'll see it uses about $3,000 in buying power. Way, way, way too big for my position here and for my account. So I'm going to have to define the risk with a wing here. For me, I'm going to go to the 210 strike just to make this, pretty reasonable amount of buying power. Uses about $700 in buying power. It's a $2 debit. I have an extra $5 of risk, and that risk is above 205, so 205 to 210. I'm synthetically short this spread. That's where my risk is. So net on this position, I'm selling about $4.50 of extrinsic value here. I'm buying 50 or 60 cents here. So I'm selling, $3.90, almost $4 in extrinsic value that goes away at the end of this week. When we go to the analysis mode to just look at this trade, one of the things that I like to do is to synthesize the movement in the stock, or at least the passage of time, right? So on the analysis mode on the right side view here, you can actually move time. So you'll see the risk profile here. I have the Theo zones here. So it's looking at the theoretical profit. This hard line here is your at expiration line, which is a little bit skewed because you have 2 different expirations here, so you have to keep that in mind. I really like using the Theo on when I'm analyzing my positions here. So we're going to look at this trade here. We're going to move, one day and then go another, and we go to the end of the week here. This is kind of a skewed graph because you just have that one day, but we'll go back to Thursday just to show this a little bit better. Assuming that you get an inside up move, you probably get a vol contraction. So here we can actually use this, remove the per strike IV and just use the contract. We can crush this vol even more. You're probably going to lose some vol points in the monthly expiration as well. And you can see it's a high upside potential trade if you do get an inside up move like we are thinking, or like I am thinking, into earnings here. The great thing about the crab trade is that you're selling a ton of premium. So you have a lot of premium that you're selling here that's going to all decay towards the end of the week, and thus gives you a little bit of a break even to the downside. So even if the stock opens flat or maybe slightly down, we're probably going to be okay on this trade just because this option is going to hold its value, and these 2 options are really just going to go to zero. This $3 or $4 in extrinsic value is going to go down to 50, 60 cents, something like that. Of course, if the stock has a big move to the downside over the expected move,
you're going to lose some money here, and that's just the case with pretty much any trade that you put on that has some directionality to it. So we're going to get filled here. It's a cheapie, $2 in risk. If we get a big move to the downside, that's the most I can lose. My upside risk is above 205, which is probably near highs, or yes, so just under the 52-week high here. So I'm okay with that. We'll try at 210, see if we get filled here. There it is, 210 on that upside butterfly trade, that crab trade, calendarized ratio butterfly. Stick around because we're going to have to manage this trade moving forward. All right, so we got a nice little winner this morning after earnings. Google is up $4 and change right now. It got as high as 97 and change here. We did this upside calendarized ratio butterfly crab trade is what I like to call it. One of the things I want to look at is just the implied volatility, about 40% here. You could also see the IV rank was about 41 and change. We're now at a 19. So we've had a huge vol crush as well. One of the things with these types of trades, that the reason these work so well, if you get an inside up move, which is exactly what we were playing for, is that the premium that you sell also decays in your favor. And so when we go to the change here, you can flip down to change. We've taken about $3, we'll just round it between friends here, $3 in premium in extrinsic value out of these short calls because we have 2 of them. On the long call, of course, we're going to lose some of that, so we're going to lose about 50 cents on that. So we've made about $2.50 on this short premium part of the trade. When we go to the August option, it's barely moved. So when you're looking at earnings trades, a lot of people just go to be super directional, buy calls, buy puts. This is a prime example of getting a move that you would think would be good for your position. If you were just naked long these 195 calls, you made a couple dollars, but nothing significant, even though the stock is up $4 or $5, and that's because of this vol crush that comes in. We had a 48 implied volatility on this expiration. It's now a 40. So you have to, the move has to be greater than the implied move for you to be profitable just buying long calls or puts. And so, the reason this trade worked was because of the huge decay that you get from that short-term premium, the short-term options here. So we're going to go ahead and close this position out. It was a perfect trade. Not much more to do here. We're going to close this out and try and get, $200 and something in profit here. If we can get filled at 255 maybe. Let's see if we get filled there. Be a $245 profit. And we're just routing the opposite order here to get the position closed here. All right. There we go. We got filled as I was canceling and replacing. So we got filled there at a $2. I'm sorry, where is let's see, our activity. So $2.50 credit to close that trade. That'll net us out a $240 profit, a really nice trade here on the books. If we look at our closed orders here, it's a nice little trade for the Johnny traders. So perfect move for us on Google earnings, inside and up, a huge vol contraction, and a nice winner for the team.
Welcome to the life cycle of a trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we're going to cover a batwing trade.
All right, so we've got a little bit of a sell-off in the market. E-minis down 50 here. Tons of news actually happening in Israel and Iran. You've got a plane down, Boeing, kind of taking a hit. A lot of the airlines have really suffered into this move. UAL, one of the higher volatility on the board, down $4 and change. We're trading at 74. Who knows where these things are going to move, because they move a lot and they're very event driven. So I think it's an interesting time to put on a trade that we haven't done in this little Johnny account, small $5,000 to $10,000 total risk here in the portfolio. We're going to put on a Batwings trade, or a Batman trade. It's going to be a double ratio. So You've seen me do put ratios and call ratio spreads and broken wing butterflies. This is on both sides of the stock. So you can think of this as very similar to a strangle with a kicker where your short strikes are. So you give up some of the premium that you get from a strangle to get this wider break even and this higher profit potential if you do pin one of the strikes. So let's go and set up our ratios. We typically go to around a 30 delta, 40 delta for the long option. And then I try to be as wide as possible. So on the downside, I'm going to look at this. I'm going to look at the 70 strike. On the puts, I'm going to do the 65 strikes. So do that 2 times. So that's our standard put ratio spread. And we could check this out on the analysis mode here. You can see down to 65, I'd have $500 total profit potential with the credit I got here. I'm doing it at 40 some odd cents. On the upside, we're going to let's do the 80-85. And so we'll have a ratio spread on both sides of the stock. What this will look like when you go on the curve mode is it looks kind of like bat ears or bat wings here. A Batman logo really is what you're looking at here in terms of our risk profile. You can see very much like a strangle, if the stock stays range bound, you'll keep up to the credit amount. So you can see we're trading at 85 cents here. Between 70 and 80, which are our long strikes, we would keep that 80 some odd cents. If we get a pin at the short strikes on either side, we can make up to $500 more in potential profit. Now, essentially what you're doing here is you're buying these spreads. You're buying this call spread, you're buying this put spread relative to the strangle that you're selling. The strangle we're selling for $3.50, $4. We're giving up, $2 or $3 of that premium in terms of extrinsic value to buy these $500 potential shots on either side of the stock. So it's a relatively low probability in terms of getting that $500 on either side here. I mean, you're talking about 10 to 20% total of hitting one of the call or put spreads, basically pinning at the short strikes. But this is a trade that has a really wide risk profile. So we have no risk up until about 90 on the upside, 20-ish points to the upside, and 20-ish points to the downside. Our risk is around 60. If we chop around here, and stay like at 75, the worst case scenario, so to speak, would be keeping the 73-cent credit. But these options are always going to hold value. So even if we chop around here, as time passes, the tail options, the 85 and the 65, are going to decay a lot quicker than those at-the-money long options. So there is profit potential to be had other than the credit. This is a trade where we can actually close the trade for a credit as well as the opening trade for a credit. Use a little more buying power than I typically like to use, about $1,000, but this is a new trade type, so we're going to go ahead with it. You can see the bid-ask spreads are wide here, just given that the market's moving. There's a little bit of volatility in this space. You're routing 6 total options, 4 legs with 6 contracts, so you should expect to see bid-ask spreads a little bit wider. We're going to start this up at 90 cents. And just work our way down from there, or we'll get filled right at 90 cents. And so there's an example of why you have to do price discovery when you're looking at option trades. Had I routed that at the mid price, I probably would have got filled right there. And so we got filled at 90 cents on that. A nice little fill there for us. All right, so looking at our United Airlines position, it's trading at $83.44 right now. E-minis are actually down 23, so this is kind of going contrary to where the market is moving right now. Stock has had a nice little rally. Stock is now, $7, $8, $9 higher from here over the last couple sessions. We did this when the stock was trading in this little range here. So there is one thing coming up that that adds a little bit of extra risk to this position, and that's earnings. So earnings, you could see the icon on the trade page here, July 16th, is when earnings are, and you could also see it on the right side, quote, details section. you'll see this bell icon. The bell indicates earnings. The arrow tells you whether it's before or after the bell. The arrow is after the bell on the right side, so it's after the close on the 16th. The expiration here is July 18th, so you have earnings right before the close, just a couple days before the close in the middle of next week. So with earnings, you obviously have a binary event. Anything can happen. And so for me on a trade like this, where the one side of this trade is essentially worthless, we can even look at this here and just kind of look at what value is on the table, maybe a couple pennies, if that, on this put spread. It probably traded 3, 4, 5 cents credit for us to close this trade, because this closer at the money option is worth a little bit more. So, or maybe a small debit. It's basically worthless. It's essentially worthless. One of the things I like to do with ratio spreads, especially when you have one that is far out of the money, is just kind of remove the risk on the trade, but leave yourself with that shot, right? So when you look at this put ratio spread, I'm long this $5 wide put spread, and I'm short an extra 65 strike put. So my risk is $5 below this 65 strike put. So this 60 strike is where my risk starts on this trade. If I can buy this put for cheap, which it is, very, very cheap, 15, 16 cents, I can have this 5x5 butterfly for essentially free. So when I put this trade on, I had a 90-cent credit. If I buy this option, it puts me with this free butterfly on the downside. I still have risk on the upside with this call spread. But I still have a net credit of 75 cents. So if the stock were to go to 75, I wouldn't really be worse off than I was with the ratio spread. It gives you that extra shot to the downside. It's buying in the risk on the downside. It still has upside risk, which I'm comfortable with. The risk to the upside is up to 90 and change, which is roughly where the expected move is. When you look at that on the chart, it's all the way up here. It's where I start to see risk, and I can always roll and manage this trade. So maybe that'll happen on earnings. Who knows? But I'm going to go and just buy this put and just cap the downside risk that I have into a binary event like earnings. I like to do that. Gives you a free shot. If you had a move to 70, this extra put might get you 20 cents more. It's not a big add to the profit potential, but it does take a lot of risk off the table. So I think it's a prudent move. So we're going to see if we can get filled on this relatively cheaply by just working our order up from here. I'm going to try, hopefully get 15. There we go. 15 cents on this put. So when we look at the order chains here, we'll now have both of our orders here. We're down net 14 cents on this trade, basically a scratch as it is. We now have this risk-free butterfly on the downside with this upside call ratio spread going into earnings. One of the things we can do if the stock does rally significantly is we could buy back one of these calls and roll out to August and roll into a strangle. Maybe that'll happen here, and we'll be able to do that in the next week or so. So stick around, because we're definitely going to have to manage this trade moving forward. All right, so we've got a position to manage here in our portfolio. UAL, it reported earnings this morning. The stock is currently trading at $90 and change here. It's up pretty significantly. It had a big move on the Delta earnings last week, kind of something we call a sympathy move, where the other stocks in that space, in this case airlines, if one of them has good earnings, you typically see a little bit of a bid in many of the other stocks in that industry. The trade itself is basically a scratch. We're up small here. We'll call it a 40 cent or so profit on this trade net. But the stock has moved significantly. We're in the money on the call side. There's no assignment risk here unless we hold it into tomorrow. But even if we do, the position, the risk profile doesn't really change on it. But I think this is an interesting point to close this current position and roll into a new sort of trade out in the August monthly expiration. So with a ratio spread, you have a long spread, which is part of the trade. You're naked a call on the upside here in this case. This spread is at max value. It'll trade for around $5. I know it's marked at $5.05, but you're not going to get filled there. And we can even try and get filled on that now and just show you, because there's always going to be some sort of value to this spread to the counterparty. You can see it moved right there, but if we put this at 505, we'll just call it. We're certainly not going to get filled on this trade. We'll go and cancel and replace that in a moment, but it's trading at basically its max value, probably a penny or two below. And this is another good example because it's not going to trade at 472. You have to watch your prices here. In the money options are going to typically have wider bid-ask spreads. You can see them here. If you go in at mid-price, you probably get filled somewhere, you won't get as good of a fill as if you just put in a limit order here. So I'm going to put $4.99 because there's probably a, 2-3 cents of extrinsic value left in this trade. So we'll try at $4.99 and then we'll replace it. And of course, there's no cost to doing this, of course, with canceling and replacing orders. You can miss out on stock movement, but no issue here with the value itself. There we go. So we got filled at 497 on that spread, on that part of the trade. Now we have this naked call. What can you do with a naked call? You can roll it out in time. So we're not going to roll to a ratio spread out in time. We're actually going to roll to a straddle / strangle because, at first we wanted to kind of be neutral to stock. Stock has rallied up. I want to now lean a little bit short, but I'm going to reduce that by turning it into a strangle. So we're going to roll to the 85 strike call. We're going to keep that same strike call, and then on the put side, we're going to sell the 85 strike put. You'll see that the overall delta here is going to be reduced by about 50, and that's because we have basically short stock. This will take us from a 90-ish delta option to a 50-ish delta position. We're going to still want by delta, it's short delta. We're still going to want the stock to come down a little bit, but we're still, we're reducing some of that delta exposure and adding extrinsic value. You can see we're doing this roll for $3.91 credit. We're going to actually move this higher and see if we can get filled a little bit higher than this because these bid-ask spreads are very wide. So there we go. We got filled on that at 414 on that, or I'm sorry, we got filled on that for 414. Yes, on that. We actually put the limit in at 410, got filled at 415. So really got price approved there. So we now have on this position a $10, minus this 15 cents, well, 980-ish. In value on this trade, 986 to be exact. It's currently marked at 976, so we're up about $10 on this trade, but really our break even on this trade is going to be $10 up or down from our straddle, so 95 on the upside, 75 on the downside. So we're going to hold this position, see what happens moving forward, so stick around and see how we manage this going forward. What has happened since then? We've had a ton of time pass, so you can see we did this on the 17th. We've had 13, 14 days of time decay on that position. That has helped significantly. Even when we're looking at this short put that we sold this at $1.93. It's come in and it's trading now at $1.32. So we've made a 60, 70 cent value back on that. We've also made value back on the call roll. So the call, when we rolled that option, this call was trading at $7.78. It's now trading at $6.60. So we've made $1.10 back on that option as well. And so that all comes with the fact that UAL has had sideways action, drifted a little bit lower, which is what we needed with our straddle being short delta, but has also, had some time decay, a little bit of volatility contraction. When we right click here, you can go to the view market snapshots. You click on the view market snapshots. You could see when we originally sold this trade, we had a 65% implied volatility. We're now sitting at 44. Our adjustments have been done when volatility has been relatively low. So we go to IV rank. You could see even on our adjustments, we've had a little bit of a vol contraction, not much, but vol has been relatively low. We're just managing this losing trade to see if we can get a little bit of sideways action and some time decay, most importantly, out of that trade. And so when we made these adjustments, you could see the price has been hovering around 90, and what that means is that the value of this spread has come in mostly because of the time value change here. The value of that time decaying has been an extrinsic value decay on both the put and the call that we sold without really the stock moving or going anywhere. The stock's at 90 right now. We've done these last 2 adjustments when the stock was at 90. So this trade has worked out perfectly for us. We needed this sideways move. Volatility is super, super low here. You could take this and roll this out in time, but just given volatility being low, I'm going to be closing out of this trade. When we close this trade here, it's going to be a $7.80 or 90 cent debit to close this trade. It's going to release $1,800 in buying power. A lot of that is just due to the fact that the position is in the money, so it's in the money by $5 or $6, which means we're going to use a little bit of additional capital on the trade to hold the position. So we're going to free up that capital again and book a $200 and some odd profit here. Let's see if we can get filled a little bit below the mid price, and we'll work our way from there. Got UAL rallying a little bit, which is why the spread is moving against us. Let's see if we can get $8, make it a $200. There we go. All right, so we got filled at $7.99 on this spread, so this nets us out at a $202 profit on this double ratio batwing trade turned into a straddle with our roll. Nice little return on capital of 10-20% in just about a month here. So a nice little trade here, a nice win for us after earnings. Taking some heat on that one, definitely, but a good little adjustment, a nice vol crush, great time decay. So good little trade for the Johnny Trader portfolio.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
If you missed the live show, here's our cherry on top weekly recap.
First of all, I'm sitting in the captain seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And then he's still doing this.
Snow, let's take a look.
Not hold that rally at all.
Phil, you got a partial.
973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I've got my man Mikey Butler with me as always. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just coming with us for the next hour of the day. My favorite hour of the day, get to spend it with my buddy, Mikey Butler. Good morning, sir. I almost forgot about my intro. Like I was so used to, the morning intro that I almost stumbled there.
Listen, I get it. It's been a minute since we've done this show. It's been a minute since we've done it remote.
Yes.
I'm having camera issues. I'm using the old school laptop camera. So we're making it happen though. We're making it happen.
Yes.
I like your party shirt.
Thank you. I got my Stonks hat. Stonks are moving.
Perfect. That's amazing.
Yes.
Yeah. The market's partying, so we must as well.
Yes.
It's kind of hilarious that this is the reaction. I think the fear was real, and then Jay Powell, probably a couple beers deep, was just like, nah, we're cutting.
Yeah, it's over.
A couple mimosas deep, but yeah, now we are back at a 90% probability for a 25 basis point cut. So they basically zapped out that probability of no cut. And the market is completely reversing the sell-offs that we've seen over the last couple of days.
Yeah, pretty wild move. We've reversed the entire move. I mean, we are back at new all-time highs, or just under, I believe. Just to take a look here, if we look at like the SPX, the high was 64.81, so we're basically there. I mean, we got to 64.78 was the high of the session today, so we're just a couple points off all-time highs. But you are very correct. It has been just a face ripper across the board. Just to give a quick little market update, you got even the S&P 500 futures just under 6,500 right now, up 101, a little over 1.5%. You got the NASDAQ up 367, the Dow up 975, and the Russell up 92. The Russell moving 4% today. It's got to be one of the bigger candles we've seen in the Russell here. That's on the backs of everything that happened with the speech in Jackson Hole and the rate cuts. You've got bonds currently up 26 ticks at 114.15 right now, near the high of the session here. Rate projections obviously coming in, as Mikey alluded to as well. Oil futures 63.58. Who cares about that when everything is moving like this? Basically unchanged. Volatility futures 17.21. So they've come in over a point and a half, or just about a point and a half here, a little over 7%. Huge move in volatility. The VIX itself all the way down to 1453. They have just taken vol to the woodshed here. You have gold up $35, silver up 92 cents. So you have metals moving like crazy. You also have, of course, Bitcoin. Can you guys pull up the platform? Do I have the platform up? Do I need to pull up? There you go. Yeah. We got Bitcoin moving $4,400. It was up about 5,000 and change here at one point this session, as well as Ethereum up to basically highs here, 47, just under 4,700 here. Crazy move.
Yeah, I mean, kind of funny. I think it's just funny. But we were prepared. We did position for this, I should say. We
To
had
some degree.
to some degree. I mean, it was all small, very small positions, but a lot of the fast market trades were upside trades.
Yes.
And the research team trades, like the GM call vertical that Dr. Data presented, I closed that.
I did too. It's funny
yeah,
because
I mean,
we don't even talk about this pre-show, but we tend to do basically the same exact thing, which is a testament to our content here.
Yeah, I mean, when you get a 100-point move for the first time in a long time to the upside, and you have winners on the table, it's kind of a situation where the market is moving so fast to the upside. Like the expected move today was 50 points. We've doubled that to the upside. So I think it's an opportune time to take off some winners and remove some risk, especially if you place these trades like last week or this week and you're at 30, 40%. Or even like 25%, if it makes sense monetarily. There's some trades that I'm leaving on because it doesn't make sense monetarily, but there are trades, a lot of trades that I closed today. If you want to quickly run through those. But yeah, so silver, call zebra in October, closed that for $120 winner. That was like 50% of the debit paid.
Yep.
Tesla,
and that was in like what, 2 days?
Yeah.
I mean, it's unbelievable.
Yeah. Then Tesla, we put on that call calendar. So we bought the dip in Tesla. I think that was from What's Your Assumption? That was a $125 winner in a couple days. GM, that was a trade we placed yesterday. That was a really small trade though. It was a 2-point wide vertical spread for $1-ish. It was risk one to make one, and you got 50% overnight pretty much. Open, that short put at 4, I closed that for a 45-cent winner. That was another one where it's just like, I don't need the risk there, especially with the option that I sold was what, $1.30, and I bought it back for 80 cents. So basically 30, 40% profit. Kava had the call diagonal there, long to 65, short to 75. It was a November, October longer term one. That was an 85-cent winner. SoFi, the 2025 call diagonal, same expirations, November, October. That was a $112 winner. And then ETH A, I had that wide diagonal on long to 30, short to 40, November, October, and that was a $140 winner. So I removed what? 1, 2, 3, 4, 7 positions for around $100 average. But that removes a ton of risk in this portfolio for sure.
And it also legs out of long delta because those are all long delta trades. So, we've talked about this before of like, wanting to get delta at certain points, whether you want to be short or long. Closing positions and taking risk off the table is synthetically a way to do that without putting risk on. And so by taking off all those long delta trades and booking the winners, which is great, which is one piece of the equation, you're also synthetically getting short delta because you are selling out of long delta positions. And so, you are getting short delta now at much higher prices, which is what you're trying to do. And so, good job out of you. I did similar things. Like I closed out of the Tesla put spread. I closed out of the Lulu put spread. Those were 2 trades that we put on very recently. In my Johnny Trader account, I closed out the Apple Iron Condor that we had. Volatility coming in really nicely there. And then I closed out the GM trade as well. It's just one of those days where everything was kind of working and you just take the money and run there.
Yeah, and this is something I've learned over time. There were plenty of situations historically where I would see a move like this and I'd be like,
I want more.
Yeah, but you always have to remember, if the expected move is 50 points and it's a 100-point move to the upside, your position is benefiting from that 2 standard deviation move. Yeah. So I think it's always good to remove risk and then reset on Monday. Even if the market's up 100 points, whatever, like it's still an opportunity to do other things.
Yes, for sure. Some of the biggest movers in the market here, pull up the S&P 100 list. It's basically all green. I'd call it a 90% green upside day. You have Dow Chemical in there. You have FedEx. Tesla is one of the biggest movers. You got like Caterpillar. I was looking at Home Depot as well. You mentioned closing out of your open trade, which has kind of been in the meme land. But I also saw like Rocket Labs was up 19 and change here. You have a lot of the rate sensitive stocks kind of moving higher rate, homes, stuff like that. That's kind of what I attribute the move in like Home Depot to, and Lowe's has been very, very strong. So maybe there's a little bit of that there. On the downside, it's really nothing. I mean, you got Intuit, which had earnings after the close yesterday. You got like Costco in there, which has come off a little bit. You got Walmart, Netflix, but really it's been across the board, pretty much a buy the dip. You got, Meta bouncing off of kind of the lower end of where it was trading. Nvidia was down like $2 or $3 in the overnight session. It's now reversed that whole move. It's up $2 and change. I mean, like that's a pretty big move. I mean, it's at a $7 intraday range today, including the overnight session. So, that's a huge move. You got stuff like, Amazon up $5 or $6 at one point today. Apple as well. I mean, it's been super, super strong across the board. It's been just a face ripper.
Yeah.
And vol getting just smashed too. I mean, that's another part of the equation here.
Yeah. I think the probability shift in the interest rate cut plus vol smash equals the market is saying, up and to the right from here.
Yes. Another thing that's moving huge, which I actually closed out of my positions. I don't know if you've looked at this yet, but the U.S. dollar getting absolutely hammered today. If we look at the dollar index, having a huge move lower. I had a short euro or short USD Japanese yen position that I took like $30-40 out of. I also had that New Zealand dollar position that I also took about $20-30 out of that. So if you have your Tasty FX positions that have any short US dollar to them, you are probably printing a little bit today.
Printing. Yeah. I'll take a look at that for sure. But yeah, all those positions I had were super smare.
Yes. Yeah, but they might be up like 20, 40, $50.
Yeah.
That's kind of how we structure them, right? I mean, we are trying to diversify our positions a little bit, but it is very, very leveraged, those products. So, taking $50 on $100 in buying power requirement is a pretty easy trigger to pull. And the one click is just fantastic.
You love the one click.
I do love, and it's just great.
And setting the profit target stop loss on the chart. That's big.
Yes, that is very good.
That's what you call it. Huge.
Yes.
Huge. All right. Yeah. So a lot of activity for sure. Hopefully there's people out there benefiting from this move. But yeah, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. And we can kick it off with Brett. Any adjustment to the IBIT strangle feels like it could be time to roll to October.
Ooh.
Let's check it out.
I mean, this is the Bitcoin move has been fast and furious. Ethereum as well. Ethereum at the highs of the session up 10%. Wowza.
Love to see it.
What do you got on, Mikey? What's your position? September?
Yeah, I have the September 65.75 strangle. 28 days left. So yeah, let's take a look here.
Yeah, maybe you just roll this. I mean, this is a huge move. You probably made a boatload back today. So, yeah, you made about $130-ish on the move today.
Yeah.
Just based on I just pulled up the change here. So, the put lost $1.42, and then the call gained about 16 cents. So you netted out the difference of those two. So nice little $120-$130 move today on your position.
Indeed. So yeah, if we rolled this out to October,
go to 65.75.
Yeah, 65.75. Let's see. Yeah, we're getting a little bit of an IV boost here in IBIT.
Yeah.
A little tiny bit. But yeah, I will put in a working order to adjust that. Yeah, pick up another $1.50 or so.
Why not?
Yeah. Yeah, we're getting there.
Yeah.
And yeah, if you wanted to hold it, totally fine too. This position still has 220 bucks of extrinsic value left. If you wanted to kind of press and see if you can get more out of that and then roll the same strangle. But yeah, love where we're at with that position. This is by far the best year-long position I've had. And we are.
Let's not jinx it.
I've literally had no distress in this position at all.
Yeah.
Like it's really just been, and it's also been an eye-opening experience too, because I said before, I never want to have short delta in here. So, and I've never had short delta in here. Even if it was for a day where IBIT was ripping higher, I would just move the whole strangle. If I was taking on heat on the short call, I would just move it up. So I would shift my heat to the downside. And I think this is a powerful adjustment. Let's say you have a bigger account and you're selling strangles in SPY or SPX for a core position and you want to lean bullish. That's something you can do. You can collect premium on both sides. If you get tested on the upside, just shift the whole thing up. And right now, like this is a beautiful position. I've collected $2,100 over the last 6 months, and it's marked at $200. So I've made 90% of the premium here, and it's been choppy for sure, but it's been a really nice trade.
Yeah. People pointing out ETH, the volatility is just exploding there. 109% or 109 IV rank, 91% implied volatility. I have this iron fly that's now leaning a little short. I was right at the money yesterday. It was a perfect position, but I think I got to add something here into this pop and vol, maybe a wide iron condor here.
Yeah.
Let's look at where our deltas are. Go around the 30-ish delta, do the 30-45. Just buy the wings. For like $2.
Yep. I like it.
Yeah, $2.52 of $2.46. Let's see if I can get 250.
Yeah, and while you're working that, there were some other positions that I had on that I did not close. So like the Coinbase call calendar, the 350 calendar, long October, short September, I got back $170 today. It's basically a scratch, but this is a position I kind of want to have on into this kind of move. So there's a handful of positions that are a scratch, maybe up 20 cents, 30 cents that I'm leaving on because those positions don't necessarily make monetary sense to close unless it's a position that you've been battling for the whole month and now you're at a scratch or a small profit. Like that's a different story, but just wanted to call that out. Same with gold. So I have the gold symmetrical butterfly, the 3480, 3500, 3520. 7 days left. It's marking for 35 cents, but I already have a risk-free $100 in there. This is a position I want to have on because we're basically 100 points away from this being in the money. It's totally possible over the next week for that to happen, and if it does, this 40 cents of value turns into $400. So this is another one where I'm willing to take the shot here because I already have a risk-free butterfly on, and I know I'm making $100 regardless.
Might be time to put something on in here into this little rally. 3,400. We're back right in the middle of the range. Maybe do like a 35, 33 or something around there. Let's see. We could go. I had the position on. Let's see what this one's marked at. So this one has come in pretty nicely. I could do like the go to around the 1 standard deviation. Let's see if I can do like 15 points wide and close to $5 here. And do like the 35.50, 35.65. Let's move this in a tiny bit. Let's go to around the 20 delta. We'll do the 20 delta on the downside too.
Lovely.
Yeah, so around 1/3 the width of the strikes, a little bit wider than a typical spread, just because with span margin, you only use, a fraction of the buying power that you would with a equity position. So you're only using about $600 in buying power. You have $1,000 in max risk. I think this fits to play for that, more of that sideways action here.
Yeah, for sure.
$5 on the dot.
Love it.
Yes.
Love it. Love it. What do we think about Costco Iron Condor for September? 930, 1020 shorts. 10 points wide.
I got some long delta there. I'm short a put spread that's right at the money now. I probably should have taken this off. I was looking at it 2 days ago or so when we had that nice little rally up to almost 1,000 there. Yeah, we just got just a tick under 1,000. I was trying to close it for like a 75-cent winner. I just never got filled, and now I'm out that 75 cents and then some, unfortunately.
Yeah. Sometimes it'd be like that.
Mm-hmm.
Yeah. Let's see.
What are you thinking?
So I don't have a position on, but I like the idea. September is just before the earnings report.
Uh-huh.
So let's see, we're at 960. Let's assume it's going straight to 1,000.
You could do just a put spread. You could do like the 940, 930 put spread for $2.60-ish.
Yeah, I'm looking at, I think just covering a 100-point range feels nice. So like the 1,900 shorts and then defining risk 10 points wide for $3. I can get in on that.
Okay.
I'll route that. It's at 296 right now, 293. So we'll see if we get filled there. But yeah, if Costco can't make a rally in this market, it seems a little troubling.
Yeah, all those stocks, the Costco's, Walmart, Target, even though Target's having a decent day today, those have all been kind of the laggers in the market right now. E-mini's only up 93 now. I think this has been the first dip we've had all day. And by dip, I consider 5 points, 6 points to be our dips.
Yeah. But yeah, I'll work that Iron Condor and Costco. See what else we got.
It's good we didn't push our luck with another SPX trade today.
Yeah.
Today would have been a tough one.
Today would have been bad. Today would have been an instant loser.
Yeah.
We also said we might just sell the put spread if we open lower. But I'm not sure if that
would have, coulda.
Yeah.
Yeah.
But yeah, I'm glad I did not do the Iron Condor today.
Yeah.
Should I cut the UNH call spread now at 28 days? It's pretty bad. The 320, 315, very red. Sold a put spread this morning to try and make some back. 320, 315, 28 days to go. I feel like that's well within the range of opportunity or possible. And you can see that with implied volatility. You're ultimately inside the expected move.
Yeah.
So I'm not sure what you bought this for, but
sold it. Sold the put spread, or bought the put spread?
It's a call spread.
Oh, sold the call spread. Bought the call spread?
Bought the call spread, I assume.
Okay.
Or maybe sold the call spread. Maybe sold the call spread. 320, 315. I guess that makes more sense. But yeah, you're still out of the money.
Yeah.
So I'm not sure I would cut it at a loss out of the money. It's not something I like to do. If you're doing that all the time, you're just going to be booking a ton of losses.
Death by paper cuts.
Yeah. If the position would be a full winner at expiration, but you're seeing losses now, that just means you're seeing a slight move against you. But it's kind of what you have to be willing to do if you're selling premium, because it's going to happen all the time.
Yeah.
Let's see.
Kind of a shock that the NASDAQ is the underperformer here. I mean, the move in the Russell makes sense, but I guess the Dow has, a lot of the stocks that are more less interest rate sensitive.
Yeah. BMNR, shorts getting a bit squeezed. ETH trade.
Yeah, that's a nice little squeezy there.
Squeezy. Yeah, all these stocks are just mooning.
Could sell the 100. Tom would be selling these 100 strike calls. I wonder if I could do like
oh, Tommy boy. I need CMG up 100 points, burrito fam. Well, CMG 43. $43 for the biggest Chipotle chain, the biggest burrito chain in the globe. Do we do something here?
I don't know. I might get myself in some trouble here in BMNR.
A little butterfly action?
Yeah, like broken wing butterfly-ish.
Mm-hmm.
I guess you could do just a wide butterfly here.
Yeah.
Let's do it 15 by 15 and see what if this would cost me like $1.
Yeah, smash.
So let's see. So let's go. I want to do this 20 points.
Yeah, look at that. 55, 75, 95.
For $3. You're selling, you got $5-ish of out of the money extrinsic value. Like you really just have to have this at the money call hold $3 of value. All right, let's do this. We're going to do a cheapy little butterfly. Let's see if I can get filled below the mid price. Oh, I can't do it on the closing only.
Dang.
Next time.
Dang.
Yes. Yeah, send an email to the support team. They can take you off that list.
Chat's popping off today. Love to see it.
Yeah. And shout out the Tasty Crypto team. If you haven't been watching, they've been launching a coin on the Bag app, and they've been live streaming for like 3 hours. Yeah. I'm gonna make them keep going if it just keeps popping off here.
Love it. It's glorious.
Yeah, it's great.
All right, here we go. Natty Gas down 3%, Ethereum up 12%. What a world. Yeah, Natty Gas versus digital gas.
Should I get back into my MNG? I think so.
I mean, I'm already deeply long, so I think I'm done.
Yeah.
I've had enough. I've had enough of Natty Gas.
I think I'm gonna get long again.
For whatever reason, I always get long when it's at these like terrible times where it just crumbles to new lows. It happens every time. What are you gonna do?
All right, I'm with you at much lower prices.
IWM Iron Condor, September 19th. Short the 225, 210. 225, 240, 210.
Yeah, I have this.
Oh, so you're already in.
Yeah. So we did this at 597. So I'm currently out about $300 on this wide Iron Condor. I think I might just roll to, how wide am I? 15 points wide? I think I might roll this a little bit inverted. So this spread on both sides is, I wouldn't call it a synthetic strangle, but it's a little bit wider than what I would consider a tight Iron Condor, like a 5 or 10 points wide in IWM. I would consider like a standard Iron Condor, 15 points wide, getting into that kind of synthetic strangle realm. So I don't mind going a little bit inverted here, especially with a $5 and change credit. So if I roll this up, I'll have, and we'll do this right now just so we can walk through this. So with this roll up, I'll have like, you know, $8 in total volatility, just getting smashed here. So so I'll have $8 in total premium. We can show this by, if I go to the, where's my IWM position? So this is marked currently at $11 and change. It's $5 inverted, which means that if we do get a move to kind of the middle of the range here, I'll be able to close this still for a slight profit. Oh, it doesn't show my analysis mode there. Oh God. I just lost it. There we go. Oh God. So I'll have $8 and change here on the position. If we can close or move towards the middle of this spread here. Oh God, I messed things up here. Okay.
What have you done?
I don't know, dude. Here, we'll go. Let me get back in here. There we go. $5 inverted, $8 and change total credit, which means that I still have profit potential if we can move down lower to like 230-ish.
Lovely. Lovely. Why would anyone do a strangle on IBIT? Well, IBIT is a $60 stock with 60, 70, 80% IV, super liquid. If you're worried about upside risk, I feel like I offset that by just moving the whole strangle up. Anytime I get tested on the upside and anytime it gets tested on the downside, I just roll the put perpetually.
Yeah.
It's been a nice trade so far. But
also buy the wings.
Yeah, you can define the risk if you want.
Yeah.
But this is the year-long trade we do every year. We pick one stock and we sell premium in it the entire year. And then at the end of the year, we show you the beautiful break-evens that just get wider and wider every time you roll.
Yes.
I'm short a Goldman Sachs Jade Lizard.
Okay.
829. 720 put.
29. Okay.
720 put, 745, 755 call spread, net credit $12. Would you close today or roll the dice and stay through expiry to extract more?
I would probably take the money and run. I mean, you're up $500 on this. It's a nice trade.
And you're getting a ton of value out of your short put today. Your short call spread's not moving that much. If you change. But your short call spread will start to move against you aggressively if you continue this move. That 720 put probably lost a ton of value today.
Mm-hmm.
So yeah, I would close it.
Yep.
When is a good time to buy the guts and sell the wings? I've got a short Nvidia 175 straddle in September, rolled from a strangle into a straddle. So pretty much now.
Yeah.
When you're near the current stock price, that's the lowest extrinsic value and intrinsic value that's the lowest intrinsic value that you have to buy this thing back. So
the highest extrinsic.
The highest extrinsic.
Yep.
But yeah, you could buy this back and then roll to October and just find an area that gives you a small credit or even a small debit in this case, and it will create a much higher probability trade. So you're basically going from an at the money straddle to, in this example, to a 170, 185, giving yourself more upside room than downside room a little bit. But yeah, you can mess around with this, but it just depends on how much credit you have. If you have like $2,000 in credit, then I'm totally fine giving up $1.50 to make the adjustment.
Yeah. And it moves you further out on the distribution. So the position itself will move a little bit quicker. If you're trying to like get $100 out of it or $200, it'll move faster with those further out of the money options versus the at the money position. And you have earnings coming up in the middle of next week. So it'll dull some of the P&L volatility that you have there.
Mm-hmm.
E-minis up 95. They bought them. They bought the 10-point dip.
As you must.
Yes.
Anyone taking some ETH off? I think this will pull back after some of this run up, but of course, just a guess. Yeah, I took mine off.
12% today.
Yeah. I mean, again, this is the move you were hoping for.
Yeah.
Today. So yeah, and especially if you think it's going to pull back from these levels, then of course take it off. And if you're right, you can just redeploy at lower prices.
Yeah. You can trim, you can close and, roll to something, an out of the money put spread or something like that, where you have a less risk. Those are all options.
Why is GLD hard to borrow? Interesting.
Yeah, it's weird. I don't know. I don't take much from that.
Yeah.
Let's see. I don't think there's a borrow rate here. There can't be. Oh, 1.5%.
Interesting. They're running out.
That's very minimal. It's nothing.
Yeah. Let's see. Costco and Netflix, few large caps that are red today.
Mm-hmm.
Yeah, what's going on with Netflix?
Ivy ranks super, super low.
Yeah. Mm-hmm. How about a new Tesla trade? Sell the 300 put, 92 days out. Buy the 305 put, 42 days out. So you're inverted. But
it's like a backwards calendar.
Yeah. Question is, if we close at 42 days or before, is this 100% profit play?
So November, you want to sell the 300, and then you want to buy the 42 day, so October weekly, 305.
Yeah. So not necessarily. Just look at the value here. So let's say, and you can see this here. So your issue with this is that because your long option is expiring sooner than your short, and it's half the cost of your short, if Tesla slowly trickles down to the downside over the 42 days, if you're anywhere near 300 at the expiration of your long option, you have a loser on your hands for sure. And you can see this as he passes time. That valley of death, as we like to call it, gets deeper and deeper. So you really need a rally in Tesla so that your credit offsets the lack of value in your long option, or you need a violent sell-off to where
the volatility expands.
Yeah, and your intrinsic value spread here of potentially $5 gets to $5, and then whatever extrinsic value you have left. So it's kind of a no man's land trade.
I would look sexier than it is.
Yeah, I would rather just do the calendar spread.
Yeah.
A traditional calendar spread where you're buying the 305 90 day or 300 and then selling the 300 42 day. Because when you reverse that, if you flip these, if you just swap it and then drag it, now you have a much better profit range.
Yeah.
So, or even diagonalize it like this. Now you have a way bigger profit range to the downside.
You're using a lot less buying power.
Yeah.
You're not naked. So the position is naked the way you have it. The other problem is it's a long vol play, but your short option, because it's so far out in time, is also going to be, a lot of your vol exposure is going to be, offset. You kind of need the move to happen like right at the long options expiration.
Yeah. Theta Trader, love the market measure this morning.
Very nice. I missed it. I was listening to Daddy Jerome.
Daddy Jerome. How about Delta Airlines? October 52.5, 55 put ratio. And also a 67.5, 70 call ratio.
Oh, batwings.
Yeah.
I have a strangle here, so I already have a position, but
yeah. So the intention is to buy in the risk if you can, with a potential free butterflies into earnings. Yeah, you could do that. If you get a chop, if you get a downside move and an upside move, you could buy the wings for a total debit less than $1.50, or at least one side. But yeah, I don't mind it.
Yeah, I did that in the most recent life cycle of a trade video in UAL into earnings. I did a little batwing.
Jonathan
Yep.
wants to start building a short BTC position with a 1 to 2 year horizon. Ooh. Ominous. What product can I use? I looked at BTC leaps, futures, and micro BTC, but they don't look liquid. Any recommendation? IBIT is the most liquid proxy. So that's probably what I would go with if you're trying to be short here.
I would also look at MicroStrategy.
Yeah.
Because if Bitcoin explodes, you have 2 or 3x as much exposure in MicroStrategy because it trades at above its net asset value.
Yeah, they have an aggressive amount of leverage there too. So
yes.
If Bitcoin like gets cut in half in short order, they're going to have problems.
Yes, so that would be probably where I would go.
Mm-hmm. Let's see. Gotta buy natty gas here. It's the only thing dipping.
It's true. That or volatility. You could buy some volatility. That one's getting killed too.
Mm-hmm.
I did get some natty gas though.
Questions about yesterday's market measure that we talked about. When the VIX 1 day goes higher than the VIX late in the day, what's the move? Does it also change things when it's due to an event?
So the VIX 1 day, you have to be careful with the VIX 1 day because and I don't know if we looked at that in the study. I don't think we did. It was based on the VIX 1 day being the day before.
Yeah.
So the VIX 1 day, you have to keep in mind, it includes 0 and 1 day options and is looking at the implied volatility of those options. So the reason these bars all pretty much go green at the end of the day is because you're moving from, your short-term volatility is coming off the table. So you're rolling to the next volatility. So if we look at SPX here, just to give you an idea. So this 21, so right now it's looking at this volatility and then the 9-day volatility. It's going to be rolling into a 9 and 10 volatility further out in time. So so this one actually won't move all that much, but it's going to get closer to like a 10 or maybe a little bit over 10 implied volatility as the day goes on, because the calculations are going to start incorporating the 4-day expiration instead of this 0-day expiration.
Yeah, that's a good call out. But yeah, the main, so when we looked at that study, there were not that many situations where the VIX 1 day was higher than the VIX.
8.5%, I think.
Right. But when that happens, that is when you had your best potential win rate and potential P&L, because those are the days where the markets are going nuts and you can get really wide 0-day iron condors on. But the more practical situation was if this morning at 8:30 a.m., if you look at the VIX 1 day and it opened higher than the previous day, that also yielded a better outcome than if it was the opposite. So the question is, this morning, what was the reason to not do an SPX iron fly today, given the VIX 1 day was higher than the VIX yesterday? So no, we're just looking strictly at the VIX 1 day. So the VIX 1 day opened lower today than it was yesterday, unless I'm mistaken. But yeah. So it opened lower than yesterday.
Yeah.
So that would be a signal to not do it. But yesterday, from Wednesday going to Thursday, the VIX one day opened higher. So basically, you just want to avoid situations where the VIX one day is collapsing from the previous day's close, which tells you that implied volatility may not necessarily, excluding the Friday. I think Friday is a weird day, like Nick pointed out.
Yeah.
But excluding that, you might still get realized volatility, but you're not getting paid the same as the day before. So yeah, it's a tricky one for sure. But that's what I'd look at. Is the VIX one day opening at a higher print than the previous day? And if the answer is yes, then a 0-day iron condor, based on the study, did better. ETH A. I have a long 30 call in January. Love to see it. Just sold a 40 strike call against it in October. And it immediately started rising. Yeah. At least you're at 40.
Yeah.
And
in October?
It's not going to hurt you. Yeah. What's the September 40 trading for? It's got to be
September 40?
Yeah, like what's the difference in price? $1.60?
A dollar-ish.
Okay.
How come my big cursor doesn't show on the...
I'm seeing it.
You're seeing it?
Actually, no, I'm not. I'm seeing it on my end. But yeah, it's it's no longer there.
We will look into that later.
But yeah, maybe in the future you go into a shorter term expiration into these big violent pops.
Yeah.
Especially if vol's popping too. Just give up the premium and get a shorter duration so that if it continues, it doesn't hurt you as much.
Yeah.
But you can't go wrong either way with reducing basis there.
Yeah. God, I'm sad my mega pointer isn't showing. It's really unfortunate.
Your ETH A iron condor, why did you not invert it more, and why did you open a new one in October?
It's a good question. I mean, I could probably roll this up a point or two, but I'm wrapped around. I mean, so this one that I have on, I have a total of $4.60 in credit on it. So I need a dollar down move on this position to be within my break-even point. So I'm wrapped around neutral right here. My total delta, and we can even look at this on my positions. Where's my ETH A? So my total delta here is short 16 deltas with my two positions. So it's small.
Mm-hmm. What's the max loss on a micro natty gas contract?
So the micro is going to move $1 per tick.
It's 10 times smaller than natty gas.
Yeah.
And the natty gas contract is?
Or I'm sorry, it's $2. Is it $2.50 then? $2.50 a tick?
I don't know. Too much math. All I know is the big contract, NG, is a $27,000 product max loss. So
yes, I think it's $2.50 a tick because the QG or the QC, which is the mini, is $25 a tick. So the micro would be $2.50. It's small.
It's $2,600. It's $2,700 max loss if you bought it right now. Yep. And yeah, I'm just doing that. So what I do to figure out these notional values is just sell an at the money put in the near term cycle in a big contract, or just not do it actually, but load it up on the platform. So I just go to NG, sell the 2.7 put. Max loss is $26,430, and the max profit premium is $570. So that tells you that it's a $27,000 max loss or notional value, and then the micro is 10 times smaller than that. So it's $2,700 for one contract. And that's math, baby.
There you go.
Why do natty gas contracts get more expensive approaching the 126 day, but then cheaper again post the expiration date? Likely due to demand. winter months.
Mm-hmm.
So yeah, more expensive up to 4, and then it gets cheaper. So it peaks in December and then gets cheaper into the spring months. So it's just your natural demand curve. Because things getting cold over here.
I'm trying to figure out how to get my my pointer back on live, but
You love the pointer so much.
I know Ryan gave me I can't do it. I can't do it live. We only got a couple minutes left. I will have my big pointer there next Friday when
There you
we
go.
show. I promise.
Let's see. DAL looks better for a short put, maybe? Yeah, I don't know.
Wait, did I fix it? No,
I don't think so.
I don't think so. Okay.
I still don't see it.
All right, I'm gonna stop trying to mess with it because I'm losing my focus.
Let's go to Meta.
Yep. What do we got?
Short a 780 straddle for a net credit of $3,100 in September. Would you roll forward on a day like today to an October strangle or wait till 21 days?
Just got half your loss back today.
Yeah.
I mean, that's so when you look at these options, you got to kind of put that into context. You know, you have $3,700, so you're out $1,000. This was, $1,000 worse yesterday. So that's a pretty nice move. I might close and, again, this is kind of similar to what we talked about with the Nvidia position. Maybe you close it and you roll to, an out of the money strangle. Whatever, however directional you want to be here. If you want to lean a little bit long, do like the, 725, which is 35 delta, and then sell the, 800 or 815 or 825, and you'll still be leaning long, but you're going to move where your risk is and take advantage of this move.
Yeah. I think if you're bullish, though, you could just stick with your current position in September also.
Yeah.
Because you only have $31 in credit. So it's pretty low for a position in Meta. That's a $750 product. So you can make any adjustment you want for sure. But if you're bullish, I think you're in a good spot with a 780 in the money straddle. But if you're not, I think you can make an adjustment like this, or you could roll to October, go inverted. You could even go inverted. If you rolled out to October, you could do a 780, 750 inversion right at the money and pick up a ton of premium. So just depends on your directional lean. My XLE shares are up bigly. Kind of want to sell a call against it, but IVR is trash. Maybe a call ratio. Yeah, call ratio, that could be one way to do it, but yeah, 20% IV, that is doo-doo.
Yeah, it's a nice move today. You could close it, take the money and run and do like a, roll into a poor man's covered call or something like that. If you want to reduce your risk and kind of take profits.
Yeah, there's not much premium to sell there.
Yeah.
Either way. But yeah, you could do a call ratio for sure. I kind of like that. Give yourself some premium, but it's more of an offensive move. Call ratio on shares. Marvel has a good put market. I just sold the 66 strike.
66.
Yeah, this is likely due to implied volatility for earnings upcoming. So you've got earnings next week, I believe. And yeah. So
is that the expiration they were doing?
They're just saying in general. 66 strike, but yeah, plenty of premium because of earnings. But yeah, I like the short put only if you're selling it now into earnings.
Yeah.
Just to give yourself the ability to make money if it keeps rising. you can get out pre-earnings if you want to. Last comment here, and we can get out a couple minutes early. Look at the old portfolio. Sells my P&Ls with $100 of last Friday's close. I guess nothing happened this week. Pretty much.
Pretty much. Yeah. I mean, it's a story as old as time. Nothing ever happens.
Mm-hmm. But yeah, what a day.
What a day. Crazy, crazy move in the market. Where do you think we end the day? You think we have a little bit of a pullback, a little profit taking?
Yeah, probably. I think we end at like right around here.
You think right around here?
Or we pin 6,500.00. That's the ultimate narrative.
I don't know if we're going higher than the highs of the day. I think that was it. I would like to see a little bit of a pullback, maybe another 10, 15, 20 points. We get closer to 64.50. Spook a little bit of the market, you know?
Yeah.
Get a little bit of vol pumped into the weekend. You know?
Yeah.
We talk about it. It's great to have this move and catch it, but now volatility is contracting and everybody's like, well, shoot, now what do I do? You know?
Well, you close 7 positions and you come back and hope for some more volatility on Monday. But yeah, that's what we will do. I think that's it for us.
Beautiful.
I would love to see Coinbase keep mooning. I would love to see Google stay in this range here. Yeah, Coinbase is probably my next close if we see a continuation of this move to the upside.
Me too.
And Amazon too. I've got a leftover 230 long call in September. Good one. And when I say good, I mean I'm still down, but we're seeing signs of life here.
Good.
All right, that's it for us. Thanks for tuning in. If you got any further questions, you can find us on the Twitters. I'm at Trader Mikey B, next to Trader Nikki Bat. Stay tuned though, we got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll be back same time, same place, 11 a.m. Central tomorrow. Nope, Monday. Go Bears, playing Kansas City tonight in a primetime game.
Ooh.
Love to see it. But yeah, have a good weekend, everyone. We'll see you on Monday. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
We're back. It's still Friday, August 22nd, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, I gave everyone a chance to learn the lyrics to Thin Lizzy the past few days. We look at the price action today. I think we can say the boys are indeed back in town.
I don't know that we can, but it's certainly the case that the market's like this. Now we find out if this is everything they wanted.
We're up 93 points in the S. I think people are a little happy with how today's turning out so far.
Oh, there's no question.
Powell landed the landing through the eye of a needle, perhaps.
Oh, just barely. But man, did he give the markets just enough today.
Just enough is not pre-committing to a September cut, leaning in that direction, highlighting the fact that tariff inflation is going to be short-term in nature. I think that's the big story there, telling us that inflation is transitory again. So no reason to worry about it.
It's that, and it's the swapping of flexibility on inflation targeting to swapping in flexibility on employment targeting.
That's the key.
This was the really interesting language here, that basically the Fed said, look, we're going to be militant about inflation. We're not going to stick with this idea that we adopted post-COVID, where we said we had a long period of inflation undershooting. So we're going to allow some room for it to overshoot as a makeup strategy, because we're targeting inflation in the medium term and we're going to try to average it out. So they jettisoned that clearly, because we know what happened with inflation after COVID. Didn't really need to let it run hot there, did they? But now they're saying, look, there may be instances where you could run employment hot without employment being inflationary necessarily. And that seems to suggest that they're telling themselves and us that they're not necessarily going to look at these incoming inflation numbers as reasons to hike, and they're not going to stop them from cutting. And this is where it gets really, really fascinating, because this seems to really cement that September move, but only that. And this is where the market reaction becomes very curious. We've gone back up to about where we were before everybody got into a kerfuffle about this at the beginning of this week.
Before you get there, let's just, for the people watching on screen here right now, the left-hand side of the screen, this CME FedWatch tool screenshot is from yesterday's show.
Right.
Just to give an anchoring point of where have we gone in 24 hours. Well, and the one on the right-hand side is today.
That's exactly where I was going. I mean, we're at 89%, which is basically where we sort of landed toward the end of last week, middle of last week, going into this week. And of course, then this week, we sort of drifted down from the high 80s into the mid 80s, into the low 80s, and then into the 70s. And now we're basically back. And if you look at then the price action, you sort of end up with, well, we're back. We're back to that high that we set after the blow off CPI number and the soggy absence of follow through thereafter. We're back at that high. And so the question is, okay, well, so now what? Do we have the wherewithal to actually punch on?
Powell's comments today were across the board. The balance of risks appear to be shifting. It's curious kind of balance that results from a market slowdown, both the supply and demand for workers. If those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. The effects of the tariffs are having on consumer prices are now clearly visible. They materially raise the risk of an ongoing inflation problem. Given that the labor market is now particularly tight and faces increasing downside risk, that outcome does not seem likely in reference to sustained wage-driven inflation. come what may, we will not allow a one-time increase in the price level to become an ongoing inflation problem. So I think that's a really important caveat here. He also says
it is.
Where we proceed carefully as we consider changes to our policy stand, and all this information in a summary line may warrant adjusting our policy stance. I think that second to last one I just read, come what may, about inflation being an ongoing problem is the key to understand that we're going to get a September cut.
Exactly. I think you're hitting the nail on the head here. And that's why I'm skeptical.
It could be a hawkish cut if it does come.
That's exactly why I'm skeptical, right? We've been talking about this for a week, if not more. The object of speculation is not September. September was priced in. What we're looking at are incremental differences in likelihood. But as you assert time and again, rightly, when you're north of 55%-ish probability of a Fed move this or that, somewhere close to where the move occurs, and I think since there's no policy meeting in between now and then, and we have a good buffer here at about 90% chance, we can, I think, rest easy with the idea that we're going to be north of 55% when we arrive at the September FOMC. So what has changed? The Fed has been saying we need 50 basis points in cuts since December. The calendar is forcing their hand. They have 3 meetings left. There's not that much space to do the 50 cuts. And the markets and the Fed have been in agreement on the 50 cuts basically all year. So what has changed? What isn't priced in about what has just occurred? Certainly there's a level of relief in markets. They were wound tighter than tight ahead of this. And this is relief.
The market did move. Let's go actually to the charts with that transition here, because I think the last few, I was making the case yesterday with you on Overtime that the market did the sell-off that it wanted to do around the Fed, and so the deck was cleared.
Yes,
right. That we were going into this. Oh, great timing. We were going into this meeting with, we're not at 100% anymore. We've seen a 3 to 4. Nasdaq was down 4.2% from the previous week's high to the low this week.
Mm-hmm.
Maybe because we weren't going in expecting, significantly expecting a cut to be on the table.
Yes.
And now it's back on the table.
In other words, we're back to where we were before we started to worry that the Fed might actually pull the September rug out. So if you see, we're not even attempting to make a run at the high here. We're just kind of back to that little digestion zone that we were in after CPI, which again was a mixed report, and the markets over extrapolated and got themselves all kind of happy about with a selective reading, even if you just look at headline versus core. But we're back there. We're not punching through the highs. And what's interesting here is this is reflected across markets. The dollar is in a similar situation. Gold is in a similar situation. You look all across the board, and you're in a place where you've erased the concern that the Fed would pull the September rug, but just that, which makes sense because, of course, what we've seen have been incremental changes in likelihood, not in the true probability of what will actually occur. We've gone from, we definitely are getting a September cut, to, okay, maybe it's only a 70% chance, to now, okay, yeah, we're getting this cut. Okay, that was already in the market, just to various extents, which sort of explains why we're not punching beyond where we were. But this language that Powell has, this vigilance on inflation, this sort of we'll do whatever it takes, kind of channeling Mario Draghi here, that tells you the actual source of controversy, which is what happens after these 50 basis points. These 50 basis points haven't been controversial for a year. The actual source of controversy is next year, where the Fed has only 25 basis points and the markets today moved even more dovish. and are now north of 3 cuts. Will
you
the
look
Fed
out to
actually
November.
endorse that with September's SEP? Doesn't look like it.
No, but if you go out to November of 2026 in terms of the cut odds, we're fully priced in for 5 cuts through November of next year. And then there's something like, we can actually just go back to the slide rather show than tell, right? We're at it's actually October, excuse me. So 21.5% chance that we get a 6th cut by October next year. That wasn't even a column previously because the market pricing was 0.
Right.
By the end of December, it's a little bit less, but just a quirk in the pricing. So
78
the odds of
basis points in total for next year. That's obviously 3 with a chance of 4.
3 with a chance of 4. Before it was maybe 3, and the market's now moved back to a place of it being closer to 4. But the volatility crush here, right? The market gets what it wants from Powell. He's open-minded. He's seeing the changes in the data. He's making the labor market argument that you and I were gaming out yesterday. If I was trying to make the case for a cut, what would it be? It's the claims that are going up to a 3-month high, even though they're still at a low level. It's continuing claims being at the highest level since November 21. You look at the BLS data. I think it's real. So the hiring ratio versus the firing ratio, that's actually dipped into negative territory in recent months. We've talked about the state of the labor market in terms of those healthcare workers being the primary driver of job gains, and that's a highly unproductive area. So, you could make the case that labor's there. And then also, Ilya, Fed's own research from Trump's first term, his China trade war, as we have noted so many times since April. The Fed thinks this is a one-off price hike. We're going up, inflation moves up to a new level, and then you resume along your pre-scheduled programming, more or less. And Powell lined that up today too.
They don't think that that's a given. They clearly feel the need to make sure that it's that.
Yes, but they're at least identifying that as their base framework.
Yes,
right?
They're basically saying it could be that unless we fumble the ball. As long as we stay vigilant and as long as we don't fumble the ball, it will be a one-off.
So does this make it kind of like a 2021 environment? Thinking about the market where, inflation pressures are rising and the Fed's telling us they could be transitory. So we can keep going on with what we want to do.
Yes.
And the market kept going in 2021. And then the reality struck in 2022. We got to actually raise rates. Now it's not going to be transitory.
Well, yeah. So it kind of happened early, though, because what you got was by the middle of 2021, that June. The FOMC that June in 2021 is when the Fed came out and said, okay, it's not going to be transitory. Because there's parts of it that are, but then there's parts of it that aren't. And what we're going to need to do is we're going to need to get in front of this thing now.
Well, here's the thing that popped up in my inbox this morning from Torsten Slok over at Apollo. This is
it's funny.
ISM.
He uses 3 months. I use 2, but you and I have looked at this chart for a while,
right? And the ISM prices paid index is now up near 70, which the last time it was up near 70 and jumping up to these levels. Headline CPI was on its way to 5%.
Yeah.
So this is not, I think the takeaway today from Powell is that we're going to get our September cut.
Yes.
Okay. Inflation can run hot in the August reading because if the labor market gives you another bad print, that's all the Fed needs to say.
And we can do the September cut, and that's how we're going to justify it. Totally.
We get a good NFP reading. We get a hot CPI report. We're probably looking at a cut and the Fed telling us that they're not going to cut again in October.
Yeah.
They're going to leave the door open for another cut in December, but they're not going to cut immediately in October. But if it's CPI misses and non-farm payrolls is soft, the Fed cuts in September. It's going to come out and tell us it's cutting in October, right? And then the market thinks, well, if you're cutting in October, then we got to entertain the possibility of a December cut as well.
And the PMI just told us the economy is reheating.
And in that window, if the economy is reheating and inflation's up and the Fed's cutting, right? Okay, so what does that do for the stock market? With our theory of what this one big beautiful bill act does for shifting money throughout the economy and funneling it up towards the top. I mean, Ilya, lower rates, more deficit spending. I see the 14% move in Ethereum today and I go, yeah, that makes a heck of a lot of sense.
Today it does. The reluctance for stock markets to punch through these highs is really, really telltale. Because when you then look across actually liquid assets, of which Ethereum isn't one, you start to see that you have.
You're a legendary hater, by the way.
Hey, listen. I'm not wrong. Certainly not on Ethereum. A liquid market, it is not. Silver, by the way, our boy Silver, it was really, really trying the other day to go, yeah, we know gold's down, we know dollar's up, we know yields are up, but we will not go back. And
that was a tell.
It was right. Silver was right.
But you know what? So are these charts. The uptrend, Ilya, from the turn in May. S&P for the NASDAQ here. This is the trend that we get into after the U.S. and China declare a trade war detente in Geneva, Switzerland.
Mm-hmm.
The NASDAQ starts dipping below support this week. It's immediately reestablished itself back in the channel after a false breakout to the downside.
Mm-hmm.
Former swing levels that when it cracked through earlier this week, flush, we're back through. I see the same thing in the S&P right now in the short term. This is actually a lot cleaner of a chart where lows that you have in early May, here in mid to late June, and then again at the start of August, those held up
and that
perfectly
makes sense, right?
This week.
The S&P is a little bit more evened out as an index. NASDAQ is obviously very tilted in a direction, so it can be a little jumpier. Again, this is more liquid. This is more broad-based. It's obviously tilted to tech because of the way that sector has outperformed and the stuffing of market cap there. But this is going to be a smoother ride.
But where the S&P 500 is now, we had that period where it was consolidating back above
we're right there.
July high, and we're starting to punch back into that territory where breakout was looking possible. And the measured move here within the channel gets you up closer to 6,700. You know, you could reach the channel highs by, I mean, in theory, this time next week, you would be at channel highs at 6,700. Now, I'm not playing for a move to 6,700 next week.
Sure.
But between the S&P and the NASDAQ, and then you look at this boom in the Russell. Good on Jamal Chandler. He was
huge.
Yesterday, he was espousing the 2,400, 2,500 call spread here.
I'm so happy that I don't have any exposure in this one.
You know, Ilya, lower interest rates, if they are coming, right, particularly at the short end, given the balance and profile of debt that's out there and the tenors of debt when it needs to be rolled over. If you're a company that is in the Russell, I jokingly call them America's worst 2,000 publicly traded companies, but in a sense, these aren't companies with the cash flows, the balance sheets, the ability to go to the market and get the terms that they want. They have a lot more floating rate debt than, say, your mega cap tech companies.
Sure.
So lower interest rates really, really, really do matter a lot here. And also, if we're going to be flooding the domestic economy with lower rates, it's going to help small businesses, you know, more than it's going to help the big ones. So, I mean, 2369
at least incrementally. I mean, it'll help the big ones. They just don't need it.
They just don't need the help as much as these small guys do. So, I mean, this is 13 IBR. It's a breakout into a fresh yearly high. It's that 1 month moving average again. We've been discussing this the past few sessions where you see these pullbacks into it ever since the turn in late April. And it's been a really comfortable place for longs to try to reestablish themselves. And this week, once again, proves that to be the consideration. It's a dip buyer's market right now. So we have to look forward to next week's data. PCE is probably going to be a problem, given how it's trending.
Yeah.
But we're still going to get cuts. So do you want to own something that's an inflation hedge historically or not during a period when we're going to be cutting rates with CPI well north of the Fed's target? And
so this is that. Well, sure. But this is, again, that the ever present question, right? You and I started in FX markets. And one of the things that you would learn very, very quickly when you just get started in FX markets is the influence of rates. And you go, okay, when a central bank cuts rates, the currency falls because the interest income on holding it diminishes. When it hikes, the currency rallies. But then you and so you learn that theory, you drill that theory, and then your first monetary policy announcement, seeing it in action, you learn how important it is to know what is priced in before, because it's not the textbook thing. If the central bank cuts rates, but that was expected, and then the language isn't dovish, you get the opposite response of what the textbook would tell you. And
could I offer different? Yes, but could I offer perhaps a post-COVID assessment?
Of course.
Maybe it's more about Fed credibility, the market's reaction today. Not independence, but credibility. Because one of the problems in 2022 was the Fed lost its credibility with the market as it kept insisting month after month inflation was transitory as CPI ran up to what,
2021,
9%?
you mean?
Your 2021, but also into 2022, they start hiking and inflation's still running up. So it's like, oh, you guys started too late. You didn't recognize the problem early enough.
Right. And they were out here slinging 75 basis point moves back to back because they were in a hurry.
They were panicked. And so it looked like the Fed wasn't a sober driver behind the wheel.
Right.
And it took some time for the Fed to reestablish the fact that, like, yeah, there may be storms ahead, but both hands are at 10-2. We have the capacity to address this no matter what. And that really became ingrained after the bank failures of Signature, of Silicon Valley Bank and Signature Bank, because the Fed didn't have to do anything emergency. The economy didn't melt down. And okay, credibility now restored. They assessed this most recent crisis correctly. They're sober-minded folks again.
Yes.
Maybe the fact that Powell has that optionality today. Yeah, we're going to cut, but like, that doesn't mean we're going to keep cutting.
Right.
That at least is the, okay, we're getting the easing we want, but they're at least credible enough to understand that this may not be able to go too far. So we can get back on the bull side of this thing. Let's innocent until proven guilty again for the market. Weekend vol crush into the last week of summer. Ilya, that I think is ultimately the tell here. VIX is about to close at the lowest levels that we've seen going all the way back to mid-February prior to the growth scare.
Yeah. I mean, this is where that the pricing in of outcomes, the sort of discounting mechanism that is the market seems front and center for me. I mean, to be sure, I think the Fed has reclaimed a lot of its credibility from the transitory kerfuffle, and it's an understandable kerfuffle. The Fed typically has one like that at inflection points. I mean, we remember what happened with Janet Yellen. She was coming out of the global financial crisis and kept rates too low for too long, worried about the labor market because she was coming out of the craziest recession since the Great Depression. And so she was erring on the side of caution. What we have with Powell and the transitory Fed, again, coming out of a generational pandemic, erring on the side of caution. So this happens. This is a central bank. It is by definition a reactive institution.
Oh yeah, always fighting the last battle.
Right. And so it makes sense what happened. But what the markets were yelling at the Fed to do is what the Fed was strongly resisting. The markets were yelling that inflation isn't transitory and the Fed needs to hike already in the first half of 2021. And I was with them. I was yelling right alongside them. Fed funds futures were saying it. You started
your yields were doing it.
Yields were doing it. You started, most importantly, to see, and this is where the University of Michigan numbers started to become really, really important. You started to see it get into consumer inflation expectations, and you started to see it come into labor markets. And once you saw that, you knew where the Fed would have to go. And by middle of 2022, 2021, the Fed owned it and said, yeah, okay, everybody's right. What we have here is a little bit different in the sense that the Fed was not fighting the desire to cut. It said that there was going to be 50 basis points in cuts before the Trump administration even took office. Never mind rolled out any tariffs. Now, the Fed knew the tariffs were coming because, of course, by then the election had occurred, but nobody knew what kind of tariffs. Nobody knew what it would look like. In fact, we had a situation where there was a sense clearly, I mean, just look at the stock market November, December, where the market's like, tariffs are coming. Okay, fine. We know what this looks like. This is going to be like the first term. This doesn't necessarily need to mean anything. And then, of course, between February and April, we saw the markets get disabused of that complacency. And then right around the same time, the Fed had to change course and say, hey, whoa, okay. This is not what we thought. This is going to be something else. We're going to need to proceed very carefully here because this could be both inflationary and recessionary together. And that would be bad. You hear that in Powell's speech ongoing today. He goes, there's a tension between the two sides of the mandate. So we need to be really, really careful. We need to not do anything quickly. So these cuts were priced in. And this optimism, to me, seems not so much optimism in an extrapolated way, but optimism in the shorter term idea that what we'd seen in the 5 days leading up to this was not warranted as a fear. That the Fed would not back away from the September move. But boy, are we set up now for a buy the rumor, sell the fact sort of a situation. And your audio's gone.
For now, in the short term, we have a market today where there are rate-sensitive names going boom. Home builders are up 5.56% here in ITB. We head over to the regional banks, which are trading up into
they love this.
Highest levels that we've seen since February, right? Well, less risk to them.
Right at the high, by the way. Right at that swing high from February.
Legendary hater. KBE, the broader banking index, is already up at new highs.
Do it.
XLF, the large banks, right? These are up at new all-time highs in today's session.
Yeah.
XLI, which are industrials, having been a leader, those are back up. Even SMH here. Once again, these little dips into this 1 month, 50-day zone for a lot of these, for the NASDAQ, for the S&P, for the Russell. It's been a place of buying support. So for now,
it's a really interesting thing, actually. Can you zoom in on this chart a little bit?
It's okay.
Yeah. So look at what we have here, right? So we've erased basically 2.5 days of sell-off. We haven't broken the series of lower highs and lower lows. So we're in that retesting thing.
Yeah.
Like we are in the indexes, like we are in the dollar, like we are in gold. There is without question relief in markets here. There's without question exuberance. But what there's not is a willingness to actually undo anything as far as the past 2 weeks of positioning. So the markets don't get the bearish catalyst. They also don't seem to believe that this is a bullish catalyst beyond just relief, which is interesting.
Legendary hater. Bonds are following cut odds for now still. Listen, as someone who's gotten beat up the past month, today is what a relief today has been between silver and stocks. But to that point,
silver new. See, I told you there was a hunt relative in here somewhere.
So he's always out there somewhere. We're starting to roll into the Z5
somewhere
contracts.
In the world, there's a hunt waiting to turn the silver market.
If there's only, Ilya, I think one of the bigger tells today, forget the fact that bonds and notes are up on the day, it's that volatility is now back in It was meandering higher the past few sessions. We only reached a high IVR of about 13.6 yesterday, but we're back down to 4.5 today. So broadly speaking, you know, if there was a really big source of concern, right? If we had stocks up today, bonds were up, but all of a sudden the IVRs were like back in the 20s or 30s.
Yeah.
That would give me much more cause for concern about what's happening on the equity side for the next few days, at least the next week.
Sure.
Before PCE. PCE could be a different can of worms. But the fact that we have bonds and notes up, okay, with the Fed giving us a greater indication for a cut, that's not how I view the world. Maybe the way I view the world is wrong. But that 50 basis point cut last year that blew out the long end of the curve, I think was informative. We get too much of a good thing and we're going to react negatively in bonds.
Right.
So this tone that Powell struck today, we say this title of the show is Through the Eye of a Needle.
Yeah.
This is part of the landing. He's able to get the market up, not just for stocks, but for bonds. And this is why I think this is a credibility story today. Powell is actually keeping the Fed's credibility as an inflation fighter intact, even if they have to deliver that September cut, which looks very likely.
Absolutely. Absolutely. No, he stuck this landing today. I think Powell is going to go down as one of the greatest Fed chairs ever, because the things that this guy has managed to do, the way that he has managed to navigate really just a series of insane circumstances that few Fed chairs have had to face. I mean, certainly Bernanke had a hairy situation on his hands. Yellen did too. But what Powell has managed here, I mean, ultimately those things were sort of in a central bank's wheelhouse for the most part. Less so for Bernanke. He had quite the situation on his hands. I still think we're all incredibly lucky that the person steering the Fed during that crisis was a Great Depression scholar and knew what to do. But what Powell has managed to do here by so carefully phrasing what needs to happen here at a time when there is this stagflationary tendency is really very impressive.
Maybe they stick the landing, Ilya.
Maybe. Maybe. It's just a question of what that means for markets, because they're not trying to stick the markets landing. They're trying to stick the economy landing. And they may do it.
They may just pull it off yet. Ilya, being directionally neutral in here has worked. If you were to go 4 points wide in ZB at 35 days, thinking about what a trade would look like, you're going wrapped around the one standard deviation. It's not the best risk to reward right now, but 68% pop. Maybe you wanted to give this a little bit more room to the upside because of how the bond market's moving. Still, there's something to get out of here. Maybe you can play a little bit more off the lows to tighten up a risk to reward that's more in that 4-to-1 neighborhood now. But again, the ask is this
juice worth the squeeze to you? I mean, obviously you have
absolutely.
You have to lay out capital to hold the position. You have an IV rank of 4.7. What is it that you're playing for here?
More just literally more chop that nothing's going to change. That the highs that we saw in April or May, the lows that we saw later that month in May, we're not going to break through 110 and we're not going to poke through 117 anytime soon. It's decent. It's not a huge amount of buying power, right?
Yeah.
$650. I mean, if you're thinking about we'll talk about like what, a $25,000 account, 2%, a little over 2%.
Well, and this is the whole thing, right? So you're tying up $650 in buying power to make a max profit of $420. So the idea is, and obviously this isn't like you're risking it per se. You can close the position, but this just sort of speaks to the idea that IV rank is so small that you have to pay more just to hold this thing than you stand to gain, because there's not that much juice here at all.
It's a fair enough assessment. And stocks are where all the action is. So incrementally, if people were going into this market today, is S&P or NASDAQ or the Russell more exciting than Z or ZB? I don't want to fault anyone for not looking at this whatsoever. But thinking about how this path goes forward for them, the bond market, right? This is one of the reasons why structurally, getting a little bit more bullish after today. The paths are a hawkish cut or a dovish cut. A hawkish cut probably means more of the same. A dovish cut probably means that something bad's going on, more recessionary.
Yeah.
And then that's a good environment for notes and bonds. So trading off of the lows, even if it's not, say, something like a short iron condor, but just a straight up short put spread, that becomes a more interesting assessment down here. Even at close, maybe even like this, a short put spread with the current strike at 114 and 112 here in ZB, 65% pop, and that's more of a 2-to-1 trade now than a 4-to-1. And there's something to do is the point. But the notion that we'd be breaking through recent lows that we had around here, I just find that difficult to believe right now. So if the market wants to give us some juice to squeeze around 111 or 110, let's squeeze it.
Well, and this is why, in my mind, rather than being neutral, you have very low vol here. So vol is super cheap. You're keeping that slow grind of an up move that we've been talking about, right? This thing has been slow, but upward pointed. And it's held support again. And now it's back into this congestion that held from, let's say, early August through to where we kind of dipped a little mid-month. And then we held support, and we're back into that range underneath the sort of immediate range top around 116 on ZB. So in my mind, if you're going to do anything here, you're just getting long. And if you're getting long, you do it with verticals, you make sure that you're protected and you're risk-minded, but you're just buying calls. Because the trend is up, vol is non-existent. You're just getting long a call vertical here, in my mind. Now I've already had
Jamal's actually pointed this out before.
Position. So
Jamal's pointed out you don't need to go out of the money. You could do this. It's not the tasty way, but you do like the long 114, short 115, or short 116, and you're getting right. And so you're getting something that's more like a 50-50, but still the max profits in excess of the max loss, and likewise max profit in excess of the buying power used.
Yeah.
So there are. I hear you out on this.
Starts to make sense. I mean, I think in this, if you're not long, and again, I've been sitting on this thing, on this slow crawl for forever now. I mean,
yes,
I'm 44 days into my long, just outright buying call verticals. I've got 28 days left, so I have plenty of time before I have to roll it, and I will, I think, at this rate, have to roll it because vol is low, the trend is up. This isn't complicated.
Speaking of low vol but trend going up, that would be gold and silver, which are seeing their IVRs bounce back a little bit today.
Yeah.
We had seen the IVRs in gold hit a low of 10 this week. It's now up to 13.4. It's only a modest bounce back. But silver, the IVRs were negative a few days ago, and now we're up to 10.7. There has been a noted contemporaneous relationship between volatility in the metals market and price action in the metals.
Yeah.
That's to say that as the metals break out higher, volatility tends to move up. And so to a certain extent for today, Ilya, that is very much the case again here. I know you're more of a horizontal man like Josh, but for me, the diagonals work just as well because this looks like a symmetrical triangle breakout in the context of what's been a bigger up move. And incrementally, we've been seeing stepping stones. We hit a new high, pull back, new high, pull back, new high, pull back. But the higher highs and higher lows remain.
Well, and for the horizontal man, you get a break above the horizontal range top. Most
you do right here at 39.35.
Either way you slice it.
Yeah. So I think, all things considered, this has been a tough trade for me because it's been riding it out. But at the 42-43 call spread is obviously working wonders today. It's been on since late July, so the drawdown was not fun. But this now looks like it's doing exactly what I think it should have been doing the entire time. So patience has been a virtue. Thank you to that low vol. The low vol allowed us to take the longer term position and kind of ride out whatever correction there could have been, to be frank.
And frankly, it's still pretty low. So you have some optionality here as to how you want to proceed.
Could we also point out that gold here with its bullish outside engulfing bar back above its 1 week, 1 month, 50-day averages, it continues a trend now. Higher high, higher low, higher low. This is technically a higher low. This is now a higher low.
I mean, it's interesting, right? But you're still pinned inside that range.
I know.
Very much. The moving averages, yeah, you're through them, but they're flat. And they're flat because we haven't gone anywhere since April. So I'm still happy to just be a vol seller here. Because what this hasn't done is broken out. I mean, we have a triangle here. It's very clear cut. That does have bullish implications because going into the triangle, the trend is up. This is as textbook of a consolidation and a wind up before the next leg higher as you could possibly imagine.
I keep telling myself that too.
I mean, look at it. I may need to go back and rather than, so I've been either selling puts or selling calls, depending on where we are in this range. The most recent thing I did was sell calls near the top of the range and just extracted more vol out of it. The position has been essentially a scratch at this point. So, but still very much in the money considering how much premium it's received versus the P&L it's floating. It's about 2-to-1 to the good. So maybe it's time to flip the deck over and be a put seller again rather than a call seller. But
yeah,
the vol architecture hasn't changed enough to say, you know what, I'm just going to be outright long. I'm okay paying for a little bit of vol that's probably going to expand when you get the break from the triangle and then just be a buyer of calls.
I may be a little reactionary. And I know for the past several weeks, it's been best to be directionally neutral. But that bullish engulfing bar today in gold at support from the post-Liberation Day swing low, the low that we had at the end of July, beginning of August.
Yeah.
That is awfully tempting.
It's tempting. It's tempting.
It's awfully tempting. Silver 2.5% higher now. It's sitting up at the highs of the day, 39.55.5.
Yeah.
If we're in breakout territory, listen, deficits are running at levels akin to World War II. We're going to have lower interest rates.
Again, by the way.
Like Mundell, again. And then you look at all the surveys, like we are really just we're going to rerun the 2021, 2022 economy. That's what we're already in the vibe session territory. When you look at the PMIs, it's all back into that same, when the economy is still growing, but things feel crappy.
Yeah.
because the economy is growing nominally and prices keep going up. So yeah, you just got a raise, but doesn't matter because
but you can't spend any more money.
Yeah. Like, oh yeah, I got a 10% raise. Oh, grocery prices are at 15%.
Yeah.
Crap. Like that's the territory we're in again.
Yep.
So, all right. Silver, gold, long deltas, hi yo, silver, as Frank Walsh has corrected me. Oil remains soft today, which is perhaps the most interesting part of this. You're not getting a lot of optimism about cuts doing much of anything.
Does not care.
Natural gas is a different.
Does not care. I'm starting to think the standstill in oil means that maybe oil really does care about geopolitics, in the sense that like the geopolitics are so fuzzy that oil doesn't know what to do with them.
Okay.
But it knows that they're there enough not to be getting sucked into the macro, because it's just sitting in the middle of this range. I mean, the 54 to 74 range has been in place since even before we have it drawn here, but most obviously from April. But even if we go back further, this anchoring line has been in place since what, September, October last year?
Oh, yeah. I mean,
Even
like
more?
right around last
Yeah, I mean,
April, last May's
yeah, I mean,
lows.
we're going 2023,
excuse me. Yeah.
Yeah,
Yeah.
so
I mean, it's been time. It's been some time.
we're at this axis again. And oil is just like, you know what? I do care about geopolitics, which is why I'm not going to make a jump this way or that. You're not convincing me with any of this U.S. economy jibber jabber, which is really interesting.
Yeah, it is interesting. Volatility continues to come off, though, which I think is the more disappointing thing. We are back to the midpoint of the trading range, right? The 50% mark of the lows that you have post Liberation Day, highs after the US bombing of Iran during the Israel Iran 12-day war. You have a midpoint that's basically $64. So trading around there, Ilya, it's worked because that's where the market stays.
The term, the 12-day war really speaks to the president's acumen for naming things in the zeitgeist.
Would we put this trade on again? That's what I'm thinking. At 55 days, you're going out to the CLX5 contract. There's a little bit more volatility in the oil market than there is in the stock market. So perhaps that's the justification. The midpoint in CLX5 is basically 63.75. So
here there's a little bit more juice for a neutral sort of thing to extract vol.
Thinking
Bonds,
about
this is not.
No, but thinking about the preset iron condor here, that would bring us out to the 1 standard deviation move. Elliot, it's not terrible, right? No. 63% pop, looking to make 240 against a max loss of 760. That's not ideal, right? We could make this a little bit better, more favorable to us to try to juice up the risk to reward, maybe.
Yeah, but also you start giving away pop when you do that. I mean, at 63%, yeah, I mean, it's not good risk reward, but you balance that not good risk reward against the likelihood that you make money.
Right. I'm thinking about this trading range here. Forget the pivots in early May. I'm thinking about the low that we have in May 30th, 57.50. Yeah. We can basically forget the highs around Israel, Iran. Let's go to the highs that we had here at 68.40. I think there's enough here to still do something. I'm going to roll over next week, but this is probably what I'm rolling into. I know it's a little bit tighter at a 53% probability of profit than typically here, but risking 2 to make 1, oil staying range bound. One question though, today Morgan Stanley released a report saying that OPEC is going to stop hiking production next year and actually could cut. Do you think that matters?
No. I don't think that their hiking of production matters, and therefore I don't think their cutting of production against the non-existent increases in production matter either. It's sort of we've seen this show a lot since OPEC, the plus grouping, the larger grouping, started to attempt to work to these benchmarks somewhere shortly after the fracking-induced meltdown in 2014, where the OPEC sort of dance is, we're going to increase production, and then they don't increase it, and then they come out and go, we're going to cut production, and you go, well, but you never increased it, like you said you would, so what have you actually done? Nothing? Good on you for getting yourself out to Geneva, though, for these meetings. That's nice. Vienna, that another sort of common venue. That's nice. Good cake there. Coffee.
Hell yeah. Today, the dollar takes it on the chin, not just because of the move lower in treasury yields, but also these cut odds. I think the market the last few days was thinking cut odds are in, not going to be a protracted cutting cycle if it occurs. Today's a little bit of give back from that. So we go back to where we were at the start of the week in many of these currencies.
This is the other thing that really grabs my attention here. The up move in the dollar is holding. And
is it?
Yeah, it seems to be. Yeah. I mean, DXY is obviously not the tradable instrument here. It's essentially the euro upside down. But when you look at the actual euro, it's holding. At the pound, it's holding. Aussie, holding. Canadian dollar, holding. On and on and on it goes. We haven't crossed any Rubicons here.
Well, you know what? We did get a good headline today. Canada is taking some of these retaliatory tariffs off of the U.S. President Trump was speaking a few minutes ago. He noted that he intends on speaking with Prime Minister Carney of Canada soon. So that is directionally, again, right? It doesn't really matter what we articulated this a few weeks ago, Ilya. Maybe it doesn't matter what the tariff rates are for the market right now, because directionally we're still in a period of negotiation.
Yes.
And so as long as we're negotiating, then they're not set in stone. Right.
I mean, clearly.
So another signal here, Canadian dollar had it really bad. This makes me wonder. It's only up by 0.58%. I'm leading a short call spread in here on the CZ CZ5 contract.
And it's held the architecture of the down move. I mean, if you
that's really
if you're somebody who favors sloped lines, just look at the series of lower highs and lower lows, put a trend line there, and you see we're holding right there. The architecture of the Canadian dollars, yeah, I mean, same thing.
We're trading at the levels that we traded at last week.
Bless you.
Great timing. Almost went a full episode. 68, 65 or so, just a little bit short of there. It's actually 68, 62 in the end is the August 14th high.
Yeah.
We've been below the 50-day. So if we cross that, we're in trouble. Otherwise, though, Ilya, this is a market today where if we get a hawkish cut in September, the dollar's back.
Well, exactly. Bless you. Exactly. I mean, you've hit the nail on the head. It's why I look at stock markets today and go, okay, so the dollar is back to where the line is on its bottoming. The stock market is back to where the line is on its topping. But nothing is crossing over. So we've taken away worries that Powell will change the baseline in a hawkish direction, but we're not to a place where Powell has changed the baseline to a dovish direction. We were worried for a week that Powell would suddenly push the hawkish button. He didn't do that. But he didn't push the dovish button either. And so what it looks like we're seeing here is relief, not a change of narrative, not a change of what's priced in, not a change of the status quo. And that status quo has a deep policy disconnect for next year that has only grown today.
Policy doesn't matter anymore. Haven't you learned that? It's all personality now. None of that stuff matters anymore.
I mean, if it's all personality, then man, did Powell nail it today. I mean, he nailed it on all kinds of grounds, but even just the performance. If you get a chance, watch him deliver the speech. He's constantly clearing his throat, giving this kind of sense of like, oh man, this is so hard. I mean, this is. I'm practically Sisyphus out here.
No, he sold it. Yeah, we didn't have a chance to look at the macro calendar for next week, and I'm out, so figure leave this here for the end of the show as opposed to the beginning. There is a German release on Monday that clocks in as high if people care about the IFO business climate survey, which I'm sure if you're listening to Tasty Live, you do not. So no reason to even note it. But we have
we as FX people, we care.
Durable goods orders on Tuesday, that matters a lot. Those are going to be the items, lifespans 3 years or longer, airplanes, automobiles, washers and dryers, the kind of things that you would import from abroad. We have on Friday coming up next week, some personal income spending and then PCE data. The PCE here early on the core is 0.3%. I wish I had been able to include with room what the headline will be for next week for the month over month. But right now, the consensus forecast for the month over month is going to clock in at a hearty, where are you? 0.4%. 0.4%, 0.4% inflation, and the Fed's preferred gauge is going to give you a run rate of 4.91% year over year inflation. And that's what we're cutting into.
And that's why that September SEP and what happens next year. Oh my God, is this a buy the rumor, sell the fact catalyst?
We're going to run it hot.
But the thing is, the markets are going to know that.
We know that. The market knows what's coming.
Markets are going to know that. And they know it today, it seems, because they won't take out the high-end stocks. They won't take out the bounds of the dollar bottom carving out for now.
We'll find out in about an hour and a half, though, because you and I are going to be back.
Yeah, we're going to come back to this and see how we close, because actually, I think how we close today will be very, very interesting.
I mean, like, listen, if we go into the weekend and the VIX is at the lows, people are going to be crashing out of any short exposure, kind of flush situation. Who wants to go? Next week's the week if you want to travel. Kids are going back to school after Labor Day. So, Ilya, you and I are done here.
Asia hasn't even priced this in yet.
Asia hasn't even priced this in yet. So that's that. Ilya, we're going to be back in an hour and a half for last call, but there's still more Tasty Live programming coming at you next. So go take a quick break, get some water, a sandwich, a soup if it's cold enough where you are, and then keep watching Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Schulten, this is From Theory to Practice. Welcome to the show today. Welcome to the Friday edition of what it is that we are trying to do, man. Welcome to the broadcast. And did you guys really think, did you really think that Powell wouldn't save the day? Did you really think that Powell wouldn't save every last one of us? And the craziest thing was that purple? I don't think that was purple. I think my man went dark gray. I mean, I had to squint. I was down on the screen did he go the darkest purple known to man? Or is that a little dark gray that he surprised us all with? I'm pretty sure he went dark gray. And we know, if he goes gray, it's going to be okay. So welcome to the show. I'm glad that you are here. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show if it is indeed real time, 2 o'clock Eastern, right around August 22nd, 2025, give or take a couple of days. You will be able to talk with the other traders that are also watching the show. There's 600 people watching the show right now. They're all trying to do the same thing that you're trying to do, which of course is fade all of my trades. So Paul, bring us into the market. Let's have a little look. See, and of course, I'll get to you guys here in a couple of minutes. But man, let's take a little look at what's going on. Yeah, baby. EME S&P is up 102 on the day. You got the risk-free instrument doing what risk-free instruments are supposed to do. NASDAQ futures up 395 on the day. You got the boomers up. Is that 900? You got the boomers, man. I straight up the vision. It's going downhill. That's 900. You got the Russell 2000 futures index up 87 on the day. And then, of course, you've got bonds up. You've got notes up. You've got oil up. You've got UB40 up. You got the Shifty celebrating with gold up 38. You know, silver, whatever silver you want. You want September, you want, December, doesn't even make a difference. Silver up almost $1. You got, British pound is up. Euro is up. Bitcoin bros are up. Ethereum bros are up. Man, the only thing getting hurt today is volatility. Let's grab a different color for that. Let's grab our glacier freeze. Yeah, volatility obviously down, which that makes sense. I mean, the market prices and market volatility are going to move inversely together pretty reliably so. And so it would not make any sense for volatility to be higher on a day like today. Instead, it should be getting smashed to pieces, which is indeed what is happening. So volatility futures are down. And then spot volatility, if we scroll down to the VIX here, spot volatility getting absolutely just completely lambasted, down $2.24, down to 14.36. Guys, we are only one, man, it could happen on the close today. I mean, we're like one day, maybe half a day away from a 13 handle on volatility. That is some crazy, crazy, crazy stuff. And so if we look at a chart of the VIX here really quick, let's see, VIX, man, that's really something. Yeah, look at that. Look at that. So we had chances, man. Well, maybe you guys, exploited the chance that we just had when volatility spiked up to, 17 or 17 and a half. And so now that it has completely fallen through the floor, we could be in for some real tough sled. Now, historically, the fall is typically volatile. Like historically, September, October is when things really start to pick up steam. But I mean, who knows, man? With the VIX at 14, almost 13 now, man, wake me up when we're 35 again. But anyway, I digress. Of course, if you have a question for me, I would drop it in the chat box. I will try to get to as many as I can over the course of about the second half of the show or thereabouts. Before we get into the questions, though, I do want to take a look at what's going on in the portfolio, including our SPX butterfly that is going to expire in about 90 minutes. So I want to make sure we talk about that. But man, I see you guys. Look at you guys in the chat. Man, Ava Sosa in the house, Laid Back Traders in the house, Raul's in the house, Rancher, Mr. Pillows, Joel James, Margin Walker, David Gallimore's even in the house. Man, Brad Glazier, Ash Finn in the house, Scramble Everything. Miko's in the house, man. Look at you guys. I appreciate you guys so much. All right, so a couple of things happening in the portfolio. So number one, let's talk about this SPX butterfly. So if we go to SPX and you take a look at a chart of SPX, I'll just do like a 5-minute guy for like 2 days or whatever. You're going to see that, obviously when the number came out, and by number, I mean Powell's tie color, when it was revealed that, yeah, he went gray, and I can't believe it, like exclamation point. That's a pretty janky looking exclamation point, but it's an exclamation point nonetheless. He went gray. Well, the market said, this is okay. Like, get out of our way. It is our day. And so SPX, that sounded a lot better in my head, but it's already out there, man. So we can't go back. But it went, the market just ripped higher. And I took a look at the SPX butterfly. It was maybe around, I don't remember. It was maybe around 10, 15, maybe 10, 20. And at the time, I was up about $5. $5 of profit. So it was like, all right, I could have taken it off, like whatever. But I was like, all right, this kind of feels like, I mean, is he really that dovish? Like, I mean, apparently so, according to the market, but Ilya Spivak doesn't think so. I'm kind of in the Ilya Spivak camp, potentially, to where I'm like, all right, I don't know. And I don't know. Let me know, what did the Fed funds futures do? Like, are they back to 100% cut in September? Like, I'm curious because I wouldn't necessarily say it's a slam dunk. I wouldn't necessarily say that this is going to happen. It's lock, stock, and barrel, like it is written, like September cut, like those kinds of things. I think a pause could still be on the table for September. The way I read the language and the verbiage from Powell. But when I looked at it, I was like, all right, I'm up $5. I could take it off. But I was like, man, we've got a chance, guys. We've got a chance for another ninth inning Roman Anthony home run here today, right? Just like last night, to just put the nail in the coffin of the Yankees and take the first game of the series with a 2-1 blast in the top of the ninth. We could do the same thing here today. We could do the same thing here today, but in our own little style with an SPX butterfly. So I kept it on. And now, of course, we are down on the trade. And so for SPX, it's every time, man. It's 100% every time. Actually, no, we're up on the trade. We're up now that the market is cooling off a little bit. So what I'm going to do here, so right now you can see that we are at almost exactly a scratch. We had a chance at $5 earlier. We didn't take it, and now we're at a scratch. So what are we going to do? We're going to leave it on. I want to leave it on because, again, I'm sized appropriately. I feel like, man, if this rally just cools off a little bit, and it has clearly shown it might cool off. Not that it ever not might cool off, but I mean, it's been back and forth. After the huge rally, like after the huge move up, it's been kind of back and forth, and potentially maybe this thing cools off a little bit. And if it does cool off a little bit, we might be able to get that $5 back, or potentially even more than that $5 back. And, we're sized correctly on entry. If it doesn't work and we totally miss the mark and we lose, the $5 or $5.80 or whatever we paid for it on entry, it's okay. It's less than 2% of the account. So it's, it's not going to be so damaging that we can't recover from that. But another nice thing about SPX, remember, SPX is cash settled. So that means I'm not going to be, I don't need to be at my terminal, finger on the mouse, like when this thing is moving around to make sure that I close it. So I'm not assigned on SPX or SPY or whatever. SPX is cash settled. So if this thing does expire in the money, I don't have to worry about having a share position. Come Monday, it's just going to get settled up to whatever the P&L might be, in the position. And so I'm going to sit tight. Now, maybe, in the next 40 minutes, if we get a chance to take this thing off for $3, $4, $5, I may go ahead and take that opportunity. But for right now, we're going to sit tight and we're going to do what we do best. Do what we do best, which is absolutely nothing. So that's SPX. There's your commentary on that. But man, so much green on the screen. I mean, everything is up. I mean, you see the whole portfolio here. Everything is up. And so if we do a quick little, just a quick little Chipotle check, you can see that we are still in our short put in Chipotle. So that guy right there, it continues to have no extrinsic value, but we have not been assigned. It's been several weeks now that we have not been assigned on this position. And so again, remember, when you're in the money on a short put and even deep in the money, like we are with Chipotle here, as long as there's a lot of time left, it's just not that likely that you get assigned. There's always some probability that you get assigned, and from time to time you will get assigned. But again, as a probability trader, like it should make sense to you. Like when you're 90%, 95% going in one direction, you're kind of like, all right, it's probably not going to happen. Like I'm probably not going to get burned on this. And of course, one time out of 10 or one time out of 20, you are indeed going to get burned on that very thing. But for Chipotle here, we sit tight and we do nothing. But man, take a look at Best Buy. Take a look at Best Buy. Guys, the P&L open, bros, they can't even come after us anymore. That's like a normal P&L open. Down $990. That's nothing, right? I mean, Oracle, we lost like $3,000, right? Best Buy, we were down like $1,800 at one point, I think, right? And so the P&L open, bros, they had some ammunition. Like they had a little something to kind of lean on, but now they got nothing left. $990. That's like a normal trade. That's like a normal P&L open. And so Best Buy is looking pretty good, man. And Best Buy, I think, don't they have earnings next week? I think it's coming up soon. Is it next week though? I think it might be, yeah, 8/28. How about that? So let's do some quick math. That's some calendar math, which is tricky. That's Thursday morning. Thursday morning. Huh. So if it's Thursday morning, that means if I'm going to trade Best Buy earnings, which I might not, I may just go, ride or die with the long share position. But if I want to add something on top of that, whether I'm adding a short call, whether I'm, double dipping on the long side, whatever we decide to do, we're going to have to do this for Tuesday's show. So you're not going to want to miss Tuesday's show. I mean, you really don't want to miss any show, obviously. But if you have to pick just one next week, I would watch Tuesday. So Tuesday, we'll take a look at the Best Buy position. We'll decide what we want to do, take risk off, put risk on. Like we'll make all those decisions on Tuesday, and we'll let the market guide us. We'll let where we are in the position kind of be one of the guiding forces in terms of what we decide to do. Ultimately, it is a little crazy that Best Buy is back to 75 though. because if I bring up, let me bring up a chart of Best Buy. So let's look at, let me look at a daily going back like, yeah, let's do like 6 months. It's storming pretty bad here. You guys might be able to hear the thunder in the background. Maybe not. I don't, maybe with the microphone, I don't think you're picking that up, but there's a major, major storm going on here. So it is possible that you guys lose me, which has happened before, but hopefully we'll be okay. So if you look at Best Buy, yeah, this thing was down to, yeah, hit a low of 54. No, we didn't have the trade on in April. Did we? I don't think so. Hold on. That's going back too far. We did this trade. If I go to Best Buy, yeah, we did the trade on. Oh, we did have it on in April. Wow, look at that. So we did this trade on March 3rd. It's been that long. It's really been that long. It's been 6 months that we've had this Best Buy trade on. That's crazy. I had no idea that it was that long. Like that is, man, it makes sense why I would feel so fused with this position. Like I feel like we are one flesh now. Like I feel like we are indeed married and the door is locked from the inside. Like there's just no way out. And so we've been in this trade since March. That's about right. So we actually did have to endure Best Buy going down to 54. And now it's 30 points higher. That's crazy stuff, man. That is some crazy, crazy stuff. But again, remember, guys, I didn't know what was going to happen. Best Buy could have just as easily gone out of business. I mean, they're basically on the brink of bankruptcy any given day, right? Like any given Sunday for my Willie Beeman fans, like they're about to tap into some of their invisible juice and just be gone, right? And so it's crazy stuff that they've come all the way back to 75 from 54. That's a pretty big rally. That's a pretty big rally indeed. But remember, like when it comes to, short puts that go in the money, you take the shares, whatever, just remember that this is a huge advantage that you have in your back pocket, right? If you want to take the shares or you want to just hold the in the money short put like we have with our Chipotle case, that's a huge advantage. You can do that. You can play the natural grind of the market higher. You can play, okay, you guys probably heard that one. That was a major, major thunderbolt basically in the backyard. And so, man, hopefully, Paul, we make it through the rest of the show. But if we go out, you'll know why. But anyway, that's a huge advantage with a short put or with long shares. You can just play the market going higher over time. Like there's nothing wrong with that. That's a big, big kind of benefit to that type of position. So Best Buy, we're going to sit tight and do nothing and just kind of stick it to the Pino Lopin Bros. Just like Roman Anthony stuck it to the Yankees last night. Man, that's how we do it. So Caterpillar, man, take a look at this Caterpillar trade. So Caterpillar, man, huge rally in Caterpillar today. That's some really, really good stuff, for us. And so apparently the prospect of lower rates is good for Caterpillar. I had no idea. Had no idea whatsoever. I mean, I just assumed it was as good as any other stock, in the market. But Caterpillar up 4% today. That's a pretty big move for Caterpillar. So we are long a 410, 420 call spread. And we are going to be able to take this guy out for more than 50% of max profit. So this was one of the benefits, and this will happen from time to time when, you get such a big move that you're not able to really catch it before it actually surpasses the 50% of max profit marker. Now, some of you out there, many of you out there actually, you're using GTC orders, like you're using good till cancel orders. So this is not really an issue for you because you have that in all the time. So whenever it gets to that mark, it closes you out. I think that's totally fine. I think that's actually probably a good or maybe even better way to do it. Since I'm in the market pretty much every day, since this is my job, I don't typically do that. I prefer to kind of put them on manually and just kind of cling to 1987. Like, man, like back when I was 6, I was crushing it, man. Just absolutely crushing it. So just trying to kind of conjure up some of those 1987 vibes. We're going to do it manually, at least for the time being. So Caterpillar, we're going to close it down though. There's no reason to keep it on any longer. We'll go ahead and take our profits on this trade. And so let's see, if I go to close the trade, let's do 792. That's fine. We'll probably get, all right, so we got improved. We got improved to 793. All right, beautiful. All right, so that is Best Buy. That is Caterpillar. That is Chipotle. That is SPX. Look at SPX. We're up $50 on the trade. There you go. So we'll wait and see again if things can cool off in the next 45 minutes or so. And if they don't, then we'll wait another hour. We'll go ahead and probably take it all the way to the close and just kind of see what's what. And so the rest of the portfolio, though, I mean, Target's obviously going to go away. That was a butterfly that we missed. And so that's going to go out the pasture. We've got Wolf with a U, crushing it in Wolf with a U, up 35 cents. Like that's some really, really good stuff. And then everything else is just kind of wait and see. There's not really a ton to do here. We've got Rocket Lab, we've got your Palo Altos. I mean, Palo Alto is looking pretty good, so but we'll sit tight in that and go for 50% of max profit there. And that's pretty much it. I mean, I think that's it. And again, Powell saved us. He saved us. And he didn't even need a purple tie to do it. It's crazy, man. That's some crazy stuff. I couldn't believe it when I saw it. I still don't know if it's true. Like, I kind of think like somebody deepfaked us on that Powell video. But anyway, I digress. So let's see here. Where are you guys at, though? Let me get to you guys. Let me see if I can find oh, so a Xander 992. So a Xander 992, this is a great comment. This is a great comment. A Xander 992 says, can someone help me understand when to listen to what Dr. J says? It's hard to learn when everything said is loaded. LOL. Yeah. So it's funny that you bring that up because I actually think about that a lot, right? Because honestly, I do bring a lot of sarcasm to the show. I do bring a lot of inside things to the show, and we try to have a good time, right? And so I'm like, man, if I was brand new to the show, like that would probably be irritating to me. Like that would be irritating, it would be slightly confusing, and it would be like, hey, like what's going on, right? And so that I'm aware of this. I'm aware of this. Now, to some degree, I probably can't fight too strong against it to get rid of it. It probably isn't going to go away, but I am going to try to do a better job of kind of more clearly identifying like, hey, like, this is a teachable moment, or like, hey, like this is like how you should think about this thing. I mean, joking about fading me and all those kinds of things, I mean, that's all in good fun. Although obviously you guys know if you're serious about making money, that's what you should be doing. And so a la Target, a la even SPX today. I mean, we missed it because it went to the upside. Like, in fact, that's actually a perfect teachable moment. But for a Xander 992, I'm aware of this. It's going to still stick around to some degree because we've kind of built up a little bit of mojo in that regard. And so I don't want to get rid of it because I do think that, it adds an element of fun that you might not necessarily be able to find on other financial shows, not necessarily on Tasty because Tasty is all fun, but of course elsewhere in the marketplace. So I don't want to totally get rid of that, but I am going to try to do a better job of saying like, hey, this is something I think that you can learn from. And these are like my honest, like serious thoughts. Case in point, what I'm about to say right now. So with our butterfly, so with SPX, this is so interesting because we're going to leave it on and try to get, a bigger profit, whatever, but that doesn't even matter. We played SPX to the upside. Like if you saw the show yesterday, Xander or anybody else, I said, hey, let's play SPX to the upside tomorrow. Like, let's play this thing higher based on Powell, based on whatever. And that's exactly what happened. But here's the tricky part. With a butterfly, it's not just direction that you have to get right. You also have to get right the magnitude. So you also have to nail, you have to get the directional move right, but you also have to nail the magnitude of that directional move. If you overshoot your mark, which is exactly what's happening to us in SPX, then you may also reach maximum loss. Like you may not only not have a profit on your hands, but you may also reach maximum loss. Now, right now I'm getting lucky because it's in the corner of my eye. And I mean, SPX is coming back a little bit. So we're up about $150. But I mean, up until just a couple minutes ago, we were right around a scratch or even, some amount of red on the trade. And so remember, Xander, everyone else, when you do a butterfly, it's a great directional trade. It's a great way to play direction in the market, to take a shot, bullish, bearish, whatever, and do it in a relatively cheap way with the potential for a nice payoff if you get it right. But just understand, it's a two number combination lock, right? You've got to get direction. That's number one. You also have to get magnitude. That's number two. You can't get away with just one or the other. You can get the directional move right, but miss the magnitude, which is essentially what happened to us here on SPX, and you're not going to have a good trade on your hands. And so just understand that, with butterflies, that's what you're signing up for. Like you're signing up for a situation where you've got to get direction and magnitude right. So don't forget, it is indeed a two-piece puzzle. And so hopefully that helps a little bit there, Xander. But I'm aware of what you just said. And so I appreciate you, my friend. Thank you so much for being here. Oh, here we go. Here's another one. Let me surprise and delight somebody else, man. Let's go for a two for today. Let's do it. Let's do a little superset action on the surprise and delight. Tiago Lopez, or maybe even Lopes. I'm gonna go Lopez, even though, well, it's not a Z though. I'm gonna say Lopez. Maybe, I don't know. I'm just gonna go with. So Tiago says, Dr. Jim, could you share how someone would turn a broken wing butterfly into a risk-free butterfly after a certain movement? Yes, I can do that. So let's go ahead. Now, I haven't done this in a while. I've done it with ratio spreads more recently, but let's give it a shot. Maybe we'll figure it out. So if I go ahead and let's see. Let me bring up, I'm just going to bring up like QQQ. Well, let me bring up something I don't have a trade in. Let's do SPY. It's been a while since I've done a broken wing butterfly into a risk-free butterfly, but we should be able to figure it out. I hope so, at least. So let's see here. If I go into, let's go into like October. Okay. So whenever you're looking at a broken wing butterfly, here's another example, Xander. I'm going to try to keep this buttoned up, right? Now, I can't promise that I won't go off on at least 1 or 4 different tangents, but I'm going to try to keep it relatively buttoned up. Whenever you're setting up a broken wing butterfly, it's always a good idea to start with just a regular butterfly. So start with the regular butterfly because it gives you some idea around, I'm going to call it the standard pricing that is available for the butterfly at that point in time. And then from there, you're going to kind of do some finagling. You're going to kind of do some, some kind of work around the edges of that strategy to obviously turn it into a credit and do different things and things like that. So with SPY at 645, let's say I wanted to do a 645, 640, 635 butterfly. So this is kind of your standard butterfly. This is your standard butterfly that is just a 1 by 2 by 1. Everything is symmetric. Everything is neat and tidy. I mean, the feng shui score is 100%. Like everything here looks really, really nice. Okay. Maybe now you want to break a wing of that butterfly. So you want to break a wing of that butterfly to go ahead and create a directional component and potentially collect a credit on entry, which will increase your probability of profit. So for in that scenario, you're going to, let's say we break the downside here. So if I'm going to break, which if you're using puts that are out of the money, that would be the side that you would break. So if I break, and I've got my eye on this SPX in the corner of my eye, it's like, wow, 64, 68. We might be up a couple $100 now. So I might be slightly distracted going through this, Tiago, but hopefully we can still get you at least somewhat close to the finish line. So if I want to break the 35 strike down to the 30 strike, look at how that changes the strategy. So I go from, so now I'm left with, if you're listening to the show today, audio only viewer, that's going to be a tough pull for you because this one is going to be quite involved, but I'll still try to verbally lead us through the forest to the best of my ability. So now, instead of 645, 640, 635, I'm 645, 640, 630. So I have skipped over a strike. I have broken the wing on the downside. And so now you can see I've created a bullish strategy where I now have a put broken wing butterfly. If the market rallies and all of these options go out of the money, then I'm going to keep the credit that I collect. I'm going to keep the 80 cents. Now I may choose to manage, I may choose to manage early at some percentage of that or some chunk of that or whatever, but that's the basic idea here. And that's what creates such a high probability trade. Now you can see if I go back to the regular butterfly, 635, my pop is only 9%. But if I go to the broken wing butterfly at 630, now my pop is 63%. And so that's why the probability changes, because now you've just opened up an entire side of the market to be profitable, right? Whereas with the butterfly, you've got to nail the short strike. That's pretty much just how it works, right? But now with the broken wing, anything higher, I'm going to keep the credit that I collect. So that's what makes this such a strategically superior strategy, honestly, even relative to like a regular butterfly. Now, I do a lot of regular butterflies for the expected moves and the directional plays and whatever, so I certainly think they have their place. But when it comes to wanting to be a high probability trader, wanting to tap more effectively into the strategies that are available and the superiority of said strategies, I would say a broken wing butterfly is going to be a great choice for a lot of traders. Okay, so 645, 640, 630, as opposed to 645, 640, 635. The debit on the 645, 640, 635 is about 30 cents. Now, the market is open, the prices are moving, so this is not going to line up perfectly because everything is moving and wiggling around right now. But the broken wing butterfly is going to bring in about an 80 cent credit. So what is that differential? So that differential is about what? $1.10. When you do a broken wing butterfly, you are embedding a short put, or what? Let me start again. When you do a broken wing butterfly on the put side, I had to be very careful to include that. When you do a broken wing butterfly on the put side, you are embedding a short put spread at the strike that you are skipping. And here's how all of the pricing actually works. If you remember, if I bought the butterfly, it was a 30-cent debit. If I do the broken wing butterfly, it's an 80-cent credit. Well, what I'm embedding here is I'm actually embedding a 635, 630 short put spread into this strategy. And what is the pricing differential between the regular butterfly and the broken wing butterfly? It's a $1.10 credit, right? I went from a 30-cent debit to an 80-cent credit. That's a difference of $1.10 credit. Well, check this out. Let me go ahead and just delete all of that, and let me clear away the whole strategy. Look at the 635, 630 put spread. It is selling for $1.10 credit. That is not a coincidence. That is not magic. That is literally just the mathematical foundation of the strategy. This is the short put spread that you are embedding into that strategy. You are embedding it in for $1.10. And so if I'm going to collect this strategy if I'm going to put on my broken wing butterfly for an 80-cent credit, what I'm going to need to do to create the broken wing butterfly, hold on a second. Let me delete that. Let's go ahead. Let's clear that away. 645, 640, 635. We double up on that. We move that out. So eventually what I want to do is I'm going to want to buy back that short put spread for less than I collected on entry, right? So you can see, right? Turn this into a risk-free butterfly, right? Hopefully you guys are following me, like all the pricing and the embedded short vertical and all those kinds of things. I'm going to collect 80 cents right now, right? But that short put spread is worth $1.10. Well, in order for me to create a risk-free butterfly, I have to land back at what I originally looked at the beginning, the 645, 640, 635. That's not what I have now because I broke the wing, right? But if I want to have a risk-free butterfly, this is what I want to ultimately land on. Okay, if I'm at 645, 640, 630 right now, though, in order to end up at 645, 640, 635, and I know this is a lot, but remember, you guys can go back and watch this again. You can go back and pause and rewind and take notes and all that stuff. I'm going to want to buy back. So let me write this on the screen. I'm going to want to buy the 635 and sell the 630. So in other words, what am I buying back? I'm buying back that embedded short vertical. Because if I do this, what am I going to be left with? I'm going to be left with a 645, 640, 635. I'm going to be left with the original butterfly that I want, but I want it risk-free. Okay, how am I going to get there? What's the final step? Well, I collect 80 cents on entry. That short put spread is worth $1.10 though. If I go to buy it back now, I'm gonna be at a 30-cent debit, which makes sense because that's the original cost of the butterfly to begin with. So I have to wait for the price or the cost of that vertical spread to deteriorate, to go down below the credit that I collected on entry. So I have to wait for this put spread to be worth essentially less than 80 cents. Then if I step in and I buy it back for 79 cents, then I'm going to be at a net 1 cent credit and I will have a butterfly on that will have absolutely no risk. Because remember, when you put on a butterfly, what's the most you can lose? It's whatever you pay for it. Right? Now, not a broken wing butterfly, that's a different scenario, but a regular butterfly that is symmetric, the most you can lose is what you pay for it. Well, if I end up with a regular butterfly on that has a net credit, then my worst case scenario is I keep that net credit. So, Tiago, hopefully that helps, and hopefully that makes a little bit of sense. And I really appreciate the question because that challenged me a little bit today. That pushed me. On a Friday, too? Like, I expect to sleepwalk through these shows on Fridays, man. Y'all are challenging me a little bit too much. I'm going to be putting in for some time and a half today. And so I appreciate you guys in the end because I'll make a little bit more. So thank you guys so much. All right, let's go all the way to the beginning. Man, we're like done with the show. I had no idea the second surprise and delight would take that long, but that was such a good question. Such a good question. So let's see here. Oh, Brian Dowdy says, hey, Dr. J, Workday worked. Really? That's crazy. It was a short put, but turned into a strangle after you almost went bullish. That's very smart. Now I can't find trades even with Tom's watch list. What's a good way to find trades with low vol? I mean, I would just sort by low volatility and put out some low volatility trades, man. Like do some long verticals, do some poor man's covered calls, do some poor man's covered puts, do some diagonal spreads. That's what I would do. And so, don't fight the tape necessarily, and try to like, force feed in short premium when the volatility is really not there. Like I don't know that that's a great way to go. And so let's see. Miko's in the house. Dr. Jim is here. Gotcha, gang, assemble. That's right. We're here and we have your back. Dr. Jim, I appreciate you, my friend. Thank you so much. So Scramble Everything, the biggest event of Friday, 8/22, is in fact the Dr. Jim Show. Markets will move based on the level of humor emanating from the stream. Well, that would explain the sell-off. That would absolutely explain the fact that the market's been weak ever since we got on air, because we're C plus at a ceiling today, at an absolute ceiling today. And so Scramble Everything says the little gathering in Wyoming was a little warm-up act. Was it in Wyoming though? Like, I was watching the thing and it looked like it was in Kansas City. And I was like so confused. And I was like, is there a Kansas City, Wyoming that I'm not familiar with? Because when I think of Kansas City, I think of Kansas City, Missouri, just like everybody else. And so I'm like, did he go from Wyoming to Kansas City? Like, how are you going to bring all those bison with you? Like, how are you going to bring all those buffalo that you shot? Like, that's a crazy trek, man. And so was it in Wyoming or was it in Kansas City? I thought it was in Wyoming, but I was totally thrown off today by kind of like the city behind like the podium and stuff. It's like Kansas City. I'm like, it's weird. Anyway, Margin Walker, there we go. Dr. Jim, where do babies come from? Yeah, you need to ask your parents that one. Yeah, I'm not stepping in front of that train. Absolutely not. Finn West in the house. Aloha, Dr. Jim. What's going on there, Finn West? Appreciate you, my friend. Thanks for being here. Brad Glazier's in the house. Hey, Professor, we survived. I mean, I guess. I don't know. Now let's enjoy our weekend. Appreciate you, man. Appreciate you, too. Assuming that we did survive, I mean, I think that banana daiquiris are in order now. I think they are like, extra banana-y, extra daiquiri-y, and, man, just go for it. Just get it done. I actually have a date with my wife tonight. You know what's crazy? We have so few dates. Like so few. Like if we've had like 2 or 3, like since we've been married, it'll be, it'll be 16 years in October. That's assuming we make it to October 10th, which I checked Poly Market. It's only about a 60 delta, but we actually have we have a date tonight, which is super fun. So I'm very excited. We're not doing anything special. We're actually just going, cause I never talked to my wife. I mean, I have so many things going on with, all the things that I'm doing, and she has so much going on with homeschooling, and she's got all 3 kids in the rotation now. Like that's bonkers, man. Like all 3 got Penelope, who's 11, Eli, who's 10, or not 10, he's 8, and then Amelia, who's 5, right? Who's obviously our intern for the show, does all of my trading analysis. Well, now her time is split. Like she can't do as much analysis as she could do before because Autumn's got her working, man. She's in kindergarten now. And so it's funny, like I'll be passing through the house, like just to go in and get something to drink, use the restroom, whatever. I'll be passing through the house and I do not make eye contact with anybody because it is a total circus in there. And it's a total circus in there, man. I mean, I'm in and I'm out. Like I don't look. I'm tunnel vision, eyes forward. Don't care what's going on around me because it's just complete chaos in there. But I don't know how she does it, man. I really don't. But let's see. Brian says, I do and have asked Dr. J on time to get a delta of 100 for your answer. I'm not sure what that's for there, Brian. I'm not sure. But Ash is in the house. What's going on? Brian says, I think Dr. J's butterfly might have worked. Yeah, where are we at now? Oh, we're down now. Yeah, they got us. Yeah, they got us. We're down $1 now. Brutal. And so, yeah, that's brutal. And so let's see. David says, today's my last training day in the U.S. before heading over to the Philippines. I will be gone for about a month this trip. Man, have fun. I hope you have safe travels. I hope you have fun. And I think you typically go to the Philippines for, I can't remember if you have family there or if it's a vacation type of thing. But that's awesome, man. Like, I really hope you have a great trip and enjoy your time away. We all need a reset, man. We all need a hard reset, like from time to time. And so, I mean, mine's going to be Legoland. Right, mine's gonna be Legoland here in a few weeks, and by hard reset, I mean I'll still be sneaking in some peeks at what's going on. So let's see. Scramble everything. It's that do nothing strategy. Yes, that's right. Rancher's in the house. What's going on there, Rancher? Let's see. Margin. I'm having a really good hair day. Not Dr. Jim level, but pretty good. Yeah, I mean I don't know. We're doing okay today. This is not. I wouldn't say that. I mean that's pretty C plus. I would say too. But it's good to hear that things are working out well in your neck of the woods. That are Margin Walker. That's some good stuff. And so, Oh, Brian says, don't fade Dr. J. His ERA went from 9 to 2. No, it certainly did not. Especially with, I mean, obviously with BBY, Caterpillar was awesome. But this SPX thing, man, I'm really kicking myself for not taking it off this morning because I was like, oh man, I had the $5 like in my pocket. I should have just done it. And some of you are probably saying that right now, like Jim, just take the scratch and move on, but I can't do it. I gotta let it ride. And so let's see. Brian feels gross. I only have 2 trades on. Using it, hardly using any buying power. You know, Brian, I would lift you up here, man. I want to encourage you here. That I mean, especially with the VIX at 14 now. Like, hey, don't be in a hurry because I would be very surprised if we go through the fall like unscathed. Like if we go through the fall just like higher every day, no major happenings or whatever. Like I think that we're probably going to see volatility back to 20, 25 before the end of the year. And it might even stay there for a little while. I mean, if it hangs there for a week or 2 or 3, like that's going to be so opportunistic for us as high volatility, premium sellers. So now's not the time, man. Now, I mean, it's a Friday, right? Summer's coming to a close. It's like, man, like enjoy your weekend, spend some time with your family, spend some time with your friends. Market's not going anywhere. Market is 100% not going anywhere. And so it'll still be here on Monday. Although on Monday, wait a minute. I think on Monday we have Canadian durable goods estimate forecast revision in the morning at 8:30. So I take that back. This could be the end. You might want to go ahead and get a few last trades on. So Joel James, Dr. Jim, even when you're right on direction, you're wrong on magnitude. How do we fade that? Yes, that's right. I don't know how you fade that, but that's exactly what I was talking about with a Xander earlier. That's right. I don't know how you fade that one. That one's a little complicated. You're gonna have to kind of dig into some inception level analysis there and you figure it out for yourself. Like I've already spoon fed you guys so much. It's time for me to push you out of the nest and you've got to fly on your own now, right? I've given you the map. I've handed you the flashlight. You've got to go through the forest on your own now. And so you figure that one out, Joel James. I'm confident that you can do it. So see, iDub says, expected move SPX butterfly is a little rough at the moment. That's correct. 100% correct. And so let's see. Oh, Finwest says go to Thailand. It's 100 times, 1,000 times better. Yeah, maybe so. Brian says down on his SPX butterfly from it going up too much. That's correct. Although we're up now. Man, look at this thing, man. This thing's crazy. And so I'm tempted to take it off and just book the win. But again, the fact that it's cash settled, I'm like, something crazy could happen on the close today. Who knows? And we don't need that much. I mean, if it drops 10 points from here, that's going to be amazing, obviously. And so I'm going to sit tight and I'm going to do nothing and probably just let it go to the close. And again, we can report back on Monday because much like today, Monday's content not going to write itself, right? And so now we've got SPX butterflies and, all those kinds of things. And so there you go. And so let's see. Oh, Cheater says Trump just said it's up 1,000 points. Oh, did he? Yeah, that's about right. Well, I mean, if he's talking about the Dow, then he's right, basically. I mean, the Dow's up 860 now. It was up 900 a few minutes ago. And I mean, Trump's kind of in that era where, I mean, the Dow is the market, right? I mean, he's dead wrong, of course. But like, he's in that era where it's like the market is the Dow. Like, ooh, what's the Dow doing? Like, man, I haven't thought about the Dow in months. I haven't thought about the Dow in years until you just brought it up. And so obviously the market is S&P 500. Like, that is the market. Now, some of us prefer to like look at like NASDAQ or look at like whatever, but nobody really looks at the Dow unless you are over the age of 65, right? If you're over the age of 65, the Dow is everything, right? And so that would make sense that he would say it's up 1,000. Now, if he was like referring to like the S&P 500 or something, which also wouldn't be that surprising, that would be a problem. Margin Walker says fade the move, Dr. J. That's what I'm trying to do, man. I'm sticking in this SPX. We're fading the rally here, and we're just going to kind of see what happens. And so let's see. Raul says, what's going on up there? Nothing much, my friend. I hope you're doing okay. Let's see. Sam L, best way to finish the week. Man, let's go. Last P&L pump before the cheat meal. That's right. Spot me on these theta curls, bro. Yeah. It's all you, bro. Like, I didn't even touch the bar. I mean, I gave you spirit fingers, but it's all you, bro. Like, it's 100% all you. And so, yeah, no cheat meals tonight, I don't think, for me and Autumn. I don't know what we're doing. I think we're just going to get coffee or something. I don't think it's going to be anything too phenomenal. Actually, no, we're not having a cheat meal because we are going to we are going to have some coffee and then we're going to her dad's house, who he only lives like 8 or 9 minutes away, the Tesla guy, right? And what's Tesla doing today? Oh, he's going to be pumped because he's like the Russell NASDAQ Tesla guy. Yeah, Tesla up 18. Yeah, he's going to be super pumped. So that'll be fun. Like, I love talking to him about the markets and all that kind of stuff. It's always super fun. But we're going to watch a movie at his house, but without the kids, which is a whole different experience. Like normally we go over there like with the kids, it's movie night, whatever. You know, I drive my car in the floods, like things like that. But tonight, you know, we're just going over there, just us, to hang out with him, and that's going to kind of be our date because we all get along so well, and it's going to be so fun. And so I think he's making us dinner, if I'm not mistaken. But Rancher said the tie definitely looked on the purple side to me. Yeah, I don't know, man. Again, maybe it's my vision failing me. I'm going to make an appointment next week because it's kind of irritating me. But I think it was dark gray. Now, you got to zoom in. I think it wasn't obvious. Like a lot of times he'll come out, it's pretty obvious. It's like, all right, that's lilac. Like, all right, that's lavender. Like it's clear as day. But not today, man. Today, it was like you had to work for it. Like you had to dig in there to say, all right, what's going on here with this tie? Hey, look at SPX. We're up $1.70 on the trade, man. That's some good stuff. Let's see. Mr. Pillows, happy Friday. Dr. Jim, green candles for everyone. Yes, for you too, my friend. Thank you for being here. Mr. Pillows in the house, or laid back trader in the house. Everything is up today. That's correct. Sam L. Doc, did Uncle Jay just drop his farewell speech with a pump? Man, that purple tie's got power. Was it purple? Again, I don't think it was. I think it was dark gray. 400 points on our so-called risk-free instruments. That's correct, man. Some crazy stuff. Crazy stuff. Ava Sosa in the house. What's going on there, Ava Sosa? I hope you have a great weekend yourself, my friend. And then Rancher says, hey, look at our Chipotle put, Doc. It's green. I know. Look at that. Look at Chipotle. It's a beautiful thing, man. It's going to be so funny. It's going to be so funny if this thing comes back to where it's out of the money by like the end of next week and we never get assigned. We never actually get assigned. Like I'm waiting for it. Like I'm waiting for the other shoe to drop. Like I'm waiting for this to happen basically any day now. Now, I'm not surprised we've lasted this long. I don't know that we're going to be so lucky next week, assuming Chipotle stays here. Now, if Chipotle rallies another $2 or $3, then all of a sudden we're going to see the extrinsic value kind of balloon up. We're going to see this at 15 cents, 20 cents, whatever. And now all of a sudden it's like, okay, the extrinsic value enough is strong enough to thwart off the potential assignment. So it's a whole different ballgame at that point. But for now, we still have to kind of wait on the razor's edge of getting assigned. But let's see. Larry R is in the house. Larry R says, I can buy a long zebra 45 days to go with 100 delta for 10 to 20% on liquid equities. What is the downside in selling my long stock positions and buying zebras? Yeah. So let me see if I don't have a lot of time. I'm going to do this super quick. Super quick. You have to keep in mind, let me bring up like IWM. IWM. So if I go into IWM and I go into October and let's say, I want to do a zebra. So I buy, a couple 75 calls and I sell, a 50 delta call. So this is your basic zebra, right? So here you can see I'm paying $28 for, is that right? Yeah, that's right. The buying power effect looks weird because I already have an undefined risk position on. So don't pay attention to that. So this was not a great example, but I tried to rush through it. Basically, the idea is this. Oh, Larry, it can be a great stock substitute. It's going to save you a ton of buying power. You're 100% correct. Don't look at mine. That's not right because it's commingling with the other position that I have in IWM. But the reality is this. It's a leveraged long position. And so you can actually, if the stock goes down a lot, you'll be better off for having the zebra. If the stock goes up, you're better off for having the zebra because you were able to take advantage of the capital more efficiently. But if the stock goes down like a modest amount or like a medium-sized amount, you actually end up worse off for the zebra than you would be for the long stock. So that's essentially the gotcha. That's the big gotcha. Because remember, for every gimme, there's a gotcha. You just got to look for it because it's always there. Remind me of this on Monday, and I'll go through this in a bit more detail if you guys remind me on Monday. But I have to go. I'm out of time. I got to get you guys to Jamal. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven. What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
What's going on, everybody? We're here on a wild Friday with markets running big to the upside. And I got a special guest, of course, the man himself. I'm going to start calling you Gus from the street, man, because you kind of do it like Billy from the street. It's Gus Downing, everybody. What's going on, dude?
Oh man, I'm doing good. I'm pretty much perpetually long delta until proven otherwise at this time. So I'm flying today. This has been one of the better days that I've had all year portfolio wise. So I can't complain.
Nice. I probably messed myself. I'm like flat today, just from like 4 trades that I did over the last couple of days. As much as I was like sitting on my hands, I got a little antsy and I did like, I don't know, like 2 different short delta trades and one like, I don't even want to talk about it. It's so annoying. I'm just like flat today. It sucks, but whatever. It is what it is. It happens, man. You can't get around it. What do you think about all this stuff from today and Powell and all the discussion and possible rate cuts?
I think it's interesting. I don't know. It's the conjecture surrounding rate cuts recently has been very interesting to follow. You have I've seen some analysts saying that there's justification for a 50 basis point cut, and I've seen others saying that we need to not do one for the rest of the year. Everybody's very torn on this issue, and it's also the Fed has become more politicized this year than I think it ever has been, maybe in the history of the Fed, which has been interesting to keep up with on the news cycle on that side of things as well.
I know, right? It's a trip. I mean, of course, you've heard the back and forth between, well, it's really not back and forth. It's mostly just Trump going at Powell.
It's mostly forth.
It's kind of one-sided. But it's a trip. I mean, I have honestly, most of the year I've been like trying to figure out if and why we would need a rate cut. And for me, honestly, the only reason I ever thought that it was going to happen is if something happened with the labor market, which is basically what Powell kind of alluded to today. They're kind of basically saying that he's expecting potentially more, downturn in the labor market. That was the only way they were ever going to really cut. If it was going to be for a bad reason, it was never going to be like, oh, things are so good right now, we can cut. It was never going to be that, I didn't think.
Yeah, and it's a tricky year. I mean, the Fed is really everybody on the Fed is earning their keep this year. It's been really confusing, and obviously it's really hard to maintain the dual mandate when you have the tariff pressure and you don't know what kind of inflation that's going to create. In a lot of cases, we don't even know what kind of tariffs we're going to be looking at, and so it's quite the song and dance they've been having to do this year to stay on top of everything.
I know it's a trip, man. Where'd you go to school again?
Texas A&M.
That's what I thought. But you didn't grow up in Texas, or did you?
I mean, I've lived there since I was 14. Cincinnati for my formative years before that.
That's right. That's right. That's right. And so you root for Cincinnati teams or you root for Texas? I can't remember.
Yeah, I'm Bengals, Reds, and then Rockets NBA because I didn't have an NBA team until
That's
the move.
right. That's right. That's what I was trying to remember. Because I was going. Well, there's two reasons why I'm asking. One, it's that time of year where people are returning to school. My older two kids just returned to school. They're at Wisconsin and Marquette. But then the other thing, I couldn't remember if you were like a Texas fan, Dallas fan, because they got that new Dallas documentary out. Which again, I've never been a fan of the Cowboys, but it's an interesting documentary to watch. I don't know if you've been watching. I kind of like it actually. I'm not gonna lie.
No, I haven't. I haven't seen it. I'll have to give that a look. I need to watch the wide receiver series on Netflix as well. I haven't gotten around to that one just yet either. Quarterback was excellent.
Oh yeah, quarterback's excellent.
Yeah, but it is, and it's certainly that time. I am amped. I am amped for college football to start tomorrow. I just last week I bought my tickets for when Texas A&M is coming up here. I believe that's 3 Saturdays out now to play Notre Dame. So gonna shoot over to South Bend, and that'll be a fun time. But yeah, and then hopefully the Bengals have an O-line this year. We just keep signing O-linemen, and it keeps on sucking. So we'll see what happens.
So wait, so you did see the recent quarterback with Joey B?
Yes. Okay.
Yeah, that was good.
Had to
I actually like him even more, and I kind of liked him before. I like him even more now after that.
Yeah, I thought the same. It's just that whole series is just so incredibly well done. I'm a big fan. I'm looking forward to another season. But it was really cool having it close to home this year with Joey B and kind of getting to see the inside of his life. It's NFL quarterbacks, they take a lot of flack, but nobody considers like the mental game that being a quarterback is, and just the wealth of knowledge that you have to have about football and your own playbook and just being able to call the plays. It's insane sitting there listening to them go through the play calls in the huddle.
It's so well done that I don't even really hear anybody talking about Hard Knocks this season. It's kind of interesting how that works, but these are just way better than like Hard Knocks. I feel like Hard Knocks most of the time, obviously, they're trying to make sure that things aren't distraction for the whole entire team. Whereas whoever signs up for this quarterback thing, they just kind of like, okay, well, I'm going to do it. This is like kind of who I am and how I live. I'm sure they're kind of guarded on some things, but for the most part, they seem to be kind of out there, you know what I mean? Which is kind of dope. And it's interesting in this landscape that's changing for streaming, like more recently you're hearing about Disney and ESPN and what's going on with them having like their all-encompassing app now that's going to be separate from like the YouTube TV type stuff and regular like streaming. And then there's going to be this some kind of combination between them and Fox One. And then, how basically recently what was it? The NFL Network basically sold them the intellectual properties and stuff of Red Zone and for a stake in their company. It's kind of wild, like all the things that are happening right now across the whole streaming landscape.
It is, yeah. We're definitely at an inflection point as far as sports viewership goes, and it's interesting. And it's interesting to see things almost turning back around, or at least these companies kind of trying to bundle up all of their properties and sort of revert back to almost just what cable was, giving away these, not giving away, offering these all-in-one bundles that you can pay for. Paramount Skydance also just signed a contract with the UFC to take over streaming there, which is as a Paramount decision, no pun intended. It's it's a big one. It's the end of pay-per-view in the UFC, and it'll be interesting to see if boxing is set to follow that. And I'm really high on that move for both parties. I think it makes a lot of sense for Paramount. I will be buying a Paramount Plus subscription now, and I'm sure that there's lots of others that will be. And it makes a lot of sense for the UFC too. I think it's really hard to try to grow your sport when the barrier to entry is so high, when you need hundreds of dollars a month just to be able to keep up with it. And so I think lowering that barrier to entry will do great things for them as well.
I know it's a trip. You're basically going to need like 3 or 4 different subscriptions just to be able to watch NFL. And all these, but it's the only way they can justify some of the numbers that they're paying people these days, right? Like it's just kind of wild.
Yeah, the NFL especially is getting out of hand. You got Thursday Night Football on Amazon Prime. Netflix has the Christmas Day games now, and then you got 3 different networks you need to have to be able to watch everything on Sundays. Red Zone is with ESPN now. So help me God, if they put commercials in Red Zone, I'm going to riot.
I know, right?
So it is. It just keeps getting harder and harder, and it's frustrating. I am one of the ones that was shouting for a la carte programming when cable was prominent, and now I will be the first to say I was wrong. Can we please go back? to cable. This sucks. What we got going on here does not work for me.
I know. It's almost like we need to band together at some point in time and say we are not paying for these streaming services or whatever. I mean,
I'll pay $300 a month if you can give me an all-in-one service where I can legitimately watch everything. I don't care. It's just the inconvenience of it. Having to scroll down in my app and see what channel this is on, and then go see if I have that on my streaming service. Or you pay for NFL Sunday Ticket, and it's like, oh, will they carry this game? NBA League Pass is the same way. You pay for NBA League Pass, you get like 2 games a night. It's terrible.
for real? Yeah, I've never done that one. I've never done.
League Pass sucks. MLB TV is nice. That's like the most robust offering. You can get actually most MLB games with that, but they have local blackout restrictions. I don't care about the Cubs. I'm not a Cubs fan, but I can't watch Cubs games in Chicago when my Reds play the Cubs and it's in Chicago. That game is blacked out for me. It's so crazy.
Didn't that just happen like last week or a couple weeks ago, something like that? I feel like that happened recently.
Yeah, they were here. I guess 2 weeks ago now. Yeah, I did. I went to it.
I feel like it happened, and it was actually supposed to be on TV, but it was blacked out.
Yeah, and it's and the blackout restrictions. It's like, I don't know how MLB TV plans to sell subscriptions if people can't watch the teams in their local markets. That's the most typical case for a fan. I'm sort of in the minority there, having my team be in another city for the last decade. But yeah, it's getting crazy. I wish I could just turn on my nice DirecTV interface and pop in channel 5 and have the NFL on my screen.
Yeah, dude, it's wild, man. I can't even keep up. I mean, the fact that you remembered that, what's on Thursday, what's on Saturday, like where things, I can barely keep up anymore. I don't know what it is. At least we still have college football on regular TV, at least for now. Who knows how long that's going to be the case, but that's still nice. I didn't even realize they were starting. Who's playing this weekend? Games are starting this weekend?
Yeah, it's week 0 this weekend. So there's just like 6 games or something like that. The most prominent of them is Kansas State, Iowa State, which is like number 17 versus 21. I think that's the only ranked matchup. And then there's a scattering of other obscure ones. Hawaii is playing. Sam Houston State plays Western Kentucky. Mixed bag like that.
You know what? I'll take that.
There's gonna be meaningful football on my TV tomorrow. Yeah, exactly. That's all I care about.
I'll take that. It is what it is. Yeah, man. Like I said. Oh, geez. All right, let's just do the autopsy on some of the positions here. So the best thing I got going here is just earlier this week, I bought a NASDAQ call spread. It's pretty far up, but it's not really. It's like maybe 5% out of the money, maybe a little bit better now after today's move. But I got to 25,000. I got basically. I'm sitting here for the all-time high, 25,000K print, and 25,000, excuse me, print, 25K print. This is further out in October. Honestly, the reason I put it way out here. And basically it was risking like 1 to make 3.5, maybe 4. But the reason why I put it way out here is because I figured, okay, end of the month, October, I'll be able to capture like 2 more jobs reports, 2 more inflation reports, and the best thing that could possibly happen, real talk, this is how I thought about it. Best thing that could possibly happen is that these jobs reports haven't been looking good. Inflation reports probably going to come in high. Fed's probably going to be somewhere in the middle, but at some point or another, if the job reports aren't good enough, Fed's going to have to cut. Market might like it. Lo and behold, maybe we're at the beginning of that. I don't know. It was kind of the same idea for this Russell 2000 call spread. I originally had this thing in the end of September. So yeah, September 30th. I think I just rolled it out like either early this week or something like that. And it was for 2,400, 2,500. That's working. So I should have just left those, Gus, and just kept it on. But for whatever reason, literally yesterday, I was like, I don't know how much this thing is. They're expecting like what was it? Was it like a 60-point move? Maybe this thing is going to end right around 6,400 on the day in this ES. Let's just sell this. Now, it only cost $600, but it was so dumb. I don't know why I was trying to do an iron condor in this ES, but whatever. I was like, whatever. I'm just going to try this. That didn't work out. The other thing was, Intuit. I'm glad I only got one of these. This is a calendar call spread. I was hoping that maybe on earnings, this thing would fill the gap here, like in this range, and maybe jump back up. Upwards of 750 and change. Didn't happen. Obviously, earnings went the other way. Luckily, I only did one. I was actually trying to get 2 of these. Didn't happen. And then SPX. Literally this morning, after we're up like 90 handles, I'm thinking, okay, well, we're around like 64.50. Maybe we'll just fall back below. It was like $500 in premium. I mean, not premium, but whatever. I paid $500 at the. It was like risking 1 to make 3. I was like, I'll do this. That didn't work out neither. So yeah, that's kind of been my day. But That's why I'm flat. I got these great situations of these call spreads and some long deltas down here that are working for me. This FIG, this UPS, this Russell call spread, and this Nasdaq call spread. But then I kind of shot myself in the foot, and that's why I always tell you guys, don't overtrade when it's boring environments. Okay, this is what happens.
Yeah, it can be so difficult to sit on your hands on some of these boring days. I had a trade earlier this week. I was looking at yes, Win. I got short Win casinos and resorts, and that was one that I was just bored all day one day and decided towards the end of the day, like 257. I was like, I am so bored. Let me get something on before this day ends. I got short some Win, and that's biting me right now. It's pretty long dated, looking at 150 days to expiration essentially. So we got time for this thing to drop. But yeah, Win. This is sort of a stock I never paid a particular amount of attention to until they had earnings earlier this week. But it's a real mover. This thing will take some big swings, like intra-year if you're looking to play some 150, 180 day type timeframes. It's been kind of in the same channel for the last 2-3 years now, and it'll move all the way up to 120, shoot back down to 55, and then go back off again. Really cyclical thing that has to do with Vegas travel numbers and all that good stuff. But my fundamental thesis is that I think Vegas is dying a little bit. I think that it's getting less and less attractive to the player. The rules in the casinos are getting worse and worse. It's all getting more and more expensive. I was seeing an article earlier this week or last week about a bottle of Dasani water at Wynn is $14 now. What the hell are we talking about? So I think that we're going to hit some kind of point where Vegas travel will take a steep fall off, and then there's going to be sort of a renaissance of old Vegas situation. But yeah, Win, it's just it's been finding a lot of resistance in this 110, 120 range. Thinking that'll come back down for me. Then Cracker Barrel is one that I put on yesterday amid all of the logo change drama, which I thought was a
what was
exaggerated.
the deal? What was the deal? What was the news in there? Really, I kind of saw it really, but I didn't really dive into it. What was the real deal in here?
Yeah, they have a new CEO. She took over in November of 2023, and she said that she didn't think that Cracker Barrel's brand identity was where it should be, and so she immediately started making kind of fundamental changes. Made some changes to the menu. They're working on renovating all the interiors of their restaurants and making them look a little more modern, which kind of goes against the fundamentals of Cracker Barrel as a company. The whole point is that it's a little bit old school. And then yeah, this
like
logo.
by modern, they're talking about like getting rid of like the general store type deal.
Yes.
That is so
The
dumb.
new Cracker Barrel locations. Errol and I had some pictures of them up yesterday on stream, but they honestly just look like the inside of like a nice new Culver's or like a Wendy's. Like they're kind of stripping the identity out of them, and it very much gives off the vibes of somebody who has never been to the South trying to build like modern looking farmhouse style interior. I'm not a particularly big fan, so the pressure has been mounting, and then it seems that this logo change was just the straw that finally broke the camel's back and made everybody start shouting about this and brought broader awareness to this issue, if you can call it that. Cracker Barrel has lost 20% of their valuation since she took over as CEO, so perhaps these moves are not for the best. But they lost $200 billion, $200 million in valuation yesterday. Not billion, obviously, it's Cracker Barrel, but $200 million in value yesterday off a logo change, dropped 12.5% into the open, and so I grabbed some of those at the very, very bottom. Just got some short dated calls. Whether it winds up being a dead cat bounce or the market eventually just realizes that a logo change changes nothing about the fundamentals of the company and it returns to its previous levels, I don't know. There's also the tail risk situation where this is enough that they oust this CEO and they revert on all these changes, in which case I think it would fly. So yeah, felt like there was some good put side premium, so I picked up a short put spread on that one.
Interesting. Yeah, $7.25 over the next 28 days. 60 plus implied vol. That's a serious vol for a restaurant situation. I don't understand why they would change the general store feel. I mean, that's your whole brand. Like sometimes, these new CEOs, they come in, they think they're going to change the brand, and it's like, why would you do that when it's working well for you? You know what I mean? Like stick with what's working.
Yeah, exactly. And I keep seeing people throw the Bud Light comparison around. That's what I've seen in the media a lot recently. And I mean, I do think it's a fair one. It's a very similar situation where you have this cult-like following. You're in a market where there's a lot of perfect substitutes to you. So branding and brand loyalty is kind of the main thing that you have going for you. And so doing things which alienate your core base of customers in the name of growth seems like an oxymoron.
It really does. Yeah, I don't get it. I'll tell you what, if they mess with those cheese eggs, though, they're really messing up. Okay, don't mess with the cheese eggs and grits. Those are really good there.
Yeah, I like biscuits and gravy. I'll throw down some Cracker Barrel. I like Cracker Barrel.
Sure.
It's always good service and fun ambiance. It's nice.
For sure. Cracker Barrel is good, man. I definitely I haven't been there in a while. It's been a minute, but I mean, you kind of got to go out of the way to get to one of them. You know what I'm saying?
Yeah,
Not
yeah.
exactly
It's
Cracker
like a
Barrel.
road trip type of food, and usually when you're on the road trip, you don't really want to stop and sit down in a Cracker Barrel for 45 minutes. Yeah, it's been some years for me too. But I've never had a bad experience.
Yeah, no, for sure. Oh, as we're sitting here, I just remember there's probably a couple of things I need to close. I had this Strangle and Robin Hood more recently. Talk about vol. Their vol is kind of elevated, 60 and change. It's probably time for me to close this thing. This thing, 20 IVR. Time to get out of here. Reclaim some Lucchini. Well, oh, come on, seriously. What are we doing here? Oh, don't be stingy. Just give me the damn money back. Close that out. Yeah, I had that on for a few days. There's something else I wanted to close. Oracle. It's still 68 IVR. I typically don't like to sell something in front of earnings, but after those couple of days where we had all the AI related names down, I figured, I'm going to sell some of these. These are going to bounce back hard. This one bounced back, but not as hard as I wanted. So I'm still going to close it because I really don't like to be short something heading into earnings. Who knows how it plays out, right? Earnings is such a crapshoot.
Oh
So
yeah, especially a stock like Oracle that's shown the propensity to move the way that it has this year. That can be a dangerous one.
yeah. Oh, and to wrap went up. You're totally right. This is actually. I was in Vegas. I usually go to Vegas every March with a bunch of buddies. Go for March Madness. It was kind of empty this year. It was definitely not as populated as it normally has been, but the prices were still high, which is ridiculous. And I think that was obviously a part of it. And this name does move. I used to trade this quite a bit. I don't know how much you pay attention to the Macau numbers, but it used to move a whole lot off of the Macau casino numbers. Because they have obviously casinos, Win casinos in Macau too, and I feel like that's a large part of their revenue. What goes on in Macau, but I don't know how much they move off of that. Still, that's still kind of a thing to keep an eye on too.
Yeah, and it's another one where like because I'm huge on gambling stocks in general. Your DraftKings, your Flutter, your Caesars. I think that these things are only going to grow because anytime something isn't legalized in all 50 states but will be, that's kind of just like clear and prominent opportunity for upward growth. But in the case of Win, they don't have apps like that. They're not really trying to break into this, nationwide sports betting craze. You're just relying on their resorts and hotels. And so, yeah, with the way that things are dwindling in Vegas, I mean, it's getting crazy. I just went on a soapbox the other day, so I'll try to keep this brief. But you go on the Strip, Treasure Island's the only place with 3-2 blackjack. Everywhere else is 6-5 blackjack. They're killing the player there. The sports books aren't empty. You mentioned March Madness. I hear March Madness used to be great, but like I know this past year, if you wanted to go to Circa Sportsbook for March Madness, it was $300 for the AM session, $500 for the PM session, or you could save $50 and pay $750 for a ticket the whole day just to be able to sit in the sports book that you are gambling in at 11 to 10, mind you. So it's just it's getting to be. It's just too much. I mean, it used to be a place that college kids could shoot off to on spring break or for a bachelor party or whatever, and kind of have some good cheap fun and make some memories. But it's just not the case anymore. They're really trying to appeal to a higher end demographic and get more into the event space. They have all the sports teams coming there. They got the Sphere, but gambling is your bread and butter. It's almost like a larger Cracker Barrel situation, like we were just talking about. You're alienating your core demographic by trying to turn over into this wealthier event city. And I don't know who that has more money than they know what to do with is choosing to go to Vegas rather than to go to LA or the Maldives or, wherever else, you name it. So it just seems like a very interesting course of action. And yeah, like I said, I think we're going to hit some point and a bunch of these casinos are going to be getting close to bankruptcy or going to have to close or sell or whatever it may be. And things might turn back over. We'll see.
I know that's the hard. First of all, great analysis, dude. As always, Gus comes on the show and gives great analysis. I don't know if you guys saw a few weeks back when he was on here and he gave this was a couple of months ago now, actually, when he talked about Match.com. Great analysis there, and you're absolutely right. Like it's. I think that's the complication of these type of companies, going public, right? Like at some point or another, the shareholders want to see more. They want more here. You want to grow this XYZ by multiple. It becomes a thing, and it's definitely something that's starting to affect these casino companies. Well, I haven't even looked at MGM in a while. Not MGM. Yeah, MGM at the same deal. Wow, that's a big move today by them, 5%. Yeah, what are some of the others? I kind of forgot about this space. I really have.
Yeah, Caesars is CZR.
Oh yeah, that's right. Caesars.
Yeah, DraftKings, DKNG. Yeah, Caesars hurting.
I know these guys clearly. I mean, those casinos are clearly like, oh, interest rates are coming down. People are going to come back out here and spend money with us. That's what they're clearly thinking.
Yeah, exactly. Yeah, it's yeah, nobody's getting stimulus checks this year, so we'll see about that.
I'd be remiss if we didn't talk about a little bit about home builders, because obviously this is an area that should benefit from rates coming down. I feel like this has kind of been a stagnant part of the market, but I think some of these names are about to really. I'm curious to see if they're going to really start taking off. I might have to investigate on some trades in here. Some of these names.
Yeah.
Do you pay attention to the housing market at all?
No, I mean,
there's no reason you've had to, really, honestly, over the last couple.
There's not many stocks to look at there, but I mean, I do think it's an interesting situation. I know inventories are rising a little bit right now, and yeah, the building side is something I can't say I ever really look too heavily into, save for if I'm trying to make a play on Home Depot or Lowe's earnings or something like that. But yeah, I do pay attention to the real estate side of things, the inventories and rent prices and those kind of things. Airbnb kind of dying out a little bit as well. I've been catching the vibes of that on social media and whatnot. And honestly, I think that this applies to me as well. Airbnb has kind of turned over. It used to be a cool place where you could, get cheaper rates than hotels and have a little bit of a personal touch to things. And in that case, I was fine with, dealing with the bull crap of having to put my towels in the washer or whatever it may be as I'm on my way out of the house. But now these things are more expensive than hotels. I mean, when I was traveling in college, it was, especially early in college, it was always Airbnbs. And gradually I've just shifted to where I'm pretty consistently staying in Hampton Inns now, just because the Airbnbs, I'm priced out. And it's crazy. There, there's a $300 cleaning fee, and then they double ding you because you didn't, there's some toothpaste in the sink or something. It's like, well, why is there a cleaning fee in the first place then?
I concur with that. They're not as cheap as they used to be for a while there. The last time I think I got a real cheap one was in 2020. Obviously it was pandemic, so a lot of things were a lot cheaper, but we were in the house and I was just like, I got to get out of here. So I took the fam down. We rode down to sort of the panhandle of Florida, got this nice Airbnb. And it was, again, that used to literally be like a phrase everybody would say, oh, we got this nice Airbnb. It is just not like that anymore. They're just average now. And most of them are, like you said, comparable prices to hotels, which at that point, you're like, I might as well just choose a hotel. I'm not getting a deal here on this Airbnb.
Yeah, exactly. I'll choose a hotel. I'll come back to a nice made bed with some clean sheets every day, and get breakfast included, whatever it may be. But yeah, Airbnb, it's just the hosts especially have just gotten a little bit crazy with the rules. I had such a terrible experience with an Airbnb in Miami in 2021, and that might be the last time I stayed in one.
Well, it sounds like we need to create an Airbnb where you can get a little delivery of Cracker Barrel, and that'll be a sort of a combination there.
Yeah, blackjack table in the living room.
With the blackjack table in the living room. That's what I was about to say. I love it, Gus, man. Hey, great to have you on as always, bro. Can't wait to have you on again.
Yeah, appreciate you having me. I love being here. This was a lot of fun.
All right, man. Folks, thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. We'll see you.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
If you have any questions, feel free to toss them in the chat.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Hello, everybody. Well, I'm back. Last saw you on Tuesday. A lot has happened since then, mostly a few hours ago. Wednesday and Thursday I had a ball, but today Powell succumbed to the chiding of Trump about interest rates and finally just threw up his hands and said, fine, we're going to change policy. So it's a foregone conclusion at this point that on September 17, I think, they're going to drop rates, as if that's going to solve anything. But yeah, he gave in. He caved. And so the market is celebrating. Everything's up except the dollar. Equities are up. Gold is up. Miners are up. US dollar, because naturally, with rates falling, the dollar's not such a great place to stick your money for those around the world. And so the US dollar is getting even weaker than ever. I've got a fairly large number of charts to go through, and it feels like Monday to me, but this is Friday, so let's wrap up the week with those. So off we go. We begin with the spider. We made a teeny little new high on an intraday basis, probably a closing high. We've still got about 40 minutes left, but the prior peaks were set very recently, back here on the 13th, and again on the 15th, and today we just, by just a little bit, pushed above that. Essentially, the past 5 days of weakness were undone in about 3 minutes. Once Powell's text hit the wires, things started to spring higher, and it's just been kind of adding to that, although in different amounts. Like at this moment, the ES and the NQ are up 1.5%. The small caps are up more than twice that much. Small caps are very strong right now. Bonds are up. TLT is up about 2/3%. We're still deep within the mire of this very long-term pattern. So, as you can see, it doesn't really change anything fundamentally. We've been traipsing around this zone for years at this point. Of a special interest to me, though, it's kind of a favorite of mine, is IEF. This is looking better all the time. It hasn't quite broken out yet, but this is the 7 to 10 year Treasury Bond Fund, the ETF, IEF, and we are up about the same amount, a little more than 0.5%, but it's a beautiful base. And I think, should we push above that, not only would it suggest that rates in that time range for that maturity would be dropping, but this instrument itself should do quite well. The diamonds, I'm out of those. I got out the moment I saw things spring into life after Powell, and a good thing too. They've just been strong all day long. And the diamonds are up about 2%, lifetime high close, lifetime high intraday, and at one point the futures were up about 1,000 points on this. It's around 864 right now. But yeah, big burst above, and the prospect of this being an inverted head and shoulder continuation pattern is just too strong. So yeah, like I said, came in the day with some October puts, got out nasty, but could have been worse, and it is just springing higher on that one. And the IWM, as I said, is especially strong, up almost 4% here. And in this case, there's you know what, we're just going to recycle this line, because the only purpose this really has is to denote the prior lifetime high way back in the day. So that high was set, when was that exactly? November, around Thanksgiving of last year. We'll just change this to red to make it easy to see. But as you can see, we're getting pretty close to it. Not that long ago, we were miles away from the lifetime high. But since April 7, it's had this tremendous explosive move, and we're getting in the vicinity of where it had been late in November and early in December of last year. The cubes are of about, well, not even half that much. It was the same shtick there, in which there was a fall, and an undo. This undo is not as big as some of the others. Like the IWM you just saw was a monstrous bar. This bar, it undoes the past couple of days of weakness and a chunk of the day before. So we're back to where we were sometime on Tuesday. Not lifetime highs intraday, not lifetime high close. It's just weirdly the Nasdaq, which had led the way so powerfully through this bull market, has changed coats, and now it's a little bit of a laggard. The SMH, the semiconductors, is a percentage-wise stronger than that. Of course, now that Powell's out of the way, the big event, maybe even bigger than this, is Nvidia in 3 trading days. If the reaction's like this, if it's good news and people embrace it and bid things up, the bulls probably have a clear pathway, probably to the end of the year at least, certainly through earnings season in the middle of October. We'll see. I don't have any particular strong views about Nvidia itself or the semiconductor sector, but that is going to be a red letter afternoon. And of course, the effects won't really be felt until Thursday, because it's a post-market announcement. Here's Nvidia itself. It's up about the same as the Nasdaq. It's not at lifetime highs. It certainly will be if they have a strong earnings report. But this is a tremendously important report. The sort of unchecked fervor of the ascent stopped a few weeks back, and it's kind of marking time right now. As you can see, it's been weeks at this point, just kind of hanging out more or less in that vicinity. And Intel has been in the news lately because until a month or so ago, it was just a dog. It was just completely separated from the Nvidias of the world. Because Trump has taken an interest in it and has directed the U.S. government's money into it as an investor, and SoftBank has put in an investment, it has sprung to life, but it's not doing anything real except getting it to the high end of a range it's been in for many, many months. You can see here that we sort of dropped into this range with this huge gap. And so ever since, well, it's a year now almost. Yeah, we've just been grinding around for a year within this rather wide range. So in spite of all this good news, big SoftBank investment, U.S. government investment of all things, I never thought I would say that, but yeah, the U.S. government's common stock, it's just undoing some of the ugliness lately. As an illustration of how strong things are, Mexico, which it's reported that the U.S. is about to send the military into to hit the cartels, even the EWW is springing to life. You would suspect that with the prospect of a military, an unwelcome military presence there, that it might sour relations and therefore trade between the two, but market doesn't seem to care. So EWW is up over 2% right now. And you've probably heard all the chatter about Cracker Barrel. You and I followed this for a long time because they have this really cool pattern going on where it would like top off and plunge, and then top off and plunge. They had this kind of what they call scallops all the way down. And it seemed to stabilize for a while, but that kind of ended recently and had a big drop yesterday because all the logo change press. And I would say that, you know, it's up right now, it's recovering to some degree, but that's a pretty nasty gap. And if you're inclined to short Cracker Barrel, the closer it gets to that gap, the more interesting it becomes, because that's a good resistance point there. Precious metals are having a good day. Gold, GLD, it did not crack below this trend line. This triangle is still intact. It could still well push above this level, which would be another leg up, you know, higher, 36, 3,700, who knows. So we have not violated the pattern, and it's having a very good day. Silver, percentage-wise, having more than twice as good of a day as that. And it's getting near its own recovery high. And the miners are also kicking it. They zipped higher here, consolidated for a bit. In the past 3 days, 3 good solid greens in a row. One individual miner in particular that we look at every few weeks or so is doing well. DBD up about 2 1/3%. So it's participating in that. And our friend Palladium have had a wretched time for weeks here. But as I'd indicated, the closer we get to the gap, the more intriguing this becomes as a long setup. I don't know if we've bottomed out completely, but for the moment, we're having a good day on this. We're still vulnerable to a gap fall down to this zone here. And it's thinly traded, so that makes it kind of dicey, but it's certainly a lot more appealing than it was about a month back because that's a really good solid base beneath there for Palladium. Just some odds and ends. This is just kind of a nice object lesson here in terms of a chart's personality, because sometimes I point at things that have a tendency to sort of round off and drop or base and soar. This one is a good example of kind of a fake out. So this is Dave, and you can see here what appears to be a rounded top and another one and another one. In all 3 instances, it didn't do it. It kind of teased everybody here, but it just moves higher, consolidates and moves higher. And so what that shows us is that, for example, right now, as intriguing as that top looks, it's probably not a top at all because it's pulled this stunt in the past. One thing that did top out nicely, and it didn't have any such warning, was a stock I mentioned a few days back, Joby Aviation, JOBY, very, very hot meme stock. And it has this cute little top here and it fell. Today it's recovering some, but as you can see, pretty nasty damage here, and longer term looks very vulnerable to unwinding a lot of those gains it made over May and June, July. And I will say that some of the very little red on the screen today is retail. We saw what happened to Target. We saw what happened to Walmart. And here today, from no particular news, Costco is taking another tumble. We're down over $13 on this. This is one of the shorts, and like I said, one of the few bits of red on the screen. But yeah, retail in general is weak, even on a day like this. What else is going on? Oh, just, back in quantum land, RGTY, I had made mention of Rigetti as an intriguing setup because of its gap. It closed the gap and a little bit more, got a little above it, but as you can see, we've been fading away from that. And today's kind of an exception because it's such a strong day, but as you look at the quantum QUBT, QBTS, RGTI, IONQ, things like that. Well, let's look at IONQ. You can see that in recent days, they have been weakening like so. Now, as I say, today's an exception, it's recovering, but I think that sector is proved it's a little dicey because of a very speculative technology. And in IPO land, Figma, which was a celebrated IPO a few weeks ago, down about half from its peak. Again, today we're having a bounce, but so is everything else. And then the Unity Group, UNIT, same deal. We had tumbled in this from around 8.35 down to 5 and change. Recovering some here, but it's just a very dicey market for IPOs. These are not value-priced instruments these days. But as we just got a few moments left just to wrap things up. So as I said, the biggest risk right now, I think, is the fact that the Dow has joined the party. It was up about 1,000 points. We've got an inverted head and shoulders. This could just be a continuation pattern higher. And the data, such as it is, like the CPE next week, it kind of doesn't matter much anymore. People will not be on the edge of their seats because Powell's already affirmed that, yeah, we're changing policy. And in the midst of all this, of course, volatility is screaming out stage left. We might be sub-teens if this keeps up, but we're at a 14 handle now, so really deep drop in fear. Okay, that's it. And no more traveling. I'll be here solid. And thanks for your patience on that. But I'll see you on Monday. Have a good weekend. Bye-bye.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
If you missed the live show, here's our cherry on top weekly recap. I'm sitting at my desk, so I wear my AirPods in most of the time. And I guess he was bellowing at me, and I didn't hear him.
I wouldn't call it bellowing.
Gus said that you were bellowing at me. So I'm sitting at my desk. I get a text message from Tom, and all it says is, "Where is this chair from?" So he was yelling my name across the office. I didn't hear him. He sends me a text message, and I write back, "Bitch, this ain't Chat GPT." And so Bat, I proceed to use technology to find it for him. And so then he complains to me about what the price is. As if I had set the price, and he was like, "Well, how much did I pay for it originally?" As if I would know.
But a helicopter, not my thing. I'll take another means of transportation.
Okay, all right. I mean, I don't want to take a helicopter too, but an electric helicopter with...
That's better?
I think so. I like the 4 little things as a
4 things.
One big...
The 4 little things. Oh my God, you're so cute, Sosnoff. I'm serious.
Wait, did you get the twirl?
We're going to the opening night now?
We are, 50-yard line.
Oh, you guys are going to another party together. Oh, am I just driving you there?
If you could, that'd be nice.
Be nice? Be nice?
The best part...
You need to be picked up too?
I hope you're not mad, but I was hoping after work that day you could drop us off.
Of course.
Because the reason we need to get there early is because we got to start the tailgating on the balcony early because we're going on the field, most likely before the game.
You're going on the field, most likely before the game.
Might have an invite.
We might have an invite with somebody special.
I'm working at it.
You guys are special, indeed. You guys are really special.
It's so annoying.
Oof. You guys are going to hold hands tomorrow before we start the show.
We're going to take a quick 90-second break and come back. We got more Tasty Live after
We're already
this.
out.
No, you're not.
Oh, we're not?
God, you're really good at this. You're really good at this.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
We're back. Tom and Tony are out. Ilya and I are in. We're here for the last call. Final 25 minutes of the trading day here to go, not just for today, but for this week as we wrap up Reversal Friday here, Ilya. Stocks trading higher still, although coming back in from when the last time we were on air about 90 minutes ago. S&P still up 1.45%, 6481. Your NASDAQ is up 1.49%, 23,566. Dow 1.9% higher. Russell still 3.8% higher. Going around the horn real quick, as Tom and Tony might do, taking a look at bonds. They're still trading up, although a little bit off the highs. Same goes for your notes. Gold and silver retaining gains, although like everything else, a little bit off the highs here following today's move to the upside. Crude oil is pressing session highs or so. It's been a really minor day. Natural gas still down nearly 4%, and the dollar still getting smacked around. So Ilya, what have we learned in the intermittent 90 minutes since you and I were last on air about a market that has very for such a move today, given the fact that it is like a holiday week, effectively. Only 1.14 million contracts traded here in the S. Light volumes.
Yeah. Yeah. I mean, what is that? What is that Lenin quote? There are decades where nothing happens, and there are weeks where decades happen.
Sure.
This was a day. This was a day that happened in 10 minutes, maybe an hour tops. We get the Powell speech. The Powell speech tells everybody, settle down. The September rate cut has the underpinnings that everybody wanted to hear. We get no extra clarity. The more over the past 90 minutes that I've been reading over his language on employment, it's actually not nearly as dovish as I even first thought as I was reading it. It's actually kind of taking away the Fed's pro-labor at the expense of inflation bias over the preceding 5 years, and essentially just makes the Fed more flexible. So I don't think we've learned anything new here since we last spoke, and really since that spike has jumped, but that the Fed did the bare minimum with this Powell speech, and that we are off the fear that they would surprise everyone with a hawkish rug pull is the extent of what we see today, which is how the S&P and the NASDAQ are not breaking their tops, how the dollar isn't breaking the bounds of its bottoming, how gold is still inside its range. Silver is perhaps, as it's been for a few days now, the only place where doubts don't linger, which is an interesting thing on a light volume day like today. I suppose Ether also to the chart on your screen here, but then again, low liquidity instruments on low volume days, they're kind of a crapshoot anyway.
Well, let's just go through the sector breakdown here of what's worked well today. It's been the home builders, things that are rate sensitive are working quite well in this market. ITB is sitting up by 5.3%. Even oil services getting a 5.18% bump. A lot of those companies with debt burdens, a little bit better position now here if we're going to get a cut in September. But then you go down the line and you have your home builders, you have your banks, which are holding up. The regional banks up 4.7% right now. Even the broader banking ETF KBE up 4.49. Otherwise, metals, mining, we could just keep going down the list of telecom, which while thinly traded here, just taking a look, XTL is going to be closing at a new all-time high here today, if that's to indicate what kind of risk behavior we're seeing play out. Discretionary is up here at a fresh closing high since early February. XRT, the retail ETF, likewise, will be a closing high for this year. A lot of these tariff-sensitive names don't seem to be bothered whatsoever. What I think is also encouraging here on the other end, though, we take a look at the underperformers in the session. It's utilities, it's staples, right? We're talking about even IBB Biotech, which had been a leader, which I like healthcare, more of a defensive name. But sector-wise, this is a pretty good-looking map so far. You can't dislike whenever the banks are at 4%.
Nothing glaring, no.
If the folks whose job it is to turn money into more money are trading higher, that has to be good news for the broader economy. They're probably going to loan more things out, Ilya. So why aren't you so ginned up now? It feels like you got off the bear train a few days ago, and now you see this action today, and you go not so fast. What makes you say that here?
Yeah, I mean, I started to get back on the bear train in the wake of CPI when that CPI generated an upside break in the indexes that then broke down. So if you look at the S&P here, it's really a perfect example. You cleared the high in the wake of CPI, and then for the subsequent 5 days, you basically did nothing but go sideways and down. And then at the start of this week, you slipped back through that high. And that's when I loaded back up on shorts. I didn't touch the Russell this time because it didn't do this. It didn't fail this way. But when you look at what happened in S&P and in NASDAQ, and in fact, my NASDAQ position actually is still trading with positive P&L after today's fireworks, because they didn't come back and retest those bounds. So the sort of essence of my bet here is that in the wake of CPI and the top that formed immediately thereafter, we have a high that the market doesn't want to reclaim here, at least for now. And so for me, that's the line in the sand. So we're not there on the S&P. We're even further away on the NASDAQ. Okay, let's see what happens here now. Because to my mind, it makes a lot of sense that the dollar didn't cross any Rubicons today, and neither did stocks, because what the Fed chair's speech did was alleviate concern about a hawkish surprise, only just, but nothing else. We still have what is something I'm treating as a glaring buy the rumor, sell the fact risk at this point, with the September FOMC meeting, the update of the SCP. The Fed chair, in his speech today, basically scrapped any kind of sense of pre-commitment in the previous monetary policy framework to allow inflation to average after periods of very low inflation, to let it run a little hot, to skew in favor of the labor market, to give a nod to operating near the zero lower bound on rates. All of those kinds of artifacts left from the pre-COVID ultra low inflation era, the sort of management of COVID and the sort of erring on the side of caution in favor of growth at the expense of inflation, all of that architecture was swept away by what Chair Powell announced today, and we got left with basically, we're flexible, we're nimble, and we're just going to do what the data tells us as it comes. That's the thrust of this announcement. The September cut got down to maybe a 70% chance going into this as the markets kind of got fuzzy around the event risk. It's back to essentially a foregone conclusion. Though at 70%, it's a foregone conclusion anyway. So when you look at what's actually happened here, it looks more like relief than it does trend development.
Well, if there's relief, it's widespread in areas of this market. Looking at the high options volume page, you're going to see some meme stocks up here again. Open Door Technologies is back above $5 a share. This has been a wild ride. If people aren't following Eric Jackson on Twitter, they should, because he's currently spending time outside of Drake's house, asking Drake to buy shares of Open to help drive the meme rally. It's I've never seen anything quite like it.
I am totally asleep on this story. You're going to have to catch me up later, but
one of the guys who, so this guy,
maybe
Eric
the place
Jackson
to be camped out is outside Kendrick Lamar's house. Might be better money to be had there.
You know, that'd be funny, right? Like Drake gets involved in Open Door and then Kendrick Lamar comes out and starts shorting the stock.
Yeah.
That's exactly what this world needs.
Oh, man. Please. Please. Architects of the universe, make this happen.
There are a bunch of these smaller companies that are having these big performances today that are all kind of memey. Even Zoom is up 12.5%. Apparently that's good news. Bitmine is up 11.7%. Enphase Energy, talk about relief. Why on earth would a company that's related to renewables be doing well in this environment? Environment's about to get a lot more rough given the legislation we saw. But okay, so that's Rocket, by the way. Rocket companies. Remember this from a few weeks ago, Ilya?
Yes,
Talking
yes.
about now up to $19.29. That's really the defining feature of today. But there's still a lot of good performance on the board for some of the regular names that you'd like to see, like your Tesla, like your Nvidia. Just thinking about the individual stocks here for a quick second, a lot of the volatility has fallen out of some of these big names.
Mm-hmm.
Do you think if you're going to trade the market on the bull side, would you rather take an advantage of it through an individual equity that maybe gives you a 20 IVR than the index and use the cheap volatility profiles of the indexes. VIX is going to close at its lowest level since February here. 1446 last time we checked, and the low close in the last several months is 1449. We're at 1438. Is that how you do this? If you want to be bearish on the index, try to play bullish short term on the stocks?
I think you have to be really careful with choosing individual names here because it still feels like a very macro market. We learned very clearly, by the way, in case you're one of these people that go, oh, the macro doesn't matter. Really? Have you been watching this today? This is, the Fed doesn't matter. Okay, right. Don't look here. Don't let facts get in the way of a good story. So clearly, the market is incredibly sensitive to monetary policy. Clearly, going into this, it was no accident that CPI gave us a bump and then the market just stopped and ignored every other piece of news until this. So when we consider sort of where we are, we I think want to be really careful saying we can find individual names that are going to buck the mold here, because this is one of those situations where correlations go to 1. And so I think you have to be really, really cautious. It'll be a few days yet before this dust settles. It's not lost on me that the whole thing here has happened in about 10, 20 minutes for the most part. The dust settled maybe over the course of an hour, and then we've gone absolutely nowhere. Now, part of that is the low volume. Part of that is that it's Friday. But we've seen moves of conviction on Fridays too. This is very curious that the market stopped short of taking out any kind of a trend-defining barrier on stocks, on the dollar, on gold, on bonds, across the board. So I think you have to be really careful with how this settles down and where ultimately the path of least resistance comes next week. I don't think there is any hurry to make a call or make a trade or to decide what this definitively means today.
The market is holding up here into the close. We're getting a little bit of a bounce back. So VIX bottoming out now down below 1436 here, Ilya. So weakening a bit more down towards the session lows. Same thing you could see here in volatility futures over in VXU25. We're bounding out right at the daily lows there as well. Does it surprise you to a certain extent? What would Tom say here is what I think. You have a market today.
If vol is mean reverting, right? What would Tom say?
I think if you look at the market today, the market got a little bit of a rally. People were leaning short going into the Fed meeting, given the action all week. Folks who were expecting the market to bottom out on Friday didn't get what they wanted. So you're getting capitulation. You're getting those folks who 0 DTE, maybe even expiring, we'll call it 3 DTE Monday or 4 Tuesday, who might be looking at this and just saying, I don't want to stand in the way of this. It's going to be a holiday. It was a really thin market here. And we're getting exactly what what traders want in terms of the tone and temper from Powell regarding a September cut. I'm going to just close my position here. And then you have to deal with Asia on Sunday as well. But
you do.
That got me thinking about the Asian trading hours. Non-farm payrolls back at the start of the month, right? While that was a big down day in the US, you never saw the follow through in Asian hours, and ultimately that helped pave the path. Oh, no meaningful overreaction. Safe to start buying again. Foreigners clearly don't care.
Right.
Could that be one of the tells this week if we go to Sunday night and we don't see enthusiasm out of the gate for the S&P? If Europe and Asia can't rally, that could put you on more cautious footing for Monday morning here in the US?
I think so. I think you have to be very careful here because, as we've talked about, there's been increasing shorts buildup in the index futures. Now, I've made the argument that although it's not technically hedging in the sense that it isn't hedging long positions in the underlying indexes. It is hedging in the sense that people's underlying positions are in cash equities, or stocks wouldn't be at these highs. Obviously, everybody is massively long. And obviously, where they are massively long most in the most pronounced ways in tech, just because all the market cap's there. And it's been outperforming. So what it looks like more than anything is that sort of the professional space in markets is incredibly long cash equities. And they're increasingly worried about valuations here. And that's why they're building hedges in the futures indexes, being short, sort of covering themselves that way. It's as classic of a hedge as you could possibly
So the hedge is busted here?
Maybe. And so there's an interesting set of circumstances here now, right? The markets are worried clearly on the professional investor side that maybe we're at some sort of overheating spot, or they wouldn't be building up these hedges. Vol is very, very cheap, as we've just talked about, and does have this mean reverting quality. So it'll be really interesting to see, even from the US side, what happens in Asia and what happens in Europe, because those futures traders that have those hedges, they'll be able to participate. Futures markets open overnight. So you're going to be able to see what people are doing. Not only that, the people doing it are going to be able to see what Asia and Europe think and are going to be able to react before the Wall Street cash open. So there should be a lot of eyeballs on this. And I encourage everybody to join us for first call on Sunday evening. We're going to be looking at the open here. It should be a really interesting open, because we should get a sense whether the market is actually buying into anything like a trend signal here, or whether it's just, Jack Bauer has diffused the bomb, but there's still 10 more episodes left in the season.
That would drive me crazy, because there's no way Jack Bauer is making it across Los Angeles traffic and some of the times they did. But Russell's going out with a bang here, 2373, getting ready to close up at session highs right now, 4.05% to the upside. Dow Jones up 1.92%. Both the S&P and NASDAQ of around 1.48%. Ilya, before we go any further, let's just get this up on the screen. I know that we have some live events coming up over the next 2 weeks that folks can head over to tastylive.com/events to talk about, or even look at, register for. I know that on September 5th, you're going to be out in that neck of the woods. There's a show at Work by 11.
The show comes, the show comes to my favorite place in the world, San Francisco, and I will be there.
You'll be there September 19th. 2 weeks later, they'll be in New York, where I'll be. And of course, there are many other events over the next 2 weeks. Mike's whiteboard tour stops next in Dallas, Texas on October 12th. So be sure to check that out as well. Those are great events. And I'm excited to see the people in New York. I know you're excited to see everyone in San Francisco.
Oh, for sure. For sure.
Again, tastylive.com/events. That's how you register. At Work by 11, literally. I don't know if I'll be able to get back to work by 11.
That's what I'm saying. I think you might need some help on this on Futures Power Hour that Friday. I'm not sure I'll make it back in time.
There won't be an exception to that rule. Okay, so 64.85. We're getting ready to close out the week. Next week we have a little bit more risk on the table, because earnings here the past few days were more about the U.S. consumer, but there's still one left that everyone pays attention to, and of course. That's Nvidia, and that's on Wednesday. Nvidia next week heading in at basically all-time highs, just a few percentage points removed. Technically, the all-time high is 184.48 or 177.90. Share prices have doubled from the lows that we were at in April. It's been quite the run. Why did we pull back this week, Ilya? Just some briefing on the news flow that bothered the markets here. Sam Altman over at OpenAI warned that we could be in a bubble. Although the Machiavellian in me says that if I was leading the biggest company, I would tell everyone that it's a bubble and there's no reason to throw any more money into it.
Oh yes,
But
I'd want my moat nice and deep.
Yeah, stop chipping away at my moat.
Yeah,
Okay,
leave
it's a
my
bubble.
moat alone.
Yeah, okay. The other side, though, MIT released a study showing that 95% of agentic AI for enterprise purposes, basically useless, not providing any value whatsoever. And then we have Meta going through an AI hiring freeze, which they hired someone yesterday, a big splash for AI. So, I mean, maybe it's not true, but NVIDIA earnings.
I think they poached somebody from Microsoft or something like this.
I saw that. I saw also that NVIDIA is stopping its H20 production because the Chinese government is discouraging Chinese firms from using NVIDIA GPUs to build their
And DeepSeek
AI.
couldn't train the updated model with Huawei chips. They had to ice the update.
They had to ice the update. You know what? I just saw this great feedback from Griffin. Yeah, we're going to do this for the events in the past. Excellent. Okay. I digress. But so you have this China situation going on. Goes to show, Ilya, right? Like we want the world building its AI infrastructure on American technology.
Chinese technology is not caught up.
No, but also the American technology is depreciating very rapidly. And, we don't have enough electricity in the US to power all the data centers we need. It's a mess. But 19.8
Are we, do you think, at the pets.com's stage here?
No way.
Have we reached pets.com?
No. The clearest way to look at that would be stock market PE ratios going back to the .com era. And in the .com era,
book value we're already in excess.
Well, book value is one thing, but I'm thinking about like this in the .com era. It didn't matter if it was large caps, small caps, get out of here, pop up. Large caps, mid caps, or small caps. Everything was trading at high valuations.
Yeah.
Right now, it's really a Mag 7 name. The large caps, of course, have the Mag 7 in them. But when you look at mid caps and small caps, valuations are actually very, very reasonable. So a bubble to me is when everything inflates.
Okay.
And when you strip out the Mag 7, a lot of this market is not overvalued. That's it. I mean, that's how I would argue against the valuation perspective here.
Sure.
NVIDIA,
I mean, it's not an unreasonable perspective. I mean, you could go quibble with, well, of course, because COVID, and the only thing that worked during COVID was tech, because everybody was at home and tech doesn't care. So makes sense. You're entering into bubble territory from a different footing. It's not just the tech breakthrough, it's also the lead-in from COVID into that. And so you're going from strength to strength for different reasons. But it's not an unreasonable perspective to say that really it's just this one part of the market that's out on a ledge. If it does go over the ledge, though, it will bring everything with it.
I'm taking a look at the 7 DTE here on the platform right now. If you go out to the 1 standard deviation move, looking for the short iron condor through next Friday, which is 7 DTE, so it captures that the earnings report. You're looking at 5 points wide on either end, 62% pop, a little bit more than 2 to 1 risk to reward ratio. You've mentioned in the past how NVIDIA has had this streak where the bar to beat and impress the market is getting more and more difficult. Do you find that to be the occasion this time around? Should traders be playing for a bit of an inside move?
I think increasingly, yes, NVIDIA has kind of moved away from the headier earnings surprises. But it did manage a little bit more last go around. I mean, we had a 9.8, 9.9% surprise on EPS for the first quarter. The revenue numbers are surprising by a smaller and smaller margin. We only beat by 1.5%, 1.6 in the last report. And that's obviously miles away from where we were in 2023. In 2024, on the EPS side, things were already getting soggy. In 2023, we were beating by 18%, 30%. So it seems like the market has kind of learned how to value this thing, and now we're in the realm of normal. So single digits, sometimes high single digits, like 9 or 8% beats, but the kind of double-digit, eye-watering, holy moly earnings reports from Nvidia, that seems to be a thing of the past.
Ilya, we rang the bell here, 1.5% higher on ES on a NASDAQ. The Russell closes up 3.88%. A banner day for Ethereum up 14.6. Silver likewise settles up more than 2. Even bonds trade higher. Powell sticks the landing for now. We're done here, though, because that's the last call for the market. You and I will be back on Sunday night, 5:55 Eastern,
bookending this thing.
Central.
I love it.
Yeah, for our first call, Nick Batista will be joining us, so be sure to come back here. Of course, for everyone on the show, especially our producers, thanks for tuning in this week. Thanks to the producers for their hard work. We'll see everyone on Sunday for first call. Hope you have a nice weekend.